Good morning, September 21st. We're going to be streaming stocks, options, futures trading today. You guys had a good evening and a good morning so far. Market just opened a few minutes ago. Yesterday we had FOMC, which was bearish, big sell-off from that, and big gap down today so far. SPY's opening up just about 0.75% down, almost a percent down pre-market. Sub up, like up, comment down. Happy Money sticks around. You can follow us on Twitter at HappyMoneyYT, and we have a Discord server. Link for both of those are in the description. But a Discord link in chat as well. Let me know you guys plays. What are you playing? What are you looking at? Stuff might be starting to get cheap. Really, just the really expensive stuff is going to become less expensive. I think a lot of stuff already is actually relatively cheap. The SPY is just reflecting those small portion of the stock market that is just very expensive. So market coming down is more or less reflection of the very expensive becoming slightly less expensive. Pretty weak open here so far. Got a gap up on FedEx. I think they had earnings. Considering some calls at low of the day, I think we will get might just be a choppy consolidation type day. Or we could get some sort of bounce potentially. If it just consolidates, that's pretty bearish. But we left a pretty big gap up there too. Today's Thursday. I think we're definitely going to be testing this 431.50 in the not too distant future. GME is just getting dumped on right now, down 3.2%, below 17 bucks. AMC is up 1%. KBNT is up. I think, was it FedEx had, or no, it was UPS had earnings, wasn't it? FedEx. Yeah, it was FedEx. GME back to that 1690 support. Next up, 1618 and then 1541. Got Mullins up. Jimmy down 3.5. Mullen is rallying up 7. Does this thing have a sustained run at all? Yeah, that's right. It started to look good. A nice pump. Look at that bounce on our line there. 53.50. Perfect. Perfect. About GNS, right above our line, right about that dollar area. Holding for now. SNMP is up 11. Good morning, Guts. How you doing, buddy? There's so much empty. Crazy to close. Got a put, nice. Yeah, that was a really weak close on SPY. Nice. You should sell those puts yet? You got, how many did you get? Scale out. Morning, Yen Yang. Luck to you too, guys. Good morning, Tasty. Keep wrapping this buy with AI. Donaro! Donaro. AI is the future. It will forever save our stock market from infinite money printing. Oh wait, that saved the stock market. Hope you're being good, man. Bear trap. Depends on your time frame. I don't think so. We could come down and definitely have a bounce. But yeah, depends on your time frame. GME down almost 5%. Looky. Even a gap up there also. Nice, well done, Guts. Well done. Very chill open here on SPY. Given it's down quite a bit. Didn't quite get low of the day, but might be the entry for calls. Be patient. Could get one more little low. Right at the bottom of the Bollinger Band on the daily. Can come down like it did here. You start seeing that whatever it's called, the mid line coming down though too. Or to push that Bollinger down. $16.65, yeah, Jamie broke through that support pretty easily. 16.18's next. What? Got some calls. Now remember, buying options in the very beginning, unless it just goes in your direction, paying quite a premium. So selling them pretty quickly makes sense. Unless you're getting the direction right away and you're willing to hold through some IV crush and premium crush. Wasn't you, Hughes. Someone else I was talking about that with. They get options they plan to hold for most of the day, seemingly. But they buy them the first like hour or half hour. However, that said, today we do bounce here. It should be pretty good bounce. So if I do get some calls, I'll probably be holding them for quite a while. I'll scale out in the morning too, some, but I'll try and hold them as the trend these fit. Here where no, I think calls is a good play, most likely. Unless it just wants to reach to this next support. I don't think we'll make that 431 today. That would be pretty bad. We could though. We could start seeing some big red candles back here. AMC, pretty much flat. Whoa, barbecue down 25%. Is that from that AK? Not at 12 cents. If, I mean, not like this price even matters, but like it actually doesn't. I guess if you're going to sell them right now on the expert market, I guess it does a bit, but there's still have a huge spread and everything going on, which is pretty much what's causing that. 12 cents is quite the low though. We might be hitting that 4 cents again. Okay, I got some calls there. I like it. No, I was gonna say with barbecue, I don't have anything of it right now. But if it does get uplisted or back to OTC or back to a market where you can buy it again, I probably will. Because I think if it does get that, it'll probably create a lot of buying pressure. I think it'll drip from that alone, just being able to buy it again. Wow, with the fake out. This just gives me an opportunity to buy more. Yeah, I heard that about the AK. Yeah, 930. Shares are canceled. It doesn't change anything for why people own it. Like, that doesn't change the thesis. It's fine if your shares are canceled because you're getting equity in a new stock, right? So, and as Dink pointed out, canceled, not deleted, which maybe it's not significant, but canceled could be referring to it being transferred to another stock. So I'm not anticipating it coming back to OTC before that day. I think those that have bought it are locked in basically, and if you wanted it, you need to have it. But if it does, I will be picking some up. Which it kind of, I mean, it's kind of happened how I expected. I expected someday, this is before I even knew about expert market or any of that. I expected someday you're going to be locked in and it's going to, I guess you're not locked in because you can sell, but yeah. But that day happened once it moved to expert and you couldn't buy anymore. So it doesn't really matter where it goes up or down. You're holding. There's no liquidity either, so trying to even sell is difficult, like to get any kind of price. We have some more GME if it break to the downside of low 16. Yeah, GME, let's see, 1665 was the low. 1618 on there. Oh, that was an extended hours. Oh no, right here, yeah. Bounced our GME back up to VWAP. Let's see, AMC, green to red. GNS doing. Yeah, still right around that level. Down 5%. Yeah, there were some transactions. Let's see. A couple transactions there at 12 cents. A little hasty on my calls, a little hasty. Or dumpy dump. Paramount's up 2.5. Rig's up 2. Rig's actually had a pretty nice support. See if that'll hold. Dish doing. Covering. Only down 1 now. RP to AFCO. SPY coming down a little more there. What's going on with Marvel? Marvel. Ooh, new little fleshy flush on SPY. Little. New low there. That's where I was waiting to get my calls. Well. go switching maybe to Marvel. Marvel? Gosh, dude. Two stocks I have not followed. Don, I don't know if you can just come back in here and start chatting like no big deal. I don't know if you can just do that. I'm pretty sure the rules say you can't, by the way. Okay, Gap up 3%. KBNT ever? That thing kept selling off. Good thing I closed it. Myself. Bye, Don. Netflix is up 1. That should be a good time for you and me to consider Newegg. Market cap's 384 million. I knew low there, down almost a full percent. I think it'll continue down below 431. Yeah, maybe. I'm assuming it will, but I think we'll get a bounce before then and probably a bounce on 431. You know what I mean? But I could be wrong. We could flush down there today, I suppose. Light these calls on fire. I'm gonna average into them and see if I can get a bit of an exit. Let's see. I don't. Oh, we had. That's right. We had initial jobless claims this morning. That was part of that pre-market sell-off. Forgot there was news at 8:30. But that didn't actually cause anything. We had enough news yesterday to satisfy this move. Fed manufacturing 8:30. U.S. current account deficit at 8:30. 10, we have U.S. leading economic indicators and existing home sales. So that's coming out in 2 minutes. Tomorrow we have services PMI, manufacturing PMI, and some Fed speakers. You're low there on SPY. Marathon time. Thanks, Honorable. Good luck to you too, Mr. Marathon Runner. if this data moves the market at all. Buys down 1% now. Picking up one more call there. Need to average down some. Even if just to get out. Less hurt on a bounce. 7% on Joan. Little bounce here on GME, back above VWAP. Down 3 1/4. We got eBet up 4. Oh, I want to look at Cosmo. Actually, eBet looks pretty nice too. Might pick up a little Cosmo Kramer today. Oh. Is it Fidelity or my browser that's low? The heck? I gotta get a Fidelity. I really don't like it. I just slowly melting down this morning. That RSI, holy smokes. At 11 on the 5-minute. Looks like it's been low volume this morning. Not sure. Little green candle there on SPY. AMC is down 1%. There you go, SPY. What do you mean? What will happen to him? He'll be fine. A stable job. The people that don't have any money and have shares of a bankrupt company. Expecting it to save their life. Yeah, PP's gonna get death threats for sure. I'm concerned with PP for sure if it doesn't work out. Little bouncer on SPY. Let's see if it's bottom reversing or just some consolidating. Right, I didn't want to average. I didn't want to make this play larger, so I didn't grab another one. I did get one somewhere here, but I would have gotten another one. I decided not to. I don't want more. Nice. The VWAP. See if it builds a little right shoulder here. It's inverse head and shoulders. Cap is up 4%. Cinemark's up 4.5. Not good if it uses that as resistance. Barbecue down 22%, 1350. Must be from or the 8K. Intel popping. Tesla doing? Wow, Tesla's down 2.5. The gap.
Queen Meghan Markle, or yeah, I don't know what the title is now. All right, thanks, Kevin Green, appreciate it. All right, let's do some trading with Scott Bauer, CEO of Prosper Trading Academy. I know Scott knows what I'm saying, right? You turn on Netflix, it's only Suits for the last 3 months here.
Yeah, but you know what? What a great show, Harvey. I mean, he's
okay,
awesome.
There we go. I knew you were on board. All right, good casting. Yes. I'll put it that way. Good casting.
Yes.
All right, so the stock seems to be reflecting a little turn towards some positivity in these negotiations. Scott, is that tradable?
It is definitely tradable, and you know what, though, Oliver? I think it's more tradable in terms of the momentum of the market than it is of the news that came out today, and I know a lot of these other you know, companies are higher, and Netflix was higher a few minutes ago. I do think, though, this is going to trade, and this sector will trade, at least in the very near term, with the momentum of the marketplace. So if this risk-off environment is
no here unsettled losses today. Yeah, it's pretty big
I think you have to take
down on
that
barbecue.
into account and not just buy into it because of this news.
12 cents.
Okay.
Too bad no one can buy this dip
Chart's
that
got
wants
some
to.
lower lows over the last month or so, but I mean, it's been an unstoppable comeback for a year. So I guess it's really a matter of kind of which trend you want to prioritize.
No doubt about it. And, you know, for me as a short-term option trader, not an investor, honestly, I don't care what happens in 6 months, 9 months, a year. I'm looking for my opportunity now for something that I can take advantage of over the next week or two.
Okay, I like it. Volatility, fairly affordable. I mean, it's not going too crazy.
No, it's not going crazy, but it is pretty elevated. It's actually the highest it's been since about July, the option volatility. So when I look at that, especially on a short-term basis, you know, like a 3-month chart, even a 6-month chart, option premium is getting a little bit expensive here. I want to take advantage of that because I think that once this news is settled into the market about the writer's strike, etc., volatility premium is going to come back down. So a way that I can do
Buy
that,
back up to VWAP.
I'm going out a couple weeks here to October 6th, so 2 weeks. And I'm selling, we've talked about this type of trade before. I'm selling an iron condor where I can collect a lot of money up front. So I'm selling the 375, 365.
Whole two says to be great in 5 to 6 years, not 5 to 6 months.
I'm selling the 405, 415 call spread on the upside. Now, with this premium, I can collect.
There's VWAP on SPY.
Maybe even a little more than that. Almost $5
Hit its inverse head and shoulders.
$10 wide spread.
If we get a break of the neckline, return to the high of the day for a little cup.
2 weeks. My break evens.
We'll close.
On here are just slightly over
Close, I don't know,
and
some of this position on retest the high of the day.
Anywhere between that range here in 2 weeks, I'm going to make money on this
Look
thing.
to reload.
Interesting. So, and I would say that with the market under pressure in discretionary stocks, in tech stuff, that your risk would be to the downside here, but you would need like a 4.5% move or something like that to the downside, a little less than 5%.
Absolutely. This was biased a little bit to the downside, especially earlier when Netflix was trying to test that 400 number. I'm not sure exactly where it is right now.
Yeah, 389.
So this is biased a little bit, gives me a little more room to the downside. The great thing with this type of trade, though, Oliver, is even if Netflix does make a blowout move or blow past my
That was awesome. Yeah, I mean, it's at 12 cents.
Completely limited. This
is
can never be worth more than $10
wow.
on either side.
Hasn't been this since basically the day after OTC.
My odds there are 1 to 1.
Looky.
I can lose 5. I'm getting a lot of premium up front for this trade, which is why I like it.
Okay. And so far it's working pretty well because Netflix is demonstrating an ability to kind of trade outside the market swings right now, and that's how you want it to hold. While I got you, Scott, what are you looking for today and tomorrow to see if the broad market's going to be able to hold its self together here while bonds just crater?
Well, yeah, I mean, the bond market really has been telling us something for a while, and I think maybe traders, retail are finally saying, you know what, they're right. The bond market is right. So if that is the case, I love taking the contrarian viewpoint on that. So if we do continue to see
me back to
yields go
17
higher, and the market
on 3%
now like all of a sudden, oh, now we have a problem, I want the other side of that. I'm going to start picking at some equities here.
Yeah.
That are getting hammered.
I got in a little early and then averaged in a little bit close to the bottom. I would have kept averaging, but I didn't want to balloon up this first trade that much. I like having small position sizing in the first hour or so, couple hours.
All right.
Not buying power for the later day move if there is one, but if we just grind up all day, then yeah, it's a great entry. I just have to hold on. But I do want to take some profits at high of the day.
Here behind me in the SPX, it is rocking here.
All right, we got some action finally. Nobody was having fun with VIX 14, right? Nobody, come on.
That's right.
Nobody wants that.
That's right.
I appreciate it, Scott. CEO of Prosper Trading Academy. When we come back, let's dive into some more earnings. Still with the consumer, but this time on the dining front. We're going to take a look at Darden, which means a little
Yeah, you got even a
restaurant
golden candle right here, huh?
discussion,
On this trend
and
up, that's
check in
crazy.
on the status of the consumer.
A
How
break
much
on
steak are
VWAP,
they
so
buying at Longhorn?
the call should be
How
good,
much
but
pasta are they eating at Olive Garden?
good to always just chop in a range and need to dump them at highs. Not expect continuations every day. Because the last couple days we've had continuations, so we're due for consolidating some chop, some theta farming to win. Nice Guts. Yeah, that was an awesome trade. I would have such a hard time buying those at low, but you did well with it. Nice big gap down. That weak the market was going to close, I guess it makes sense. Doesn't always though. Sometimes it's super weak going to close and then it just gaps up 0.5% or a quarter or just stays flat. But yeah, it worked out well. It was nice. Good to close them at open. That's almost always the best. At least some of it. Take some profits. Set some stop losses. That's what's nice about SPY options. They're so liquid. Spreads are so tight you can have stops on them. Probably like other ones that are heavily traded, AMD, Nvidia, Tesla. Probably do it with those too, but the best on SPY. Yeah, I should have done my scale in better this morning. I went a little heavy here, and then didn't even want to average in, but just got to a better price, and I thought we'd still come back up. So I picked up one more right here. If I did the scale, I could have gone in heavier down here. This would have been a nicer trade. A small move still, but it might be all we get today. We'll see. Going back down to VWAP here a little bit. I'm gonna hold them. I'm gonna hold position probably till high of day again. This could come back down and even retest this shoulder. Even holds VWAP first. Yeah. Yeah, I didn't start with SPY options, so I wasn't spoiled. I started with probably a liquid options that shouldn't have even been in. Sketchy to be in. Tell you what, my long term likes how much SPY sold off. It's crazy though that these puts are not more. They're all in the money now, and one of them still red, just from the like a month or two of theta decay. A month. Where'd I get these back here? Okay, that engulfing candle. I think I got them like here. Like 1 month of theta decay. So I plan to close maybe 20% of them on a 431 retest. But I think before January, I think we could still see this. But there is the factor of it being an election and market just staying propped through that. Doesn't have to, but still want to take some profits. Let's retest that 431, 49. Without the election, looking at this chart, I would think it would be able to fill this gap before January at least. A gap at 418. Buy below VWAP. See if we test this right shoulder. Guess I could have taken some profits off there. Guess I did actually have profits. AMC's down 2% now. I want to see this one hold. I should take in profits. Ooh. I know better than that. Especially early morning. Gotta be quick in, quick out.
Valuation wise, how
John's
does
getting loud.
this compare to, well, I guess this might be a question outside of the coverage, but I think about the delivery companies also as kind of being an implicit competitor, but also a higher price point. How do you think about valuation of a traditional restaurant business versus kind of the market for delivery and the market for, I mean, you mentioned talking about cooking at home, but how does it work in that economy where there's still a lot of people that are ordering in?
So, you know, interestingly, what we're seeing is we're seeing sort of the off-premise mix trend down, not just for, you know, Darden across the space. So
I breaking that
we had,
right shoulder,
you know, sort of historic highs,
a little bit
driven by COVID, and as people go out more, they're ordering less, you know, at home. So, you know, Olive Garden,
you see it hold somewhere right around here.
Points below in terms of the office.
Pre-market low would be the lowest
mix versus last year in this quarter. I think that trend continues.
Okay. So it seems like they're doing their job. I mean, you got single-digit, high to mid-single-digit growth for Olive Garden, for Longhorn. Maybe the fine dining struggling a little bit, but the stock's still hanging in there. What about
nice?
The,
yeah, all you need is one.
Relative performance next to the
all
group?
You need is one on a gamble.
So where does this rank? If I have to only pick a couple names here for my restaurant exposure, should Darden be one of them?
Well, Darden's at the very top in terms of the casual diners.
Yeah, that's
overall. You know, I'd rather.
What percentage is that?
QSRs right now, just given that, you know, they have the benefit of trade down if we do get into an environment where the consumer is acting a little weaker.
Don't let your brain go there.
Names like Wingstop, you know, Papa John's. You know, those are the types of names that I'd, you know, prefer over a Darden. But, you know, as far as full service restaurants go, Darden's at the top of the list.
All right, nice. Always like the breakdown. Appreciate it, Nick. Thank you very much.
Thank you.
Nick Sention, Managing Director at Wedbush Securities, covering restaurants. Darden, best in its class. Maybe other ways to play the eating market, but still a solid one, according to Nick's analysis, and still a buy rating on the stock. All right, and it's up.
I'm going to have to wait for better exit on these calls.
Can't complain about
Dang.
that. Chartmaster coming up next.
Got to hold through another drop.
Got some upgrades. And 5.9 Nutanix, and then Truist in there, made it in there. So, the two tech companies and market overall for tech, stable.
Too confident in the cup. Retesting of the high. Doesn't do that, we're just in this down channel. The problem. Changes everything. We still could make this full cup. That's the thing also. Pulling back here for some liquidity. Makes the way back up. but this isn't a good start. GME back to BWAP down 3.65. AMC down 2.5 now. I missed my entry on Cosmo. Look, it ran away from me. Now green. Kramer? Never filled me. No news per se. I think the sell-off could be partially from the 8K for the reason for this. Down even more. Wow, 34% now. This price, if you're holding barbecue this late, shouldn't really matter a whole lot because there's nothing really of value. So you're banking on something else. And if you haven't sold now, you're probably not going to sell. So the only reason why you'd like this price is so you can buy more, but you can't. So that's why I've been watching it less also. But it is interesting to see how much it's selling off here. Maybe people are selling. Supposedly, I mean, someone's selling. Someone doesn't like it. The 8K at 11 cents. The thing, yeah, you can't buy it. If it does get back into a market you can buy it on, I'll probably be picking some up because I think just the cause of those people that have been wanting to buy it and haven't been able to, if it then becomes available, I think we should see a rally just from that alone. You can buy it on Moomoo. Even if they become compliant before then, it's not like it'll be a quick process of them being uplisted. You know, so I'm not expecting it to become purchasable before next Friday. Purchasing on Moomoo, What if they're just totally being fraudulent with it? Got tokenized.
Blue line here, we've recovered a bit. Now we're back within
But
this pattern.
not even.
But we
Just
really have
numbers
to
on a
see a
screen.
breakout one way or the other, or even sideways here, because we're simply running out of room in this triangular
They're just not
shape.
hiding
It's
it.
got to move beyond one of these lines in some fashion soon here. But in the broader picture, kind of a little bit of a range-bound sideways trade here between about 28 and let's call it 31 or so from the start of this little gap.
Yeah,
that we
11
saw
cents.
Here. We did have one day where we broke above it, but we found a doji.
Now you have 200,000 shares.
Price opened and
God
closed
bless you,
near
man.
the same level, and then we retreated back down.
Hope it works out for you.
Within those levels here. One thing that I caught my eye, RSI, trending downward here. You can see RSI. You can use trend lines similar to price. It looked like we were breaking out to the upside beyond that trend line, but it's not happening now. So we've got RSI bearish. Overall trend is down. Moving averages all trending down. Price trading below all three. Things are looking like they're more headed toward the downside right now. So 28 is the support point to watch. That's our old lows from right here. And then our yearly lows, 25.56, is kind of the final line in the sand for more pain.
Okay. It's a really interesting chart because I feel like there are obviously a few things that stand out. One is the massive crash with the regional banks earlier this year, and that giving it so much downward pressure technically that even this kind of sideways movement doesn't look so impressive. That's where, if this analyst is right, and now's the time,
Got a whale
if
now.
this type of pattern resolves
better
to
be a
the
big house.
upside, what do we target? Because it seems like the idea of the pattern is that the odds are that it gets weaker because that's kind of a longer term trend. But if that doesn't happen,
AMC down
then
almost 3% now.
What do we consider as possible in the reversal?
A couple stopping points that caught my eye would potentially be first our yellow 21-day EMA. That's our shortest term trend line, or our moving average line, and that would be where you might expect to
Looking
see
more and
some
more like
consolidation.
consolidating down here on
We also have
AMC.
a confluence right here of this area between our gap and our 63-day.
Did have a bounce first though, so maybe it's bounce consolidating.
Beyond that, look right
An
here.
uptrend.
We had these highs, kind of around this level is where we topped out multiple times, near 35 or so. So around
kinda
those
what I was
highs,
thinking.
yeah, that would be the real point to watch for some kind of overall broader trend change.
All right, climbing back up.
All
It
right,
is just getting
the reason
choppy.
Why I ask is just because I know there's a lot of people who
We're due
are
for chop
trading
day.
regional banks, trading financials.
Gotta just trade maybe in
and
this
still
range.
A lot of folks that I've talked to are kind of hanging into the trade after this because they haven't really lost much and they haven't really made
200
much
shares
if
at
they
13.
basically bought after the big
Nice.
crash. So this is an example of one of those charts where it's pretty interesting. I mean, it looks like there is a move coming sooner than later for the stock. This analyst thinks it's going to be an up move, but market will decide, of course. But definitely want to keep on our
On
radar.
5.
All right, let's
Build
talk
the
some
cup.
tech companies. Nutanix
Do the thing.
and 5.9. Let's start with Nutanix. Bank of America upgrading stock to a buy. Both of these are buy ratings here in the tech group.
Yep, comes from a neutral. And this analyst starts off just saying that the fundamentals are going to improve for Nutanix over the next few years.
Okay.
That's a very good positive sign. And we have broadly seen more companies devote more money to cloud spending,
Yes.
to cloud computing. And that sets a really good backdrop for this company, and coincidentally, and for 5.9 as well. The analyst mentions that in the note as well. And so this analyst also sees renewals driving a higher amount of annual contract value
Annual.
billings growth following
Annual.
the fiscal year 2024. And this new GPT in a box offering, also the Cisco partnership and potential share gains
See, SPY.
are upside levers that the company
I don't want to
can
get out of
pull
some of these
to
though.
bring
Don't want to be
more
holding through chop.
upside to it.
Okay.
The Bank of America says the new catalyst, the next catalyst for the stock is going to be the company's
If you can break
analyst
this
day
range,
happening next Tuesday, September 26th.
then we should be able to
Keep our
complete that
ears to
cup.
the ground for what'll happen there.
Yeah, the,
But again, I bought these
Cisco
contracts
partnership
early,
kinda
so
seems like a
I get
case of-
theta decayed if I
and,
hold them.
From Cisco's
noon
perspective,
and stuff.
if you can't beat them, join
Join
them.
'em.
Yeah, exactly.
We're
'cause
not
certainly
making a move, we're
could
just
be
chopping.
competitors and are in some ways. So that's part of the bull case here from the analyst, I think, is noteworthy. The shares have done really well too, especially since earnings, Rick. So I guess the analyst day next up to watch. But right now we're holding these elevated levels.
Yeah, and earnings was the clear catalyst in this one. We were trading with
Closing one
kind of
there.
a rising wedge type shape here between these two blue dashed lines here. We did have a bit of a breakout, but also a big collapse right after that here. Earnings brought us up 12% in one day. It brought us above resoundingly above those old yearly highs, just above 33. And I always think it's interesting when you watch these levels here, like that was our best close, 33.32. Look where we hit our lows after we had that gap up. Exactly almost the same level right there. So this is how old resistance can become new support. This is a common thing that happens in trading. Not going to hold up every time, but it's always something to be aware of and keep an eye on these standout levels here. Now we've got a steeper uptrend line here. We can see
Ooh, 10 cents on barbecue. Wow, down 42%.
We're trading above all three of our exponential moving averages. All three of the moving averages are trending upward.
You haven't,
the trend is
if you haven't yet, no need to look at your portfolio if you're holding barbecue.
RSI, we crossed below that
You're well past that.
threshold
So
here.
here was the last support I had before.
That area above the 70 level after earnings, but
Guess 74 cents, but
we're still
or 7
side of the
cents
RSI here, but we've faded a little bit. So that's something to watch.
Right around here,
on
the inverse
that 50
shoulder.
midline, that would be a
But really, just the
here.
OTC low will be the
However, we're
next.
holding above our 21-day EMA.
Probably
We
more
found
major
some
one.
support at those old highs and our 21-day EMA between about 33 to 34 or so.
If they turn the buyback, if they uplist it though, it's going to be a pretty good trade, I bet.
This
This thing's going to go wild.
Some easy goalposts to watch here. The old best closed near 36.47, and the intraday highs 36.
Nice, but looks like it might be trying to break this range.
37's the mark to beat.
I had to close one at the top of the
up
range
around
just in
there.
case.
To the downside, the level I mentioned already, this green dashed line. Then we've got our 63-day EMA if things really start to fall apart near 31.40.
Okay. So holding on right now to 33 bucks and 37, kind of the ceiling maybe in the short term, given the downside in the last week or so. But a very unique chart so far, a very bullish chart that's held, and the fact that it
What is that?
looks
I closed
so unique
33 and a third percent.
means that maybe it can kind of get away from some of the broad market swings right now, and it is indeed doing that today, up 1%. Last one here, 5.9. What do we got, Renita?
Deutsche Bank upgraded this stock to a buy from a hold and boosted the price target to $80. That's around a 20% move to the upside from where it's been trading today. Similar story as the last one, where we've seen a more favorable backdrop for cloud spend, and this analyst feels like the company's momentum from recent business strength could actually re-accelerate the revenue.
Barbecue's most exciting thing today.
And that's not all. The analyst says that Five9's current valuation is roughly half a year ago levels.
Hour and 10 minutes into the day. Thanks, guys, for your support.
16% over the past
Your thumbs
12
up.
months. It's trading at
Got 11 on the board.
midway between its yearly intraday high.
Did put
and
some
yearly intraday low.
day trading
This
and
analyst feels like
0-day
it's gonna be
options
trying
in
to
the
perform
title and stuff.
There we go.
Those are
We
good
got a
idea,
little
guys.
chart master working there. That's exactly what I was thinking. It's kind of stuck in the middle.
Yeah.
What do you think, Greg?
So that's basically all I'm doing at this point.
We've got a modest uptrend, an upward channel here between these two white dashed lines here, parallel lines going across the lows and the highs. And you can see, though, in the shorter term, we've fallen off pretty significantly from near where we hit those highs around 89. Kind of a falling wedge type shape here, two trend lines converging toward each other. To further muddy the waters, though, we've got a bit of an upside breakout happening today from this point. That's failing. So kind of we're right back on the line here. Overall, the trend looks to be down in the shorter term. We're trading below all three moving averages. All three are trending downward here. So probably the price action more biased toward the downside. A little bit of further complication is that the RSI is trending up. We're seeing bullish divergence here. So long-term trend is up, short-term trend is down. RSI is bearish, but bullish divergence here.
Yeah, because you're kind of rejecting that range or that resistance.
If we had a bit of a, not really a consensus
Could
about
close
which way
more.
things are going in this one. However, since the
Might close one more.
prevailing short-term trend is to the downside, let's look at
Yeah, I'm gonna
support
close one more.
first. This area right here, this green dashed line near 62, we had a small gap. That was the opening and the low of that candle here. So that could be a line in the sand to watch. To the upside, take your pick. From about 68 to 72, we've got our 21-day EMA, our volume profile point of control, this thick red line, that's the area of heaviest trading, and our 63-day EMA to contend with.
Brian,
before we kind
add
of,
back in
would make our way back
better
above
price.
this gap point.
Sounds like there's a lot of reasons to think that maybe this thing could kind of hang out sort of in the middle of this range like it has been for some time. And ultimately, the volume math adds up, right? With the biggest node being right in the middle of the range, certainly makes sense. But bulls still can argue that it's uptrending, I guess, long term. So not quite as good as the Nutanix chart, but not bad either. Still some bullish notes in tech, definitely helping a couple companies outperform this morning. Nutanix and F59. Thanks, Rena. And Richard,
12 cents on
when we come
barbecue.
back, case you missed it, Rupert Murdoch is reducing his
There is
role
actually some
at
volume on it
Fox.
this morning, I
Still gonna
think.
be involved. Jenny Horn's going to take us
Selling
through
volume.
the rebound in the shares, finding some positivity in this.
GME down 3%. Above VWAP. Buy below VWAP. Down 0.88%. Just figuring out which way it wants to go. So far, just some consolidation and chop down here. Teladoc down 3%. It's just crushed. Excuse me. Base down 1%. Still kind of hanging on, holding that trend line. We've got AMC at $8, down 2. GME down 2.8. Buy, come down a little more.
surprised, interested to hear your guys' take on, why we've rebounded a little bit here today. We're only seeing the S&P down, 1%, and certainly not a great strength by any stretch, but with the jobless claims numbers being, I think it was an 8-month low and almost at 200,000 even, just it seems like strength in the job market, that persistent inflation, we're still getting this data that's sort of reaffirming the position. I'm a bit interested to see the stability here, and I'm a little nervous that we could see, greater selling in the afternoon. If you correlate kind of the bond market and the stock market, when rates were this high back in October, we were 20% lower basically in S&P terms. So it feels like something's got to give here, even though the soft landing is kind of the base case now, whereas I think back then it was recessionary. Big divergence between stocks and bonds.
Oh, yeah. The deep recession fear, which has been kind of nullified by the good data over the last 5 months, especially since the regional bank blow up, that there was no systemic fallout. Credit spreads have told us not to worry, basically. So now it seems like a test, Chris, of the market's tolerance for better than expected economic outcomes once again. I mean, we've been doing this dance for a couple years now, and this morning's jobless claims reminded us that the employment situation's solid. I mean, the Fed feels like, I guess they should be comfortable if they need to fight inflation. Stocks, though, don't love it, I suppose.
Yeah, I think the Fed's being more cautious than comfortable right now, especially with the way the wages are moving around here with UAW.
True, fair
We've
enough.
talked about the writer strike going on. We're coming into the holiday season. There's going to be a bunch of hiring to try to push some of the sales that the stores had put out in the last quarter. They were really pushing sales on some of the durable good items. People love their big screen TVs around football season and going into the Super Bowl. So anything that looks like a sale is something to push consumers to keep spending here, and putting it to the longer dated side of duration on
Grab
the
another
credit
call.
card. Catch a couple $100 sale, but it's going to end up being $300, $400, $500 down the line in terms of interest rates if they're paying on the month-to-month aspects. The markets are just digesting everything right now, but we're coming into some critical levels, I think, around the S&P, around that 4,400 and half or so. You've got the 2 years pulling back around the 410 level maybe. And so it's going to be a shift to see if the Fed can really plan out, like they said. The dot plot is not the plan. It's probably the best case scenario. So I think that they're a little bit shaken right now with what's to come.
It sounds like you think the potential for labor strife to make its way into wages and inflation might be the thing that could push those dots higher in the future, Chris?
Absolutely. That's the big question mark. They're flying blind in terms of the strikes and what's ahead. So we also, don't forget, we have the debt ceiling coming up, and there's not a lot of talk about meeting that. So there's a lot of blind spots
True.
that the Fed's having to navigate right now. So would it make sense to maybe jump the gun a bit and raise the rate in the next meeting and then leave things toward the end of the year? Or do they hold out and just see overall if they should pause completely through the end of the year?
We had a great stat yesterday from Danielle DiMartino Booth, who pointed out if the Fed does 2 successive pauses in a hiking cycle, it never goes back to hike. So her point was that they are going to do November or they're not. It seems like at this point our odds are moving higher towards November than Nick. I mean, one thing's for sure, we ain't getting no cuts.
Yeah. No, I think Chris said it really well. I mean, that's a great point on sort of if they go back to back in one direction, it's more of a signal. I really agree with what Chris said, that if they don't go now, like when would they go? Because it's likely that the data gets worse. Yes, the holiday shopping season is going to be there, but you've also got, you mentioned a bunch of this stuff, Chris, but you've also got the student loan repayments restarting, right? Which is going to be a drain on people's spending power. And we don't know exactly what that impact's going to be, but if they don't go now and they kind of put their foot down and say this is it, then I wonder when would they be able to do it? Because it's likely the economic data gets worse, and I think they're still looking to kind of bring that in equilibrium with worse economic data plus higher rates for longer to really get inflation back to 2%. They're firm on that point.
Yeah, true. Well said. All right, taking us right into the end there. Appreciate it, guys. Great chat. Chris Perkins, Nick Dieterakis. Trading 360 with Nicole Petalides is coming up next. Stocks have stabilized as the dollars rally, cooled off a bit, and bonds selling also slowed, but we're still under pressure. I'll see you this afternoon.
SPY's coming down here some more. There's a low of the day. Or the test of it, at least. Still really just in a chop. Sorry. Loud. Well, SPY's making a double bottom here? Maybe. Looking very weak though. Still stuck in the chop though. I see that resistance line there, and this now formed support. $11 o'clock. Wow. Morning's flown by for how choppy it's been. 30 minutes to EU close.
Opening up. We've had a lot of IPOs that have been very exciting. You know, even yesterday we had Klaviyo. Now we're hearing about more deals. It's feeling a little more like Wall Street used to. Let's get to Warner Brothers, Discovery, Paramount, these media stocks. I mean, when you think about the strike that has been on, so painful for everybody, tell us more of the latest developments.
I know maybe Wall Street's returning to normal, and we're seeing some of these media companies returning to normal with news of the strike perhaps coming to a close finally, as it's been quite some time now. But the biggest beneficiaries on the session are Warner Brothers, like you said, and Paramount.
That should be
Netflix
that should be bullish for AMC.
Move to the upside, but definitely read as a positive for so many of these companies
news yet,
with
though.
media
No
exposure.
reaction.
Hollywood writers and studios are
On 3%.
reportedly nearing an agreement to end one of the months-long strikes that has been brought, of course, into television production and movies. Now, citing different reports we got from CNBC, they did say that two sides were close to a deal following a face-to-face meeting earlier Wednesday. The sides are reportedly optimistic that an agreement can be finalized on Thursday. However, these reports did say the strike could also drag on through the end of the year if a deal is not reached. So to me, that seems like two very obvious outcomes. It's like we could see this drag on, or we could finally see some sort of conclusion. But definitely seeing a nice move higher today on perhaps some optimism. And Warner Brothers needs it because that name was at one point the best.
Delicious. Thanks for the donation, man. Appreciate your
500
support and your
through
generosity.
February, and then it has since just given back all of that strength. So needing some love here with perhaps whisperings of the strike finally ending.
Won't break too much support.
Yeah.
Be back next
understood.
Wednesday.
Thank you so much for all of that. Good to see you, Jenny Horn.
Diva is greater than
Let's
Indica.
get some insights on the news shaping
Celsius.
markets the day after the Fed.
That's good, man. Let's go take a break.
Head of International
All done.
Fixed Income Securities, Alliance Securities. Thank you so much for being
That's
here.
the kind of discipline it
We're not
takes
gonna
to be
rehash the
successful in this
play-by-play
market.
Of yesterday. What did you think of it?
I thought that the statement was very hawkish. The fact that they dropped from 4 dot plots, 4 cuts in 24 to 2 was very negative. I thought Powell was going to reverse that when the first thing he said was the full effects of tightening have not we have
Get
not
nuts.
seen the full effects of tightening. But
I'll be
nonetheless,
swapping
Powell
my
went
calls
on
out for puts
more moderate,
at some point.
middle of the road type presser.
Hoping we get another
And
test of
the
this
market
top of this
just
range,
looked
but we
at
might not.
The higher for longer. The Wall Street Journal has an article this morning saying higher for longer, maybe forever, that kind of thing. And Bloomberg
Higher for longer, maybe forever.
So I tend to think that we're reaching a bottom when we see these kind of things. But what we've seen today is even more interesting. The Swiss National Bank came out this morning and said, we're done tightening. That's it. What we've done is more than enough, and we expect inflation to come down. That gave a bid to the front end of the yield curve across the world. And as we look at 2s 10s right now, they are steeper by 10 basis points this morning alone. And 2s 30s are steeper by 14 basis points, which means the
Barbecue
2-year is
settling
up
around
today,
VWAP,
and the
12 cents,
10-year is
down 31%.
7 or 8 basis points, and the long one is down 10 basis points. So we're seeing a real steepening of the curve, and I think that's going to continue because I believe also with the Bank of England, who had a 60-40 chance of raising rates today and they didn't, it tells me that central banks are very concerned about raising rates too much, and Powell is absolutely in that camp.
Yeah,
So-
I've been hearing more and more about this bear steepening.
That's right.
Right.
And I think it's gonna. I've called for it here. Steepening, and it's been back and forth. It's been down to 65 where it is right now. I'm talking 2s 10s to 80 yesterday at the reverse of that. But I really think the 200-day moving average is 71. I really do think we're going to go to 59 and maybe even into the high 40s. So I really think it's going to change.
It was interesting because the idea and the takeaway obviously is that they can have a soft landing. That was a plausible outcome, and that if you don't have a recession, then you don't need 4 cuts next year, and that's why we're looking more at
Maui
3 cuts.
Guts, or someone was saying you can buy it at Mumu.
The real rate, because we have to
So
sort of take into account inflation.
I don't know, I haven't seen any
So you have
posts
the
on that, but I'm not
nominal
really
rate, what's
looking.
the inflation rate. So tell me a little bit about that and how folks may have to adjust. I mean, they're still paying credit cards. They're facing
I don't know how
student
sketchy
loans.
Mumu is. I mean, it's
Mortgage
I
rates
think it's
are
another
at
Chinese
highs.
one,
He noted
so
that yesterday and we saw slowing
it's as
in the
credible as
housing
any of the other
market.
Chinese
And
ones,
then
most likely.
business
Like
spending,
Webull.
too,
Webull's maybe a little better, but
is under pressure
I don't know.
because rates are higher.
All right, so let's break it down. You're asking 2 questions. One about real rates.
Yeah.
and
I
one
mean, you'd
about
have
the
a case
economy. I'm
against
gonna
them
go to
if
the
you bought it
economy
and
first.
Great.
they
I
couldn't
tend to think
deliver.
things are slowing down.
If it came to that.
I still don't see a recession.
Not to say you'd want to do
I
that,
look-
but
I get from Citi the proprietary.
Say like you bought
Citi
shares and
credit card data.
they went to sell it and they said, "Oh, we don't. We
10,
never bought them."
13% downticks, and they say they
That
see an
all we're
increase
gonna
in
get?
defaults. And then you add in the student loans that started paying the beginning of this month. I really think we're in for a slowdown. But the Fed has reversed a lot of things. They've reversed their unemployment from
I really don't want to enter a
5%
trade
4.1,
midday in this
now
chop,
basically
though.
to 3.8
Going
where we
to
are right now. I don't think that's going to be
these call
sustained. I
losses.
think it's going to go higher. The Fed, upped their GDP for 23.
Yeah.
Well, 23 is almost over, so I don't think that's a big factor. I still don't see a recession, but I do see a slowdown. As far as your idea of real rates and the Fed has no reason to ease, real rates are too high. When I looked at 10 years coming into the New York Stock Exchange, they were 207. That's the highest I've seen them in 15 or 20 years.
Yeah.
5 years were 235. Again, that might be the highest I've ever seen them, but I have to go back and look. Real rates are way too high. The Fed knows that. Powell knows that. There's no reason to keep rates this high, this long. And as far as what the Fed will do, they don't have to ease just because of a recession. They can ease because they see inflation getting better, and that's what real rates are telling us.
Yeah.
So I tend to think the Fed is going to lower rates more than twice next year.
Okay.
I still think they're going to lower rates 4 times.
Oh,
but
really?
you know what? In a slowdown in the economy, yeah, I'm still bullish on the short end of rates. I've never gone beyond 2 years. I've been in bills. I've been in 18-month paper. I've been in 2 years. I stayed away from the duration aspect, and now I have to admit, with 10 years getting close to 4.5.
Well, if we do get the
this will be
sell-off,
much
we
more
might
interesting.
be
But
seeing
the
some.
charts are still negative, but we'll have to wait.
Might
to
be
see
seeing
what
some
happens. So I would think
431
get
action
these
today.
yields in, buy stuff. Corporate spreads are still steady.
But today might end up being
good
even larger day,
issuance.
31%.
So we still think the world is okay.
Yeah, I mean, and you do expect for inflation to continue to come down year after year, just like the Fed does, right?
Absolutely.
I mean,
No
that's
question
the
about
sort of
it.
playbook that's happening. It's still high right now. I mean,
It's still high.
It's
People
still hitting
focus.
folks. We
People
have
focus on
$90
oil,
Yeah.
right? You know, and I
Yeah.
said in my commentary yesterday, you know, I go back and forth from Maine to New York all the time, and the midpoint is Sturbridge, Mass. I always stop at the pilot.
Oh, you're not sure if they allow people to buy
For the last
guts?
3 months, every time I go in, it's $3.59.
You sure that's somewhere or what?
I went in 2 days ago. It's still $3.59.
Oh, that's
so oil's
good
gone
news.
from 68 to 91, and that gas price has stayed the same. So it isn't all filtering through. I think it's more technical. And even though Goldman says we're going to have Brent at 100, I
Yeah.
don't see where that's particularly significant. I think we'll be just fine.
And what do you tell folks who, I'll ask you a double question. Households.
You could just call them and ask them, or email them, or whatever their support is. Ask me if you buy it on there before you do all that.
What about investors who want to put money to work? I know you can't give exact stock market advice, but you were talking about, your outlook on fixed income.
Well, let's again, 2 questions. So let's go to the second one first. Stocks. September is a horrible month for
Yes,
equities.
historically.
As much as we've seen equities bounce back a few times, where it looks like we're going to go out closer to the lows rather than the highs. So I would stay aside on equities until the month is over, and I would look at equities in October. As you said, 43.50. I look at 43.50 on the S&P futures, not the S&P cash. But I tend to think that might not be a bad entry point. As far as what to do with money, hey, I'll tell you the same thing I tell the boards that I'm on for charities and so on and so forth. 6-month bills out to 2-year notes. And
Oh,
2-year
I see what you're
notes is
saying.
More recent, with 2-year notes going above.
Because they never shut it off,
5.10.
you're saying.
I would, as long as they're above 5.10, I think you add, and you can get 5.40 in December of 24 Treasuries. Look, bottom line is short Treasuries is the place to be. It's safety. It's better than your banks. It's higher yielding than your banks. Move your money out of banks and put
I'm looking for
Treasuries.
more of a
Get
bounce to
Treasuries
get some more
anywhere,
puts, but
including Charles Schwab.
I
May not
love
have it.
I'm going to end right there on Charles Schwab.
kind of have an inverse
All
cup here.
Andrew Brenner.
Oh,
Battle
maybe a
Line
little handle.
Securities. Always glad when you're here, particularly right around the Fed, because this is the big breaking news, and then we have to sort of interpret Fed speak sometimes, right? Thank you very much. Wonderful to
you.
have you, as always, Andrew Brenner. All right, coming up next, the big 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes to the technicals. Alan Nuckman takes us through the trades for PBR, Newmont, and GameStop. Coming up.
What? There's a new low on SPY. Kind of flush through there. Maybe this was the handle right here. Got double bottom, then rallied back up. Yeah, that was your handle. Here we go. Still holding 8 puts on AMC. Yeah, rum. I mean, you got to be careful though with that news that came out yesterday. Like, that's I'll say won't get bounces, but that's market pulling down news. So that's a trend setting news until next FOMC really. And in that time we could have a crash. So be very careful going along, unless it's value. But even value, I mean, if you have a proper crash, value's gonna get hit too. Yeah, I think we might be hitting that 431 today. That's crazy. It'll be a big day if so. 433.47 was my next level on there, which is just a little wick, not really a whole lot of liquidity. 431.49. After that, that's that low where I said I would take some profits on those January puts. And that's when this big inverse cup will be formed with a potential bounce. Could fill that gap, that bounce even. Little short squeeze on the market. That's less than 50%. Or maybe just 50%. AMC down 2.7. They're kind of setting up an RSI divergence here. Might not matter if this keeps selling off and this RSI gets lower than this low. Today's setting up for, yeah, 2% day or more. Not quite the sell-off I was expecting. They'll bounce around SPY. They'll prove that it's in a range and a chop. Wow, pretty big bounce on SPY.
For that, I mean, that could happen. But if this stock just gets up to that 20, which is the range top, then this option will gain 100%. So it's about probability, it's about math, it's about positioning. It's got 7 months of time. So that's a lot of time for good things to happen.
And you told him to bring the energy, Alan. I think Ben is definitely always bringing it, especially today. How about Newmont Mining when we look here? So 1 month is down. It's been on this downtrend since this spike higher. Your thoughts there?
Yes, risk reward. It's 50% off its highs of last year. So you got to talk about the Fed getting it completely right. They've cut inflation in half.
Picking up another put there.
We're the only economy in the world, I think, that's been able to battle the inflation back. So that's a very unique situation. Now, this is not an inflationary play. Let's remember, gold didn't move up even though we had all that inflation. So this is risk reward, and this is what the chart's telling me. So gold itself has been between $1,700 and $2,100 an ounce with a 1,900 pivot. We've been above 1,900 for all of 2023. So it looks like we're going to make another move to that range top at 2,100, and 2,500 is actually the all-time high if you adjust that high previously for inflation. Now, I'm looking at Newmont. It's trading around 40 right now. I'm looking at the March 37.5 call. Again, 6 months of time. That's the key here. Volatility is very low, so you're able to buy more time to be right. 6 months of time. We're 50% off that 2022 top. It's all about risk reward.
Look at these guys.
And what I want to say is the volatility, not only is the price half.
Don't they realize we have computers?
Half of what it was on those last lows. So we've got a nice setup here. We've got positive leverage buying. We've got bullish divergence in the fact that it's making or very close to those lows, but the volatility is nowhere close. So that's a sign of a sentiment shift. And the March 37.5 calls trade for about 550, again with 6 months of time.
All right, thank you for that. So looking a little bullish there, Ben. When you look at this Newmont Mining chart, what are you thinking here when you take a look? What are you watching specifically?
Well, all I'm thinking is the last part of what Alan just talked about, which is sentiment shift, because we've definitely seen that. I see the short-term gains that we've watched over the last couple weeks here. This chart really points to that. You can see a very well-defined trend to the upside, but it also looks like we're starting to give way. Let me show you exactly what I'm talking about. We just recently came off that $41 level, and that was after rallying from around 38. So a nice move up here, right? We've got a very well-defined bottom left to top right. I can understand why Alan was bullish this stock, but as I take a look here, I want to show you how we always talk about these areas of consolidation that form on the way up, and how while we're currently or were balancing around 41, what were we referencing? The area that balance that we formed prior to. So here you can see how after hitting 41, we've come back off, we've taken out 40, 30, and that has me a little bit concerned. Let me show you why, right? And I want to step back from this 15-minute candle chart and show you what's going on with this longer-term trend, which has been to the downside. That's why I'm giving the benefit of the doubt to the bears here. I think we did see a nice little run over the last couple weeks, but I think we just rolled over to key area short of this big area of 43, where that would have been the big area for the bulls to get up above. Again, short up. If we take out 40 right now, opens up a door for a retest of those lows that we saw back in August, September of this year. We're talking about, again, down around that $38 level, the level we just rallied off of. Let's step back one more time. I'm going to show you again, not just the the move lower that we've seen since April. And here you can see from 51 on down, currently balancing around 40. But take a look at this chart. I mean, this goes all the way back to 86 back in April of last year. And you can see, again, these areas of consolidation have formed at lower and lower levels. And in this instance, 44 is the pivot right now. So I see the strength we'd seen over the last couple weeks, but we're starting to give some of that back right now. And that feeds right into this longer-term bear narrative here, Nicole.
So he's giving a little credit to the bears there. When you're feeling a little bullish, Alan, quick thought?
I'm still in a buy the dip mentality. I mean, until wrong, 2023 has been buy the dip, and this is a stock that's been between 40 and 60 for the year, so 50 is the midpoint target. If we get to 50, this option doubles, and this stock has been between 40 and 80 in the last year. So the key is the dollar, and the rate hikes were very, 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 very close to terminal. So if we're not raising rates anymore, how is the dollar going to continue to hold its strength? And if it doesn't, who benefits from that? Oil and gold.
Okay. And then we turn our attention to the meme stock that put so many retail investors on the map. I mean, during the pandemic, people went wild for this, so much so there's a movie out, Dumb Money, and I wish we were in it. We should be in that movie because that's the kind of thing we were reporting on. Tell me a little bit about GameStop, which, let's see, 1 year it's down 40%.
Right, and this is a great example of education here. And the fact is, people tried to make money in GameStop, and they did because you saw an exponential move, but they did it the wrong way. Options are the greatest tool as a better way to trade, but they were buying out-of-the-money options that had very little time, and their strike price was super, super high compared to where that stock was. And so they had very, very, very low probability. To flip it, looking at this as a trader, I'm not a meme guy. I don't like to think about the markets. I trade what I see. What I see is the volatility, which used to be in a couple 100%, right now has been cut in half, and it's around 50, okay? So the volatility is dramatically lower. That's a sign of sentiment shift and loss of fear. That's how markets get a turnaround. And all these people that have been short recently at some point are going to have to take profits. You can see a little bit of a bounce. So again, the implied volatility is cut in half. To me, that's equally as important as the price being down. It's about risk reward. And so what I'm looking at here is I also see a lot of leverage buying. We've been between 16 and 28 for 16 and 26 for a year. Last March, we went from 16 to 28. So this stock can move when the sellers have to cover. And that's what I'm looking for here, is putting a risk reward chip down, buying a January 12.5 call at around 5. And so 21 is the midpoint target because that's the 200-day moving average and also the midpoint of this range that we've seen. So our expiration break even is 75 cents above, $75 up above, and we've got time for some development in this stock that is set up for a sentiment shift and a short squeeze.
Got it. We wanted to give you time to get through this because there's so much when you look at this chart. Ben, your thoughts on this chart? I mean, the long-term one was just wild, but what are you seeing most recently? I know you're going to give us both. So tell us more, Ben, the technicals.
I've got the short term and the long term.
And
for me, unfortunately, in this instance, I'm going to have to kind of default to Alan on this one. I've never been a big fan of catching falling knives and trying to pick bottoms, but I will point out what I'm seeing here in terms of price activity, and that is a little bit of weakness. Taking a look here, first and foremost, I've got the hourly candle chart here, and this is going back to the middle of May. You can see a kind of a topping pattern that formed here all the way into the breakdown that we saw throughout July, taking out the lows from earnings back in the beginning of June. And then you can also see this pattern starting to play out again here. It just looks to me like this is a stock that's really struggled to recover, and news-related events have yet to provide that catalyst to the upside. Right now, we're currently bouncing below 22, the spike high that we saw recently, and above 16. Do the math, holding below 19 doesn't necessarily bode very well for shares of GME in this instance. I did want to show you what's going on because the other thing that stood out to me was the series of lower highs that we've seen coming off that spike high, this longer-term chart back to the beginning of 2021 when the craziness really came into the stock. Again, this is one that I tend to stay away from. I look for that very well-defined trend-type pattern playing out on multiple time frames, the more granular, intermediate, and then the bigger picture time frame. Here, you just see this kind of, I'm not even really sure what to describe this as, but it's this kind of wide range sort of pattern that just continues to develop to the east, I guess is the best way of putting it. And I did want to just find something that we can reference here with validity and something that to give us something to walk away with here in terms of this discussion. You can see that we're holding below the 50, below the 200-day moving average. You can also see that we're still holding up above a couple key lows down around this $14 to $16 level. So I think the bulls have something to hang their hat on at this point. I'm noticing here here that RSI looks like it's rolling over in a very similar fashion in terms of what we saw back in May when we saw this pattern start to develop. So what concerns me here again is kind of what we were talking about in terms of our first example with PBR and testing that upper extreme, knocking on the door to the upside. Looks to me like GME is kind of banging on the floor here right now and potentially trying to open up that trap door and exhibit some energy to the downside if we were to break out of this range that we've been in. Looks like we're going all the way back to the beginning of December of last year.
All right, thank you for that.
Green candle there on SPY.
Mining and GameStop, our big three today. Thank you both so
Hey,
much.
GameStop making the big three.
Alan Nuckman, we thank you. BullseyeOption.com and Ben Lichtenstein, always amazing on those technicals, looking at the chart. In the meantime,
Pretty big bounce there on SPY.
Residential, the business of property management in the current real estate landscape. More Trading 360. We'll be right back.
Very choppy, very stuck. Back to the chop. EU close. That's what a little spike was, maybe. A little spike on EU close. Mid EU close. Well done, guys. Thanks for your thumbs up. Appreciate it. We're at 14. Getting close to that midday. We've already had chop basically all morning, but since it has been all morning, maybe we'll get a midday move. Direction. Guts, did you just thumbs up? So jacked up. Barbecue still at 12 cents. My green candle there. Did make an RSI divergence. Just bullish looking. We break out of the top of this range, I'll flip back into calls. However, if we get up here, I'll probably add to my puts. If we get up without breaking. Yeah, I would hope it'd be the first leg of the day, Guts.
Delivering service to homeowners, residents on behalf of investors. When you think of the big urban markets, I'm right here today in New York City, Toronto, Miami, LA, as well as the large-scale communities across the Sun Belt, major markets like Chicago, as well as California and everywhere else. That's what we do each and every day, is serve our residents, and our homeowners in these residential communities.
And so, what are some of the things that are going right versus the challenges? And when I say challenges, I see like natural disasters on your list. So, I pose it to you because you see the day to day. I'd love to hear what goes right and what kind of services are people really looking for, and that's the daily and it's hitting home versus some of the challenges that you've been facing.
Yeah, Nicole, thank you for asking that. Every day people are living their lives in their homes. What we have seen in the last few years is people's homes as a place to live, work, and play has become even more important. So to the good, as I'm glad you asked that question, every day having people enjoy the homes that they've chosen to live in. And what does that mean? As they go to work, as they have their friends visit, what does service look like? How do they feel proud in their homes? So daily, our teams every day are in those communities, making sure the operations of that
Cosmo
community is
Kramer
up and running
Green.
and people can enjoy them.
0.76.
You are right, though. What is on our minds? The insurance markets, the volatility that brings, the hardening of those markets has put financial pressure on those communities. In addition to that, we have seen extreme weather events. So preparing our communities for that, for the unfortunate inevitable that may happen every day at a community, we help those communities prepare and look forward to be responsible, but also representing all of those homeowners so that they can enjoy their lives.
Yeah, understood. I mean, there's no doubt as you're handling 9,000 communities here in North America, basically, you're also having to increase the value. Right? I mean, as simple as these are many of which are luxury high rises, as much as just something as simple as adding electric chargers for EVs. What are some of and technology? Tell me about some of the things that you've been doing to keep the value up on these properties.
Yes, what we do see, Nicole, if you think about property values, there is location and that matters. But there's also a building's reputation, how the real estate community feels about that property. And that's where the operating team comes in. And that's where it's also so important to set a future plan communicated to that community. So you mentioned EV charging, sustainability. Those programs are something we are bringing to all of our communities everywhere. It is a trend that we see today. And it's not only about the current residents, but it's about the future. So we do have a simplified EV charging program that we are rolling out
What the
across
heck, guys?
every market, so that when future buyers look at
I
a
didn't know that.
community,
I didn't know that's who I
they
was
know
chatting
that
with.
the
That's
community is
crazy.
being prepared, as well as it is the right thing to do. Our view on EV is that it is an essential utility that all high-rise communities should be putting in place.
No, you got a good close in your position.
I want to hear a little bit about some of the current state issues, such as higher rate environment.
The only difference you could have done is scale. I don't know how many contracts you had, but scaling is always good.
See firsthand what's going on in the markets, residential markets. I mean, we know we have higher mortgages. Some people, I guess, depending where you are, if you're in the Sun Belt or a price is holding better, what do you foresee going forward?
Oh, you're kidding. What the heck?
Mortgages and movement in real estate, in these residential real estate.
I'm up 1.5 now.
And knowing who I'm with today in your investor community, I am not predicting the future of insurance rates. What we have seen is there has been a slowdown in home sales, which our business is very resilient. Again, our role is to continue to serve those communities through all times. We have seen in this interest rate environment, home sales have slowed down.
Hey, Cosmo.
At the same time, we see many investors continue to invest in markets such as Miami, Texas, Nashville, and the flow of capital from New York City into all of these markets continues to build. So it has been very positive from a development standpoint in those markets. But at the same time, for our homeowners, we do see an increase of cost, and we're helping them prepare through financial planning, budgeting to the future, putting long-range plans together with those communities, knowing that costs are going to continue to increase over the next year, 2 to 3 years.
Yeah. I'm out of time, but would you consider doing any M&A to work with other companies at any time?
We are, thank you for asking. We are very active in the M&A space. We are looking to invest in markets to continue to build out our footprint so we can continue to serve the markets that are growing the fastest.
All right, so looking to do some takeovers. All right, good to see you. David Diesel, CEO of First Service Residential. Thanks for being on the show.
Thank you.
Up next, CrowdStrike. Busy investor day has analysts racing to raise their price targets. George Zillis is going to tell us all about it next for our Disruptor.
Rum's down 6%. Spy kind of holds his right inverse head, or his inverse shoulder. Chop is ugly today.
And both of them maintain a buy or outperform rating respectively.
Yeah, it's pretty amazing, the dynamics that we're seeing on this and the investor conference overall. Any final thoughts on this as you look at the landscape? I know you cover a lot of names in the group as well. Good to see the price target hikes, that's for sure.
Yeah, definitely. So one of the things about this
I'm out of those
name that's interesting, Nicole, is that if you look at the multiple around 55 times, one would say
might have a long play.
That is
sometime this afternoon.
If you look at the
Would you break this range?
estimates for the next 4 quarters, it's around 58%. So
Try
even at this point in time, considering
just
its
scale in at lows,
one would say on a relative basis it's fair value compared to its growth
or wait
rate.
for the
So
break.
I think this is an interesting situation where if you look at the technology stack, we're actually seeing quite a bit of weakness, particularly in semiconductors. Companies like NVIDIA and AMD, they've been trading poorly, even Apple. But behind the scenes, on a relative basis, from a strength standpoint, the cybersecurity names, in particular CrowdStrike, have had some solid trends, especially in the last 6 weeks with the markets being relatively weak.
I mean, as they lift these margins, these target margins, it really is good news overall. And so we are seeing some nice calls, even though the stock is to the downside today. But every single sector is lower today. George Sillis, thanks so much. Great to see you. Appreciate it. Good look there at CrowdStrike. Coming up next, our panel taking a look at FedEx after the company's quarterly report. We'll get the news and the interpretation and looking ahead to the holidays, too, coming up.
Gonna maybe get back into puts up here. We'll see. Midday chop, could just leave it alone too.
Jackson Square Capital and Lee Bull, Senior Manager Trader Education at Charles Schwab. Andrew, I'll start with you. What stands out to you in the report, and how much do you like FedEx at this point?
I like it a lot. If I was super bullish on the market, but we're at the moment a little tactically bearish. So it was a significant earnings beat. Sentiment was cautious coming in. They had 200 basis points of operating margin improvement year over year. So things are getting better, faster. Profits are going up faster. Costs are going down faster. And this is all due to the new CEO, new management team. New CEO started in June of 22. So really just strong execution in a relatively challenging environment that could get more challenging soon.
Yeah, and I think that's one of the potential negatives that Lee Bull has. Talk about that a little bit. You have some of the things like this historical sales growth is something that you watch, and you have that on the potential negatives today. Lee, some of your thoughts?
Right. I think it's kind of a race with FedEx. Whether they can cut costs faster to keep their earnings up versus their volume declines. So we'll have to see which one wins out. But speaking of the volume declines, we did do some research here, and it found that FedEx is very correlated to the manufacturing PMI. And as you know, the manufacturing PMI right now is in contraction territory. So that might put a little bit of pressure on volumes. Now, on the positive side, they have made with their drive initiative very good, as Andrew said, very good progress in cutting their expenses. As a matter of fact, they said their cost per package declined more than 2%, at least for FedEx Ground. However, now remember, they had a volume decrease. Their revenue guidance is flat for next year. And also remember that they did get 400,000 increase in volume transactions due to the problem with UPS when they were having those negotiations with the Teamsters. And then they had another 5,000 incremental per day transactions because of the Yellow Express situation. So the question is, can they hold those increased volumes that they have? If not, then the volume is going to probably continue to decline, which is going to maybe squeeze margins a little bit. But so I think it's really a question of volume going forward.
And I'm really glad that you mentioned what went on when you talk, what was it? It was a huge number of people that were in the Teamsters Union working with UPS. And Andrew, you thought, obviously, some are saying that helped FedEx, obviously with the sales and people went that way. But the big picture here, you like FedEx, Andrew, more than UPS at this point, right? Why?
Clearly, it's a superior management team. They're operating so much better. I mean, hats off. Great points, by the way. In the manufacturing PMI, we'll get a flash number tomorrow morning.
Cosm up 3.5.
They're just
Dang, should have pulled the trigger this morning.
Much better than their competitors, and I expect that to continue.
My other order like 151.
I listened to about 2/3 of the.
Where is that? But this thing's pretty illiquid.
Yeah, it's a good group of. It's a good management.
Still looks
team.
good. It could still jump in here, I guess.
Doing yeoman's work in a different.
What a red day to enter.
Like I said, I think it's going to get more difficult. By the way, Amazon said that they are going to get into the package shipping business for non-Amazon packages. I think they're going to have a hard time. And this is a mature industry. It's very competitive, and so they're going to have a hard time getting a national footprint and difficulty getting to
VFS. I must have stopped out on that one.
So, like FedEx,
I realized that earnings.
Environment for sure. Like FedEx and the industrials.
Whoops.
I'm just not sure if it's the right time to be adding industrials right now.
Right, because you're concerned about the broader market. I mean, today FedEx is up nearly 4%, Andrew. When the time is right, what names in industrials overall would you say, hey, buy on the dips, or names that you are looking at this point that you do like?
Yeah, based on what we saw yesterday, I would put FedEx in the mix, but Honeywell would be in there.
Yeah, I mean, it's not like it's too late. I'm looking at it on daily. I know you're maybe looking shorter term.
We usually don't.
I wanted it.
But if we get into a cycle,
red.
Sort of like
it's only up 2%, 2.5%, but
the steeper slowdown.
yeah, I think you can fill this gap, 24.50, and
like chemicals.
Maybe make it up to $3.
All those kind of names. But Honeywell, I'll put FedEx
looks nice.
in the group as well.
I saw Dow Chemicals to the downside, one of the big losers on the Dow Jones Industrial Average today. Lee, some final thoughts here, because people want to know. They look in the holidays, they think about the economy.
And dollar cost average in GME share, final on day Tesla calls. Not a bad idea. IV's still low on the overall market, as you've been hearing and seeing. So,
yeah, on the Amazon situation,
options are still relatively
their
cheap.
Network is really built for delivering more local packages.
That's
so
a good strat.
They don't really have the infrastructure to do, nationwide moving things from one place to another is what. So I agree with Andrew that it's gonna. They keep
like
saying
Tesla,
they're gonna do it, but
I think you're
I don't know.
pretty aggressive by buying a lot of calls at this price still.
Secondly, though, I think that
GME,
there are some. We talked about the PMI. There's also
even though I think they both can come lower. I think Tesla's a further way it'll probably come.
So that's going to be a little bit of a drag. And we see after the Fed yesterday, higher for longer and interest rates, which historically has put a little dent in consumer spending. So I agree with Andrew. It's a well-managed company, but I think the macro headwinds are a little tough right now.
Yeah.
Nice tasty.
Yeah. And look, Ground did really well for the company.
I think we could see a bounce, like I was talking about this morning on SPY. I don't know if you're here, but
Andrew, just a few seconds left.
Stellar
I think we're making an inverse cup and handle here, so
up 60% year over
I
year.
think once we see this 431, I think should see a pretty good bounce,
Absolutely. So
potentially filling this gap.
management
So that'll be
team,
kind of a probably a
like
squeezy bounce,
the
pretty
stock,
aggressive.
and I think I
You'll
would
probably
like
see
it
Tesla rip during that time.
in the depths of a recession, which
But
feels
I
kind
think
of
we'll
like it's going to
probably
happen. You know, we just had the
retest
Russell
this before
2000
filling that, most
break
likely.
its 200-day moving average yesterday. It looks heavy.
We could even retest this
But
today,
yeah,
honestly.
I like it. Great
We'll see what happens here.
execution in a challenging environment, and I think I would look for that to continue. And then, yeah, we would look at the stock in the worst of times, I guess.
Yeah. All right. Well, I will say Evercore ISI has a 291 target. Bank of America, folks, has a 330 target. They both upped their price targets today. Right now, it's trading at around 260 and up about 12% in the last 3 months. Thank you both for being with me here today. Andrew Graham of Jackson Square Capital and Lee Bull of Charles Schwab. Thanks for being with me. I'm Nicole Petalides. That's going to do it for Trading 360. Keep it right here. We'll see you at 2 p.m. Renita Young will be anchoring this afternoon. And Fast Market is next. Have a beautiful day.
You haven't sold any of those Tesla Leaps that you purchased in November? Or when did you purchase them? Or in May? Been buying November ones? Yeah. I mean, there's always the possibility that this just double bottoms here. We just stay in this range, given that it is an election. We don't get the full Monty and new low. That's why I'm planning to take some profits on this level if it hits the downside, then see. Maybe we get a Santa rally that fills the gap up here. 454. Yeah, I'm taking profits before yesterday's news would have been probably pretty prudent. Getting out of here. Getting some puts here again. Getting out of here long. Just reducing exposure overall, long and short. Don't like it. Middle of the day chop, but engulfing. It doesn't look like we're going to retest that UOP at this point. See if we can get some continuation here. Probably not, being that it's the middle of the day. You're permable. Yeah. I mean, it's good. Markets go up, so permabulls do better than permabears, which is what I've had to learn over the years, as I've been a permabear, and that doesn't work. Yep. The longer you survive, the better your odds are that you'll figure it out. Gotta survive.
500, the benchmark, down 1.1%. The Dow Jones Industrial Average off 0.5%, or about 180 points. NASDAQ 100 down 1.3%, and the Russell 2000, the small caps, down 1.1%.
Excuse me.
Red across the board. To help me break down this market action, let's bring in my co-host, and that's Kevin Hinks. Kevin, pretty ugly day here for the equity markets. Yields spiking across the board. The 2, the 10, the 30.
AMC bouncing back up if you
want. A lot
want.
of pressure here on stocks.
Yeah, stocks don't like spiking. Fill in the blank. Yields, dollar, crude oil. They don't like it.
Right.
And so when you look at it like that, this is a big move in yields. And Jerome Powell's words to sum up in 2 little sentences is maintain the target range and wait for further data. Yeah. And basically that's what he's talking about. And when he went through the SEP, it was pretty obvious.
Middle of the day there on SPY.
They brought unemployment down. They brought GDP up, they brought Fed funds up, and off we go.
Yeah, it seems like they were out there telling you the same rhetoric, right? But the market wanted something else. Is that why we're under pressure so much? Is because the market seemed optimistic that, hey, you know what, higher for longer, that's not going to last. They're going to make more than, they're going to make those 4 cuts next year.
I've said this before. It's a little bit of a controversial theme, but the market's a spoiled child.
Yeah.
And the market wants this to be done. And the fact that it's not done frustrates the market. And I think that's what we're dealing with today. Is like, what do you mean you're not done? Wait, 5.6 on the Fed funds.
Right.
Wait, that's higher. That's not lower. That's higher.
Yeah, and I think
it's kind of like that.
It was projections into 2024 and 2025 where that terminal rate.
Which mean nothing.
Right.
By the way, anything past 3 months, right off completely, it means nothing.
That dot plot's a snapshot of what's going on right now, not of future expectations.
Dang, tasty.
He made that clear. But some big news today here in the M&A space, Kev, and that was Cisco coming out guns a-blazing today with a bid
You're
for
forging a bull
Splunk.
market.
Let's bring Jenny Horn, markets correspondent, here to help us break down this story. It doesn't seem like Splunk's up 21%, Jenny, but nowhere near the takeout price.
Nowhere close. I mean, it closed at around $120 a share yesterday, so this $157 value.
You can't short yourself that much, though. If you sold GME to say you'd still be at this certain level, could have thrown it around to something else. You could have honestly invested in something that went even worse and traded and given up more of the gains and just holding GME as it's slowly died off.
For around $28 billion. Now, upon
touching your money and touching your account, a good way to lose. Anyways, so the fact that you just held it, even though it was in something that was slowly falling, would have still been a better scenario. Ask me how I know.
Offerings. It's also expected in terms of its gross margin to be accretive in the fiscal first quarter post the close of this deal, and non-GAAP earnings accretive in year 2. Additionally, it's expected to accelerate Cisco's revenue growth and its gross margin expansion overall. However, the transaction will not impact Cisco's previously announced share buyback program or its dividend program. But the acquisition has been unanimously approved by both board of directors. It is expected to close by the 3rd quarter of calendar year 2024, subject to, of course, regulatory approval. But actually what's really interesting about this deal is I just didn't realize that Cisco quietly in the fiscal 4th quarter of this past year did acquire around 3 privately held software companies. So they have been no stranger to M&A activity as of late. Cisco is also really attempting to shift its overall business model away from hardware, which is what saw its rise over Silicon Valley. Now it's expecting this future to be in software with its $28 billion deal to shift into software. Now software does account for around 30% of its overall revenue on a trailing 12-month basis. So Cisco is attempting to reshape and reform its overall image. I think this is seen more as a tech name that
I had long-term tax losses on it.
This move, I think, then making this name a lot more interesting, just given, again, Splunk is operating in this
Closing one of these puts here.
Seen as more valuable software space.
Jenny, Cisco is a more mature company I mean, Tom and I remember when it was a younger firm trading on the CBOE many, many, many years ago. And this is how companies like this that spin off a lot of cash, that have mature businesses, this is how they stay relevant and stay evolving. They acquire companies. So this is one, like you mentioned, of the many companies that they're trying to basically change and enhance and improve their footprint by acquiring these companies. Boy, the interviews from this morning from these CEOs, everyone seems happy, Jenny.
I completely agree, Kevin. I think that even made me excited just hearing such positive remarks. They did also mention generative AI in terms of their security offerings and saying they want to be preventative in cybersecurity measures. I mean, interesting really to read some of these remarks, I'd say, just regarding the overall landscape of the security realm in tech. But yeah, I completely agree. You have the street excited about AI, excited about the fact that Cisco is going to be definitely shifting into software. I think the future is so much in software. When we look at tech, the weakest spot really for the last year has been all things hardware, just given the really difficult comps we're still seeing from the pandemic and just some lagging demand for overall hardware. So I can respect a name like Cisco staying relevant, reshaping itself. It's sort of like IBM, where it's actually been amazing to me to see the resiliency of some of these companies that, like you said, have been around. They're sort of like Wall Street legends at this point.
Yeah, you wonder what this does. The capital markets seem to kind of signal that, hey, there's money out there and more M&A activity might be down. All cash deal. Yeah, all cash deal. There might be some more out there. We'll have to wait and see. All right. Thanks to Jenny Horn, markets correspondent here, breaking down the story. Cisco taking over.
Yeah, no, I get it for sure.
But now let's bring in Nathan Peterson.
Time and hard lessons, yeah. Truly don't think you can just learn this from lessons without the experience, without the emotional experience.
Market is, and it's getting its medicine today.
Big losses, big wins, big misses.
Here in stocks.
Yeah, good morning, guys. Yeah, Kevin's right. I mean, that kind of conditioning was developed
getting
after
stung
08.
bad enough
Just gotten so used to an
that you never want to get stung again.
I think we're still doubting that the Fed is not our friend in a sense, or at least the bond market is, or investors are. But yeah, stocks have every reason to be going down today. I mean, those higher yields, that's a tax on consumers. That's a tax
GME down
on
4%
debt.
now.
Higher oil prices, tax on consumers.
You selling covered calls on your
tax
GME?
on multi-international profits. So all that, read through is into earnings. And, at that 19 PE, you really just don't have, enough of a buffer to validate basically where the stocks are trading now at that valuation with yields breaking up. That's competition for stocks. So I'm really surprised we're not down more than we are. The best thing that I could say right now about the S&P, at least from a near-term perspective, is that maybe that 43.35 low from mid-June and mid-August will hold. We're above that right now, but if we do breach that, then it's going to look a little bit head and shoulders top-ish on the charts over the past 4 months. So we got to watch out for that. So not a lot to like right now in terms of the setup that we've got.
Yeah, Kevin, he starts mentioning technicals. I always like to go back to technicals when we get sell-offs like this. What levels might become support? Is this a broad-based sell-off that's going to be extended? Our rate's going to top out here, 4.47% on that 10-year, 30 years increasing, the 2-year at highs not seen since 2007. There's a lot of headwinds here for equities at this point, unless we see maybe a turnaround in some of these asset classes.
Well, I think where we find ourselves is that, think about this, Tom.
Saw
think about
another
the
one
overall
here.
Economy and what's going on behind the scenes. What makes headlines every day? Strikes, right? Strikes. I mean, one union, one labor group after another is fighting for what? Higher wages.
Right.
All right, I'm out of those puts.
Is
freaking choppy.
Disinflationary.
None.
Running out of trades today.
I mean, you've got spending that still hasn't hit.
Need to save for the afternoon.
Yet. So the fact that inflation or the fear Jerome Powell's perceived. Remember the mistake that was made in around 79 and 80 was they stopped and started with inflation. It reignited on the upside. And so that's, I think, Jerome Powell's biggest fear. With a 3.8 unemployment rate, he's got one mandate right now, and that is
Should have left one as a runner.
This to 2%, and everyone wants him to stop at 3, stop at 3.5, close enough.
Yeah, I would move it all to DRS. And there's the freaking flush.
Well, so
that goes back to that.
I'd move it all to DRS and run covered calls on it.
It's like grounding your child for a month. Well, 1 weekend, I'm good.
Given the premiums right now are much lower, there's like 50-60% IV. It's a good time to buy options, like you were saying.
As far as inflation, that's
buy the premium on GME, but
when you look at some of the
it might not be back up into the hundreds, 200s.
I mean, the lowest level since January, they're going the wrong way. Fed Chair
doing my best not to
pounding his head against the wall right now.
Should have left a runner. Oh well.
Yeah, absolutely. Yeah, 201,000. Yeah, it's and so and. Look, the Fed, I think, would be
such a small move, dude. These little chops.
The economy showing some slowdown and us taking a hit. They're not trying to break the economy. On, it almost feels like though they are waiting for the economic data to basically suggest that we are contracting and that it is restrictive enough. I think the word.
All right, there's a wick. That's good. I got a good exit. I'm happy with that.
That sounds a little bit to me though like he is waiting for the data to come in and suggest a hit. So if you're an investor and you're saying, hey, no landing, soft landing, we're all good here. It feels a little bit like
a couple calls
lit in terms of the Fed keeping those restrictive rates until it shows up into the data. And then if that does occur, do you think that's going to be bullish for the market? Probably not.
Some of that conversation was around, I think, what Nate's talking about here, and it was, I think, the key part of his speech.
Probably hold these calls.
The neutral rate and the restrictive
for a while.
Rate. They were trying to pin them down on what those
I'll average into them if we keep coming down.
And he's like, here's his quotes. The restrictive rate, when you see enough data to determine it's yes. Right. And the neutral rate, we know it by it works.
Right.
Which means we know the neutral rate when we see what it does to the market. We know the restrictive rate when we see the data coming down. We're not there yet.
Yeah, especially on that jobs.
I thought that was fascinating.
Yeah, I thought, especially on that jobs front. I remember that quote that he stated. But Nathan, I got a chart here. S&P 500 companies that are trading below.
Yeah, I mean, you have a pretty sizable amount.
Trading below its 50-day moving average.
Could be
down to about the 22% level.
Done the math on how much you'd be making just running cover calls, like
are trading above
20 delta.
50-day simple moving average. I mean, this is a broad-based sell-off, right?
And we could always just buy shares with it,
right?
With the premiums, which is even a safer way to do it in case it does rally. You're kind of hedged. And it's allowing you to build a bigger position, which seems like that's what you want to do.
Inverted yield curve. And so you would think that, are we being too complacent in terms of these crowded trades and putting all the money into the Magnificent Seven? Well, I'd say as long as they can deliver and they continue to beat estimates and they're continuing to show that they can move into areas of
sell the 20 strike on GME.
Then
it's a 20 delta for October.
There can be this kind of a dynamic that exists where
with that premium, $33, buy 2 shares. Do it at the same time. Sell it, buy 2 shares.
But if we do go into a downturn, I mean, we have to remember, going into a recession is just kind of like normal. If you look over history,
loses 50% of its value, which it probably will.
If some of those earnings growth rates begin
to close it or roll it,
the Magnificent Seven because of the global
and
economy,
the new credit, buy more shares.
Yeah, there's probably going to be a repricing, so we do need to be aware of that. I think it's good that
your dollar cost averaging while receiving premium when it comes down.
And I think if you take a look at some of the valuations in those Magnificent Seven, as you call it, I call it the Elite Eight. I mean, valuations are still
Cosmo 4.5
on a lot of these companies. Maybe
not a big move, but
they can push back against that
it wants to make a big move
environment. But Kevin, then you look at FedEx earnings. Pretty good report out of this company, and I always look towards transport.
See if we get a double top. You move back to VWAP, I'll pick it up.
FedEx, blows out number. That doesn't blow out numbers.
Yeah, beat on earnings per share, light on revenue because they are going through massive cost cutting right now. So, hey, listen, I applaud companies that are running more efficiently and doing better with less because their revenue's going down. They admit that there's, what do you say, ongoing demand weakness.
Right.
What was their CEO's quote? Yet they put up good numbers. That's a credit to them working on the cost side of the ledger.
Yeah, and they took a bunch of market share away from UPS, and then the Yellow bankruptcy
that
also adding to that also. But Nate, when you look at this market, and we're getting led to the downside here by tech. And maybe that's the most stretched valuation sector or segment of the market at this point. Is that what investors should be watching, or should we just keep our eye on yields? Because Kevin and I mentioned this yesterday. I brought it up to Kev. You got to watch the bond market for reaction that's going to kind of spill over into equities, and we're seeing it today.
5.5 on Cosmo.
Yeah, it is about yields, but it's also about, so for example, the 10 years at 4.48%. How long is it going to hang out?
6.5 on Cosmo Kramer.
So, I've talked to Colin Martin, one of our directors here at Fixed Income at Charles Schwab, and I basically said, hey, what's going on with the 10-year if inflation is cooperating? He basically suggested, hey, this is all about higher for longer. He doesn't believe that there's going to be, this huge upside to the 10-year, meaning there's going to be a resurgence of inflation or, more aggressive Fed in that regard. So there may not be that much more upside. So I think it does come down to yields, but I think the perspective to have is the 10-year going to hang around 4.4% for a couple weeks, a couple months, a year? Because all of that factors into basically how you can validate the current valuation in stocks.
Yeah, 10-year, sometimes I look if we can get a chart of the TNX up here, hitting levels, as I mentioned, not since October of 2007. But the RSI on it, like we're going back to technicals again, RSI at 70. You don't typically see that on a move in yields. So that's a little bit in overbought territory according to the RSI on this one. So we'll have to see I think the market probably wants some consolidation on yields at least, if not a pullback at this point.
6.5 on Kramer.
All right, guys, let's take a quick break here. When we come back, we're going to take a look at Uber. The ride-hailing stock has rallied sharply so far this year as margin expansion continues to grow along with ridership. Fast Market's coming right back.
Yeah, he could live very comfortably just on covered calls with it. I imagine he closed quite a bit of it though, honestly. I think he still holds it, but I don't think he has the same size. It ballooned his account way too much. He's a smart investor. He wouldn't be so concentrated in one equity, one security. Yeah. But yeah, even if you scaled down a bunch, you still could live very comfortably just on cover calls with it for sure. A little bouncy there. And if you're not DRS, you could turn on stock lending also, depending on how big your position is. I think you can do both those at the same time, which is kind of crazy. The stock lending wouldn't be nearly as much as covered calls, but another way to make money on a position that you hold. Those hearts. What the heck? Got a straight flush. Straight flush. There you had it.
Pressure, you know, it seems like the CEO is doing the right things at this point, but at some level there's regulatory headwinds. They've got some issues over in the EU. They might have to shut down their operations in some big cities if some laws go through where their drivers are considered employees. What's your take here on Uber?
Yeah, so I mean, it's one of those companies, growth at any cost, that commanded basically a high valuation. And hey, to be honest, in terms of their brand, I mean, Uber is a verb, and so they're kind of like a Google. So you got to respect that. But when investors begin to scrutinize and be like, okay, now it's time to kind of show me the money, the company has been moving in that direction. But still, I think you have to. We're still figuring out in terms of the business model whether how economically viable it is. And to your point about the EU, they are in the final stages of basically negotiating that bill, which would be, hey, labor is the biggest cost for corporations. And Uber basically said, look, I'm not a lawyer, I'm not an Uber analyst either. I don't know if they're posturing in terms from a legal perspective, but they said, hey, if you pass this law, then it's going to be the equivalent of Volkswagen going out of business in terms of the employees they have to lay off. And then they also said 40% hike in prices. Now, I'd imagine Uber, in terms of a business model, is probably fairly inelastic in terms of demand, but 40% jump on anything in terms of a good or a service.
Is it Pocket Kings?
Yeah. What does that do to the business in terms of demand? And if a law
put
like
this guy all
does, in fact, go into play, how much is that worth in the stock price? Is it $2,
Called.
$4, $10? I mean, this sounds like a pretty significant law that they're considering.
7-4. Ace 10. What the heck?
Yeah. Yeah.
Uber is best in urban areas. That's where they're most efficient. That's where they make their money.
740 called that pre-flop.
I can't
Idiot.
imagine it's a good thing.
Lose stable.
I think it's one of those, Nathan, where you slide all your chips in the middle of the table.
Right. All right, Nathan. The company reports earnings at the end of October, I believe. It's
Osmo's 6.5.
About the 31st of
If it's
October.
double topping up here,
This from
0.5
an
mil.
example trade perspective.
Yeah, sure. So this is an example trade. I kind of, maybe provided some reasons why there might be some concern if they're, they've been looking at, the EU has been looking at this law ever since the pandemic back in 2021. They're in the final stages here. So, when do you get some kind of issue? Does it, I don't know in terms of the timing, but let's say that you are bearish on a stock like
I'm gonna buy another call here.
For an example trade, I was basically presenting a long put calendar using the October 27th 42 put as my long strike, avoiding the earnings date that, like you said, is expected to be late October, early November, and then selling
just
2
punting
weeks
away his
prior to that,
chips.
the October 13th, same strike, 42. And the reason for a strategy like this is because there is a little bit of
That's crazy, Guts.
data that you will take advantage of.
You're looking forward to that?
Outlay.
I know. I kind of. I guess I am, but I don't have any barbecue right now, so I'm not.
However,
if I do get into it, though, it'd be fun to sell cover calls on 10,000 shares or 20,000 shares.
Is what happens if you do get an announcement
with
out
the,
of the
with
EU,
the,
and the market then
acceptable
reprices the
premium.
stock of Uber, but let's say they price it down at 38, for example. So you would benefit more if you had.
That's what got me into barbecue. Well, not I guess
one,
originally.
Selected is primarily just okay.
But after DFV sold, well, before he sold.
A recent uptrend here. What's the
not DFV, sorry, RC.
Targeting it by October 13th. That's your short
It was
strike.
the premiums that got me. I was selling cash trade puts.
Is what you'd hope for with the strategy. Like
way
this.
out of the bunny.
All right, yeah,
one day.
Let's take a look at this
one day.
Going
expiration.
October 27th,
no way it would hit.
Avoid those earnings.
Finally came out.
Days till expiration.
RC sold.
Put, and then sell the near
put
term,
hit.
October 13th weekly 42 put. 2-week wide put calendar to the downside, Kev. You're paying roughly about a 34-cent debit, but you see those break evens about
I was stuck in that position for like 4 months.
Just above 44.5.
Until I had that spike up to
type of trade.
$5, I think.
Risk on that short option going into expiration over
can't
the next
remember.
few weeks here. But this is a low-cost entry point to a slightly bearish trade, Kevin. But you're still giving yourself a nice range for the stock.
I've lost quite a bit on barbecue, actually.
Remain profitable.
The educational aspect of Nathan's presentation is in the characteristics of the calendar spread, which is it's precise. It's not, one single price precise, but it's precise in an area, which means if you think it's going to 38, right, either choose the 38 strike or don't do a calendar up around 42. That's the great call there. That's what the utility of the calendar spread, but also the downside of the calendar spread is if it moves too far, if you play for a $2 move and it does a $6 move, that works. As you can see, it goes up to the peak and then comes back down. We learned that 2 earnings ago in NVIDIA.
Yeah.
Remember, we put on a calendar spread. It did the old Linda Ronstadt. It blew by you. So that is where, that's the great learning part of
We got a third
spread.
RSI divergence here on SPY.
Kevin's
I'm liking
assessment here, Nathan,
the risk to reward for the upside on it
that
today.
this type of strategy offers. As Kevin mentioned, if it
More
goes
than the down.
38, maybe this one doesn't work out that well. But then again, I think the assumptions we always talk about and trade-offs that we always talk about with traders is that, hey, if you think this thing's going to go up, maybe you do the 48 call calendar or the 50 call calendar, right? So this type of strategy offers you flexibility, correct?
Yeah, absolutely. It's a sliding scale. So, pick a date and pick a price.
Yeah.
And there's your short strike. And that's the great thing about a strategy like this. The low capital. Now, look, I said it's a low capital outlay. It is. I think it was around 40 cents. However, guys, keep in mind, you guys know that it depends on, well, how many contracts are you doing? You doing 10? You doing 100? So that's going to determine basically the risk on the strategy. But the advantages here is you do take advantage of the time decay there. And then to your point, Tom, yeah, you get to forecast where you think it's going to be and by what time, and then go out there and select the expiration dates appropriately. I left a week in between it just so in case you want to do another adjustment like a bear put spread, depending on where the stock is, or you just take them both off if you want.
Yep, if the market's open, liquidity is provided. Yeah, and the debit you pay, it's pretty low comparable to other strategies that we look at, but is the risk on this one. So about $34 per spread at this point. All right, great look at that downside put calendar for an example trade here. And thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. But coming up after the break, Kevin and I are going to be joined by Landon Swan from Likefolio for discussion on Coinbase and the data on the stock move.
Nice kicker.
Stock pulled back about 35% since hitting those 52-week highs in July, but is up over 100% so far this year. Stick around. We're coming right back.
That's weird. I keep getting that. Is that like a flash thing? Or Java. Guess we don't really use Flash anymore. Dang it. Java cost me a hand. table's loose. Keeps losing people. What the heck? 4 ways all in. Pocket sevens. Ace. Nice. See how like laggy this is? Why didn't I get to... Did auto check for me? Oh yeah, I guess I was out of time. Nice brick. See, it's a little laggy.
Low volatility, relatively speaking.
Thoughts on barbecue?
Bitcoin compared to
If you're bullish, too bad you can't buy it today.
And it's just kind of hovering between 25 and
I don't know.
I think
It's
once
a...
we, break
I
out
should
in
and
either
check.
direction, there's going to be
It's
a lot of chatter around it, but
you were
to the upside, it's
kind of
definitely going
stuck in it regardless, so
Here
I don't
you can
know.
see a chart of
What do you mean, like as far as the price or what's going to happen with it?
about Bitcoin just on an
It's at 11 cents now.
average basis here, 30-day moving
I don't know. I
average.
think it's
It's
a
up
very,
little
very
bit,
long
but still
shot.
relatively low, especially when you compare it to
I see
the
the
late
stuff in the
2021 when things were much higher.
in the
It got
filings,
to, 68,000 or something
and
around
I see where you could
so
connect
that's
where
important. But then when you
RC could be
also look
involved,
at, just how Coinbase is doing, obviously
or
the website is very important. How
a
many people are
good
going to
actor at least.
Coinbase.com?
So
We
it's
can
all about
see
risk
that
management
the
at this
actual
point.
traffic
Yeah, there's a portion of your portfolio that you could allocate to a play like this. I think most that are in it are probably much too high on that risk scale. But not to say there's no place for a play like this. You just have to have the right risk management.
So they're trying to do what they can, but once we start getting headlines back, sometime in the next year or 2 years, Bitcoin breaks 30,000, maybe goes to 40, 50,000, you're going to have some FOMO setting in. You're going to have people getting back into it. And one of the things that I think you can say pretty safely is that Coinbase has established themselves as the
Definitely a straight out there. No one had it.
Cryptocurrency. So
it's going for the high card.
Either out of it right now,
high rallying up there.
People that are completely new to cryptocurrency.
I'll be adding potentially on these calls.
It's the easy
break out of this range still, like VWAP break.
To the world of
kind of solidify it for me.
Now there's just not enough hyper interest around there to be extremely bullish on this company, but I do think
that's good.
It's coming.
Soak in that feeling, feeling stupid.
In general, and I think
so you don't ever do this again.
That surge, Coinbase is going to react as in kind, but also because they're so efficient, they've cut those expenses, they increased the ability to have additional revenue from subscription and services. I think it's just going to be even better.
I mean, it could still work out.
Now we're kind of waiting,
and just
but once it gets there,
remember, if it does,
Yeah, Landon,
that it
I
was
think the
mostly luck,
correlation
and
to Bitcoin is still
don't try and repeat
there.
it.
It ebbs
Not
and
with
flows
that kind of
between strong and
capital
weak,
allocation.
but it's still a pretty
To that
high
aggressive of
correlation.
amount.
Their numbers for
Don't
the
assume it
first
was
6 months
too
of
much.
2023, 7.9 million transactions per month.
Pocket
They're
nines
up
took it
from
down?
9.1
What the heck?
million a year ago.
Oh my gosh.
You're right. They are cutting expenses. They're making
I
themselves
straight would've
the
killed.
best version of themselves, but still, they depend on Bitcoin, cryptocurrencies in general being popular. And I wouldn't say it's Bitcoin's getting less popular. It's plateaued down
Whole
here
vast when Jimmy took
at
off.
these levels. But you're right. Their future is bet on the popularity of cryptocurrencies. And I think the
We're down 9
correlation
cents
is
now,
still
bars.
there, Tom.
All the rage.
Landon?
Yeah, I mean the correlation's for sure. It's still there.
Barbecue
I
is all
think,
the
though,
rage.
that they've done a good job of weakening the correlation as much as possible. I will say I think the correlation to the upside would probably be stronger than the correlation to the downside, which puts them in a really good position because they've shown the ability to cut expenses. They've shown the ability to increase revenue per customer. That's not trading, not trading-based activity. So I do like that. We've also, when we look at just the overall interest in other areas such as, DeFi. In 2019, that was a $500 million space. Now it's an $80 billion space. So there are things that are going to continue to catch on, different segments of cryptocurrency. Coinbase Prime now is sort of a comprehensive wallet that allows you to get into sort of everything and track and trade, I think, 4 coins
But you know what they
years
say?
ago. Now you can do a lot more stuff.
Scared
on
money don't
Coinbase
make
by
money.
diversifying. But yes, they need cryptocurrency in general to take off. They need that.
You
FOMO
gotta bet the
coming back,
farm
to
get a new farm.
2-3 years ago, when that's what people talked about. People that weren't even in it.
They don't
were
make them
asking
like
me
they
about
used to.
Bitcoin and all the different currencies.
There's a
and
big
what do you
red
think
candle
about
on
that one? What do you
spine.
think
Just
about this one? I
or
don't
they're
get asked
slapping
that
us and showing us
Once
the
I start
chop that
getting
we
asked
are
that, I'm going to put more money into Coinbase.
victims of.
I think that's what this company needs. I will tell you, Folio's been pretty bullish. We issued a bullish alert.
12:30 makes sense. This was 2 o'clock. This part had
had
continuation.
25 and 46% on those, or 40% on those respectively. So we like this company long term, but yeah, it is a bit at the mercy of the cryptocurrency market and
I want to get another
just
call
general
actually.
consumer interest in that as well.
Yeah, they generate 95% of their of its transaction revenue from retail trade, so that's a concern as competition heats up. Now, when you look at happiness levels on this versus some of its competitors,
Okay,
as
grab
that
one more call.
competition starts to heat up a little bit, what's that look like, Landon?
Yeah, so they're about 58%
Stop
right
looking
now,
at me,
which is
Schwan.
okay. It's not great. I think one of the weaknesses they have and potential threats is that they've got fairly high fees. I think they're still based on percentage, and you guys know that over time that gets commoditized, and it's going to be those fees are going to continually be driven down by competition.
It's an engulfing candle, but you're in the middle of the day.
It's not a difficult thing, technologically speaking. Once you get into that business, once you have it set up, it's extremely high margin on each trade. So as competition comes in, those prices are going to be driven down. That's why I do praise them for doing all they can to increase revenue from non-trading activities. Smart, but right now, while they're the leader,
People have scared everyone off.
If things take off, they're taking in a juicy take on each little trade. But over time, that's just going to slowly work its way down to near zero. It's going to be transaction fees only eventually. So yeah, that's definitely concerning long term. But I do like that they're increasing their subscription revenue and services revenue.
Yeah, Kevin and I have lived through that, the race to zero, as far as markets go.
Oh
all
my
right,
gosh.
Landon, great stuff, great data as always. Have a good day.
Lame.
Thanks, guys. Take care.
All right, that's Landon Swan.
Now it goes to the high card, right?
Breaking down
Or
Coinbase.
unless you have a
Kevin,
flash,
he
of course.
broke down, they like it. I had a note from Mizuho, this Dan DeLev that's on the network once in a while. He
Paper
just
puts, this is the way.
dislikes this company just due to the fact that there's no retail interest right now in Bitcoin.
It could start up again.
Yeah,
but
for sure.
It is what it is.
And markets like today's does not help anybody wanting to, put some risk on trades, and a lot of people do. Historically, they have into Bitcoin when markets are volatile, and that's what they need.
Yeah, we don't have an opinion on Bitcoin or cryptocurrencies or Coinbase, for that matter, in any direction. Let's say, though, an example trade is that you think, okay, this stock is sold off and maybe there's going to be a recovery.
Full house
and maybe
out there.
you want a proxy for trading Bitcoin,
Trips.
right? There's bullish strategies that you can put on to take advantage of that. So the paper money trade that I looked at is duration, Tom. Go out to November 17th of 2023, buy the 70 call. It's basically a stock replacement strategy. That's about a 64, 65 delta on that one. Sell next week's 80 call, so you're doing the 70, 80 diagonal between Nov 17th and September 29th. You're paying about $9.50, but remember, you're paying for the duration on this trade and your ability to extend duration and chip away. But if you do get a move towards $80, there would be profits there. But the risk on this is the $9.50 that you paid between now and November, which is 57 days. Do you want to go further out? That's your choice. You're going to add more premium, but probably more Vega as well. So remember, the one thing about the diagonal out here, you do have about almost 8 Vega per trade. So any increase in implied volatility, any pickup in that might help this spread. But this
Grab
is
another
a
call.
bullish play in Coinbase. If you are
Try to get the
not
bottom
bullish
there. I'm
in
just
Coinbase,
slow on this
don't
platform.
do this trade. It's got 42 long deltas.
Right. Yeah, let's break this one down. And remember, the stock was trading about $114 in July. So it does have the ability to move rapidly. All right, so buying the November 17th monthly 70 strike calls. That's slightly in the money. That's got the higher delta. Against that, selling next week, September 29th, weekly 80 strike call, $10 wide call diagonal, paying roughly about a $9.50 debit on this one. Break even just above the 73 level on that. Kev, you do have that opportunity as you get closer to expiration over the next 8 days to adjust or roll that short option if the market's open, liquidity is provided, where you can start collecting credits to whittle down that risk that you have, which is $950 per spread on this one. A little bit less than the width of this call diagonal, so no upside risk above that. But good look at a call diagonal that takes advantage of duration, as Kevin mentioned, 57 days till expiration on your long option on this one, and then you can adjust, potentially adjust your short option, as I mentioned before. So a good look at that type of strategy if you're bullish there on Coinbase over the next 2 months. But coming up after the break, Kevin and I are going to be joined by George Tillis, Ben Lichtenstein, but we're going to take a look at CrowdStrike. Cybersecurity company announced new target
and bluff him off. It's Jack.
Raised operating and cash flow margins at its
Nice.
Fast market's coming
I
right
bet he had a
now.
Jack. I might have beat him with the 4, but I don't know. Doubt it. Maybe at a 4 with a lower kicker. I would have won. The bluff on the river is terrific. No, you're not crazy. Blackberry look nice. I haven't looked at it in a couple days, but let me check it out. So you had that big rip. It's got earnings. I'd wait till after earnings at least. Anyone have a king? Not gonna re-raise. Didn't see how it's played. Someone could easily had a king. Oh, and engulfing on the. Kind of golfing on the 5-minute, but we're in the midday chop, and the lows are starting to become less low. Less aggressive. 2.5 pot. Let's see if anyone will take that. Any nibbles? Ooh, he called. They both called? Alright, I just want them to fold now. Unless they have 2 pair. Dang it. What do they have? Going for the straight few. These guys are crazy with calling. There's a lot of action. See, I got this trend line here. Blackberry bounced off it nicely. I was actually gonna look to go long, but it. I was gonna look to go long, but it never quite made it. And it did this move so quickly. I don't even know what this was on, actually. I don't think that was on any news. But yeah, I'd wait for after earnings, then see if this trend holds. Another river bluff. Not big enough for a bluff. Yeah, nice. Pocket rockets. I'm taking all these guys' chips. What, like 3x in this on this table? Maybe bluff him off of that. It's not enough for a bluff. I put him at a 6 with a low kicker or pocket something. He had an 8. Wow. Got lucky on that river, I guess. Another call there. I can bluff him off. They both called? What? I have nothing. Going for that ace. Nice flush. Well done. Buy coming up here a little bit. Get a big blast through VWAP. Gap fill all today. That'd be neat. Double up this account. Cosmo Kramer, 7%. Did it. Hmm.
28 to 32%. That's up 900 basis points. So there was good commentary from the company. Now, execution's another thing, so there's always that risk. So I looked at a strategy here. You, Nathan, covered a put calendar to the downside in Uber as an example. You looked at a call diagonal.
Right.
So I'm looking at something a little bit more straightforward on this one, where I'm just going to go out to give myself some duration. So I went out to that same November cycle that you use for your call diagonal.
57 days.
Yeah, 57 days till expiration, and looked at buying just a straight call vertical. If you think this thing's going to rebound, maybe this reaction is due to the market slide, and you think it's going to go higher over the next 2 months, this is a strategy that might take advantage of it. So buying the 160 strike call, selling the 185 strike call. You can see there from the risk profile next to me, if you're paying roughly about an $8.50 debit, your break even goes up to $168.50 on that. Now, it's trading just below $8 now because the stock has continued to sell off. So a little bit cheaper than the example that we've got up here in the
kind
risk
of
profile.
fighting up against this trend still.
There's your risk, $850 per spread.
Got close to it on that candle.
$168.50. That's about $8.5, $9 above the current share price in there.
Need that to
As
break.
I mentioned, the stock was above
1 o'clock though.
Post this
Didn't
announcement
give time.
yesterday. Kevin, give me your take here. Giving yourself some duration, expecting a rebound on a type of strategy like this.
36.5 deltas for 57 days, and you're looking for CrowdStrike to move from where it is now up to the 185 level, Tom. It's not cheap, but you've got time on your hands, right? If you move this up closer, if you moved your date closer, you'd pay less, but the probabilities would drop. Right? There's the trade-offs that we talk about all the time on this show. Tom's giving himself 57 days, though, for this trade to do well, as opposed to shorter durations. So there's always the trade-offs there. Like I said, about 36 deltas, you are paying theta because these are both out of the money, or is it out of the money? Yeah, pretty
Basically
close.
at the
right
money.
At the money now. So it's a lot of premium in both these names. But anyway, like I said, the payoff over a long period of time, just under a double.
Yeah, and if you want to go out another month on the trade like this, Kevin, it's going to cost you about $9.20. So not that
There's
much
a price
more
to pay for duration.
For duration. So that's always something that you should look at when you're doing directional verticals like this. What's your time frame on the spread, and what would it cost me to go further out, or, as Kevin mentioned, shorter? You got to take a look at those. But a good look at directionally bullish call vertical there in CrowdStrike. That's going to do it for Kevin and I today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing is coming up.
Straight got there. Maybe I can scare someone off of it. It hasn't connected yet. And a higher pair. Nice. Well, at least it didn't re-raise. I get to see his cards. Could have raised more on the flop. That's how loose these guys play. Chick-fil-A today, pizza tomorrow. I haven't had Chick-fil-A in a while. Grabbing another call here. That was maybe a little premature, that one. I might be about to make double bottom or new low even. Beauty of the average in. Less reliance on your timing.
bell, and that's where we find ourselves.
GNI.
50 points. It's a very orderly sell-off.
Yeah, and
We'll
I would
have
say
to
that is actually probably
open up
something
another
that's
trade.
welcomed as opposed to an unorderly sell-off, which
See how the
then
other
feels
trade's
a little
doing.
bit like chaos, which today definitely does not. But as always on this show, we'll kick things off here with our upvote and downvote segment. Following that, we will chart and trade those upvotes. And our FOMO discussion today is all things NIO as it's entering the smartphone market, which is a little bit confusing, but we'll discuss more why we're seeing some selling pressure in NIO later on. And then we will look at perhaps the writer strike coming to a close after nearly 100 days of that strike, which has weighed on so many of these media companies. We'll look at that more with Kevin Green later on. And then we will look at VinFast, which is, of course, a new player in the EV space.
Yeah, VinFast.
One of the most high-valued names throughout all of our auto coverage, which has fallen about 54% now over the course of the month.
Yeah, that stock went crazy after its debut. It'd be good to get some context from George Tillis on what's going on with that particular company. But also looking forward to FOMO today because it seems NIO itself maybe has some FOMO. They're jumping to the smartphone market. Not I guess the move I anticipated, but I'm intrigued by it, so I'm excited for that.
I want to see what the paper count's doing with their play so far.
Endorsements, not recommendations. All over the place today, but this is where the news is kind of hitting strong, I think, is within this bunch. There are still some stories, although the overall market itself doesn't seem to be acknowledging them to the same extent.
Absolutely, and I would say our first story here is one of the biggest headlines of the day.
The position never opened.
Rupert Murdoch is stepping down as chairman of News Corp as well as Fox Corp.
Oh, Murdoch's stepping down.
As the media empire is gearing up for the 2024 election cycle, but the move will not be official until November. Murdoch will be appointed chairman of each of the company, and then Lachlan Murdoch, who is one of his sons, will be the sole chairman.
The play from the other day never opened.
Continue as Fox Corp executive chair and CEO. But Murdoch did say in this note to his employees that the companies are in robust health, as am I. We have every reason to be optimistic about the coming years. I certainly am and plan to be here to participate in them. But the battle for freedom of speech and ultimately the freedom of thought has never been more intense. Earlier this year,
Green Candle and Spy,
Fox
1 o'clock.
$787 million to settle defamation claims by a voting tech company, Dominion. Murdoch's continued role behind the scenes at Fox was highlighted in the many months leading up to that settlement. Fox News did also see Tucker Carlson exit earlier this year following a dip in ratings, which was met by, I'd say, some mixed feedback. I can't necessarily say that was entirely backlash, but this name has risen. I mean, it is seeing some nice price activity today.
What the heck?
I was talking about this name on Morning Trade Live, actually, with Oliver, and we were saying, is this necessarily related to Murdoch, or is this also tied to some of the strength we're seeing in
I wanted to re-raise that, try and bluff him out if he doesn't have the straight.
But he's also 92 years
Would have
old,
two
so
pair, wow.
was a massive shock. I think his time at the helm
I'm probably taking this down. I don't think he has a straight.
For a while now.
Isn't there like a fictional series
that
maybe seems like this?
Succession.
Oh, that's what it is. Yeah, so I mean,
Succession.
Succession in real time.
Yeah, we're watching a
it's all about the
story
Murdochs.
that has already been a story in
That's
some
like one of my
ways.
favorite shows
Look, Fox
for
has to
drama.
figure out what it wants to
A
be.
flush?
And, this is maybe that step they want to
You
take.
were
I don't know if
you
it's
were
a good
doing
move or a
that before
bad
the
move.
flush landed.
Fox is what it is
With a king.
because of Rupert Murdoch. So
Gosh.
love him, hate him, have an opinion, no opinion. I'm kind of in that no opinion.
Could have
camp,
re-raised on
really.
his raise, but
This is old legacy, old school stuff. We're
going to be too obvious with my A's.
Streaming media now. We're way past this cable stuff.
I know, and he had a 70-year tenure at that company and in the business. So to me, it's
I didn't know that was like that common of knowledge that Succession's about the Murdochs.
So fascinating, and Succession is apparently loosely based on his family's life story. So I'm more fascinated with the whole Murdoch family, but Fox seeing a nice move higher today. Our next name is Palantir.
I don't know if the Murdochs know that.
Has some crazy price activity. The fact that shares are up 120% this year, while also remaining 30%
I don't think they'd be very happy
highs and nowhere close. I mean,
so.
This name has seen such volatility really over the course of the last several years. So it's important to look at a longer term picture as well. But we did see CAS Investments and Palantir today announce a 5-year partnership for Palantir to provide its AI platform. Now, CAS is a Houston-based asset management firm.
I'm fully in these calls.
The story here
Yikes.
is that Palantir will be providing
this
that
isn't my
company
play
with
today.
AI-powered solutions to accelerate some of its partner onboarding and augment investment managers' work with
This is my
generative
final play
AI,
today
which
also.
is really fascinating to me. The use of this software helps
That makes it
to
easy.
aim and
All I have to do is scale out now.
operations
Hopefully it's
to
a
meet
scale
this
out
growing
and it's not a
demand.
stop
Now,
loss.
Palantir's technology is deployed to solve some of the world's really most complex challenges in government and defense, financial sectors, banking, asset management, anti-money laundering, and cryptocurrency. So they have had so many significant deals over the last several months. months, which have sent shares on an absolute tear. So this was sort of coined, I would say it was part or grouped into some of the meme stock frenzy, but they've really been able to separate themselves and trade on their own fundamental story, which has improved significantly over the past, say, half a year to a year.
I think the same investors or the same community maybe was interested in this name as it was in meme stocks, but I don't like to confuse the two, because if you think of what the traditional meme stock was, it was names like GameStop and AMC, which were declining businesses seen as value stocks that had huge short positions against them. Whether or not Palantir maybe was heavily shorted, it wasn't because the business was declining. It was maybe they're in this kind of proof of concept phase. So this is definitely a futuristic company, not a story of yesteryear. So I'm not sure I see it as a meme stock. Maybe it had some short squeeze elements, which I think you're alluding to, that led to some of that big volatility. But the one thing I found most fascinating, I think, about this particular story is if you covered up the stock and you heard this story, you'd probably think this was a positive.
Art's got there.
But the stock's down, 3.7%. So I think this is a situation where the overall market volatility is weighing on the stock. And as you said, this is just the latest in a list of sort of deals that have come through for Palantir.
Ooh, should I? I've been playing pretty aggressive. I can't probably
I just completely agree.
slow it down now.
Meme stock, if you really
I
think
say
about,
if I check this to try and get him to bluff, he probably wouldn't bluff.
Make sense to me altogether, but
no, I have a full house. Yeah,
Palantir
that's
separated
the nuts.
itself, and definitely, I mean, the fact that
I guess there could be a higher full house.
Profitability, their outlook has been strong all year. I think that speaks better to its
120%
year-to-date rally. Although weakness today, like Alex said, and down about 7.5% now week to date. But now our next name today is Cisco Systems, which is another headline of the day, I'd say, arguably. I've discussed this story several times already today, but news that they will be acquiring Splunk for around $28 billion or $157 in cash. Keep in mind that this stock, or Splunk particularly, did close at around 120 yesterday, so this implies some good premium. But upon the close of that acquisition, Splunk's president and CEO will join Cisco's executive leadership team, reporting to their current CEO, Chuck Robbins. The transaction is expected to be cash flow positive and gross margin accretive in the first fiscal year post the close, and non-GAAP earnings accretive in year 2. Additionally, it's expected to accelerate Cisco's revenue growth and its gross margin expansion.
Nice.
The transaction will not impact Cisco's previously announced share buyback program or its dividend program. It is expected to close by the third quarter of fiscal 2024. Of course, huge asterisk, that's subject to regulatory approval. But Stifel was saying that this transaction makes perfect sense for Cisco as it attempts to leverage its position into this corporate data center world and broaden its high-margin, highly recurring software revenue base. Now, Cisco has built itself among some of the legacy Wall Street names as a hardware company for several years, but it has since been pushing into what has been a more successful business model, and that's all things software.
Tell him to break it.
About 30% of its revenue being derived from software. So I think this was read as overall a positive. I mean, I was listening in on some of the CEO remarks just regarding this news. It seemed like everyone was very excited about the deal. Naturally, not unusual to see Cisco shares lower today, while Splunk is absolutely ripping to the upside, just given the nature that Cisco is the one acquiring Splunk, Alex.
Yeah, that's the game, right?
Could have waited all day and not bought until now.
It's kind of the value
would have been
that
the same
the current
spot.
shareholders would have. That's why you see the adjustment.
Worst
down
time ever.
Cisco. But then there's a buyout price on the
didn't break it yet. It's 1 o'clock. Got enough time.
You see that rapid
3 hours.
pricing. If you do see a difference between the current share price and that stated deal price, it's going to be the breakdown of the deal risk and, of course, the time. We have a lot more in interest rates to think about now. If it takes a while for you to get that cash payment, it's going to be discounted for those interest rates as well. So I oftentimes say the deal play, so that would be in reference to kind of investment in Splunk or not investment in Splunk. Of course, this is going to be subject to each individual investor's goals and needs, but it's more of an institutional play. It's not really a retail game, sitting and waiting for that to go
Friday,
through.
that's crazy.
I oftentimes see it as Splunk's now off
Week's
the board.
gone by fast,
I don't
too.
think about Splunk anymore. If I want to invest in the company that owns them or is seeking to own them, that'd be in Cisco. So Cisco, largely unencumbered. Splunk, completely different story now. Volatility is different. Everything that surrounds the stock prices with this deal. Nothing to do with the stock anymore.
Yeah, I completely agree. There's there's always those weird exceptions though, like Microsoft and Activision, which has taken so much longer, I think, than had been expected. Although to your point, Activision does still trade somewhat on its own sort of realm versus the other video game names. So Splunk now just being, you know, obviously that M&A target and seeing that massive upside today, given the fact that I think the street is expecting that this takeover will go through. But our last name today is Carnival. Now, Carnival is still one of the best performers this year in the S&P 500. It's
Wow.
about 80%, despite just a modest move to the downside today. And analysts continue to pour into this name to the upside. I mean, Susquehanna maintaining its positive rating and a $17 price target on shares. This analyst said that he was aware of growing concerns that leisure demand might be slowing with recent updates from some of these low-cost airlines. However, advertised fares for Carnival
Goes
and
by.
its peers remain
Oy.
healthy, with a longer
Breaking
bookings
it.
curve and more involved planning process for cruise travel, which is an important nuance to consider when gauging overall travel demand. The company is also expected to report its third quarter earnings next Friday, September 29th, which I was interested to see. I don't remember them always being so late in the earnings cycle, but that to look forward to. But this analyst said he's also very closely watching trends within onboard spend and some of these pre-cruise packages, which is a key for shaping sentiment into year end. This name does have 11 buys, 5 holds, and 3 underperforms among analysts. Average price target is $18 a share, which is slightly ahead of the Susquehanna's target, but that implies around 23% upside from where we're currently trading. This name has pulled back about 4% this week, though.
Yeah, this is going to be a trend to keep our eyes on as airlines have talked about sort of the inability to pass on those increased costs to consumers.
Yeah, yeah, you get calls here.
With cruise liners, they're operating
You're a little
on
late,
fuel
but
as well, as
the
far
move
as
could
I
be
know, so
large.
there's a lot to monitor here.
You get some here,
This is a
close
space
some at
that
VWAP.
We know the disruption that had happened during COVID. I don't know how long it's
I'll
going to
close
take
my
to fix that.
first one at
when it
VWAP,
comes to
which will be
balance sheet
like
and the debt taken on and the
12%,
increased equity, diluting the
15% of it.
shares. But they've been a bright spot for 2023, although the last month and a half not so great.
Yeah, not so great. And that's, I'd say, again, the broader tourism and travel weakness we've seen with some negative sentiment out of the major airline players. But we'll be moving forward today with Cisco. Like you said, Alex, Splunk somewhat off the table. We'll be looking, though, at Cisco as well as Palantir, which we never really chart. So we'll dive more into the technicals in both of those names as well as some example trades. Stick around. Next Gen Investing. We'll be right back.
Call that one down. Yeah, do it. Do it. Do it. All in. Go on. 20,000. What the heck is this? I got a 3. I got a 3. On the river. Oh, he had an ace 10. He had a pair of 10s. This guy had pocket 7s. You full? You called? I guess that means. It's so fast, can't even see what's going on. Yeah, you better get out. Better run and hide. Pump him with a pair of 10s. Those stupid tiny bets. Why'd you go all in? You're just provoking a bet. He's got a 9. Oh. Maybe not, though. These guys are crazy. King, Jack, Queen 3. Why do you get any chips for Queen 3? Isn't my kicker better? Alright, there's a break on VWAP. What the other guy have? Nothing? I'm going to sell... I'm gonna sell 2 up here, actually. Sell 2 right there. So 20%. Whoa. Do it. Come on, Spy. Be high of the day. What are these guys calling with? Ace? Ah, straight got there. I just checked this. Straight beats 3 of a kind, I think, yeah. I gotta call it, I can't. Dang it, he had the straight. I had to. Yeah. I raised more sooner. A little bit back to VWAP. On less SPY. I sold what? 30%, I think? Dang, should have been more aggressive on the trips. Or to scare them off. Oh, those last couple hands really wrecked me. That's too aggressive. Must say some. Please think I'm bluffing. He called? Oh, he's going for the flush again. Oh my gosh. He almost had it too. Literally the same thing almost happened again. Wild. Alright, we keep climbing up here. We're gonna be seeing high day before end of day. Which is very neat.
To go below that point, purple 250 2-day EMA comes in.
These
as
guys
kind
are
of our
pissed.
last line of defense for the bulls. That's around 1240 or so. That one is still very slightly trending upwards, suggesting the longer term trend is still up, but that would be the last kind of area that we would be looking for some support in terms of our moving averages. To the upside,
trying to get his money back.
15 area really stood
I
out.
got someone to take it.
We can see that there's a big volume node here. According to our volume profile study, this is an area of heavy trading above 15. We've also got our 2
buying again
averages right around that same area. So we have them almost on top
nice
of
rip
each
down
other.
SPY.
We also have our most recent trend line in that same area.
Man.
So anything above 15,
Those averaging in on
15
calls
to like 1575
paid out
or so,
pretty
that would
nicely
be
so far.
the resistance zone, so to speak. That would be an area
That is
where you might
neat.
have some trouble getting beyond that point.
Yeah, and this is
think
really
I'll
interesting just because
sell
you
some
look
more
at
at high
year-to-date
day.
performance and you think, of course, Palantir is crushing it.
Probably
right?
all of
Traded
them,
very
unless
well.
if that
We're seeing
happens
some short-term pain
before
as far
like
as the momentum and just
2:30.
the overall pullback we're seeing in shares. But now, when trading this name here, Alex, I mean, the street does still really like this name. I know it's moving to the downside today on some news that we were both saying would be positive, but just maybe given
Oh, I got this
the
table.
recent
I'm up like
pressure we've
5x
seen in
on it.
shares, walk us through the more bullishly in the example trade.
Yeah, so what
These
is
guys
the
are playing
first
even more loose
option
now.
strategy that many investors learn? Well, it's the covered call. You start
still
with
rallying
the
up.
stock shares or potentially buy them alongside the selling of one call for every 100
Cause
shares
I'm
in a
almost
standard
10%.
situation. So we're going back
Told
to
you
basics
3%
here with
wasn't
the
bad.
covered call.
Not
in
too late on
balance here.
3%.
Reason being is Rick had highlighted
No, the daily
two
chart thing like
very
that.
key levels. One to the downside, a support level around 1365, and one to the upside, a resistance zone beginning around 15. We're going to utilize both of those with this particular covered call, in which we'd be buying 100 shares of stock, selling 115 strike call in the October monthly expiration. First off, you're going to see our break even is 1360. That's below that resistance point. So if the stock goes down and tests that level and then bounces from there, holds onto that support, well, that's still above our break even. That's a good thing. Other important key piece, if it gets up to that resistance zone and it stops, that's where this max profit kicks in at 15, and you can see that there. So max profit is 140 on this particular strategy, but there is a key point when it comes to the covered call. And what is that? Well, you're long 100 shares of stock.
If SPY holds
big
view off
max
for
loss
support, it'd be
relative to
pretty
some of
bullish.
the strategies we look at. You have risk all the way down to zero, so know that anytime you're buying stock shares, you do have that full risk all the way down to zero, and you have that here. But a neutral / bullish strategy, less bullish than outright stock ownership. It
Fades.
increases the probability of success. It lowers that
king.
break even, and it reduces your volatility
Maybe
of
a 3 in there.
returns, for a
Check it down.
position. But it's still a bullish strategy, Jenny, because you're owning stock.
9.
You want this thing to go higher.
Right,
8
like
with
you
a
said,
pad
neutral to
kicker.
bullish, but
That guy's
obviously you're hoping
tilting.
that things climb or move at least from here. But now shifting gears to Cisco Systems, which is buying Splunk, one of these stories we've discussed here on the network all day long. But Cisco lower today, Rick. Not surprising to see a company that's spending $28 billion in
I mean, SPY
cash
could
this deal
we
is
could
to purchase
keep going.
Splunk,
This has a
but
gap to
this
fill.
name had been
We can
relatively
complete this
healthy
cup
on the year
and a little
thus
handle,
far, and especially into
or
this,
too long.
this day of selling, which, I mean, it's not like we're seeing a massive move to the downside, but walk us through what you're seeing here.
Yeah, you're
A lot of
right.
upside.
We have seen
Risk reward
this
upside
maybe
is
not the
still good.
hugest gainer we've seen, but a 37% move off the 52-week lows. Certainly nothing to sneeze at. Just kind of nice upward, up and to the right trend here, upward gains. Just looking at this white dashed line here, you can see we've made a series of higher lows throughout the year. But you're right. When we hit those yearly highs, just above 58, things started to fall off a little bit. We're having that 4% plus drop today. Not really surprising either at all. This is typically what happens when a company makes a big expenditure into buying another company here.
Really don't have
but we
much
can
here.
see that we have this shorter term downtrend that's still in
Feel
play
like
here,
calling,
this
though.
blue dashed line.
Oh, snap.
Looking at our overall trend as well, you can see that our moving averages, we've crossed below our yellow 21-day and orange 63-day within the span of 5 days or so.
Now it has this
We're
channel to
closing
break.
below them now. The moving averages themselves
this
are starting
one.
to turn downward
Let's
here.
get this
suggesting
less
that
steep one to break.
The trend is suffering here. This uptrend
Oh.
is in danger. The slope
I ain't
is
calling
changing
time, dang it.
of our longer
You might
term,
have clubs.
of our medium term moving averages here. So you can see also this orange 63-day EMA. That's about where price
Oh, we
topped
didn't
out
get to
today, around
see.
54. That was a resistance point in the short term here. But a lot of similarities to our last chart here, because we also have a support area to be on the lookout for. This area just below 53, our lows of 52.87. That's about the same point where we bottomed out today here. So longer term, the purple line, our 252-day EMA, trending upward. Longer term trend line
Let's sell
upward.
one more of
But
these.
in the shorter term, some definite degradation of this uptrend.
Yeah, right. And a pullback of 5% for the week is pretty significant for a name like Cisco, which in terms of the world of tech is relatively not as volatile as some
down
of its
pretty
peers.
good
But as far
today.
as momentum goes, walk us through what you're seeing here, just given the fact that we have seen some reversion in its price as of late, like you said.
Well, it's clubs.
Basically, momentum has just kind of fallen off a cliff here. We saw that things were flying high. We were making new relative highs with price here. We were in the overbought area, which is a sign of strength as we hit those yearly highs. Then we trailed off here. The cross from when you are in the overbought area to back
What did you
below that
have?
threshold, which is 70, that's a
Air
bearish
Force.
sign. So we got our
Going for the
bearish sign
straight.
right there. Price continued to fall
Guys
off.
are crazy.
We got another bearish sign when we fell below that 50 midline. But as I said, nothing super surprising about this big move downward today. One thing that's a little bit encouraging, I thought, for the bulls, in addition to the fact that we're holding support, we also held on above that oversold area. So entering the oversold area would be a further bearish signal here. We haven't made that point yet. That would be something to be on the lookout for. It would be a simultaneous break below support and a break into the oversold area.
Yeah, so as far as price activity, what are you watching for price levels to keep on our radar? We do have news of this acquisition, but now markets are sort of feeling this out, and we have now this, I'd say, this major catalyst somewhat priced in.
Yeah, and you know, the trend was down, momentum was bearish. That might lead us to think, okay, maybe we should try a bearish trade. But why are we down? What's the fundamental reason? Well, it's because we had an extra $28 billion lying around to buy another company. So probably not a bad long-term thing. So I think maybe it might make more sense to look toward the upside in this name right now. We can see here that we've got a bit of a volume node just above 55, an area of heavy trading here. We've got our yellow 21-day EMA
I don't like that
coming
king
in
out
at
there.
about 55.70.
Oh.
So maybe a little bit above 55.
Be
55.50 or
beautiful.
so, 55.75 between those areas might be where you
To the
start
pot.
to see some resistance here. First, we've got to clear this 54 level here, though, our 63-day EMA. To the
Nice.
downside, as I said, similar to our last chart, a pretty clear line in the sand. This area just below 53. Beyond that, 52 stood out to me. Once again,
I should probably get out of this table.
a frequent stopping area for price.
Bought in
heading
for
into
2.5
our
million. We're at
breakout
14 now.
So this name not looking too hot as of late either, which I think could be attributed to some of the overall weakness in the markets, not necessarily a Cisco specific problem, but like you said, $28 billion
Apple?
lying around to me shows signs of a healthy company, all things considered. But
173, 30 square. I'm
Appreciate
thinking
the
a
breakdown
longer
on
should
both of these
rebound,
names.
but
We
right
can
just
cat our chart master. So
Bell
now in
Army
trading this
SL?
name, Alex, I mean,
Bell
today is sort of Cisco's heyday because we've never talked about this name so much, it feels like. But walk us through what you're thinking. Now we do have this acquisition, markets are pricing this in, feeling this out.
I mean, yeah, I mean,
maybe
you don't know if it's going to bounce until it starts to. Good bounce here. I think SPY wants to.
Debt to finance that. We'll get more details.
I'm looking at the SPY.
They do talk about how it
For
not
Apple,
impact
basically.
the dividend plans that impact share.
Oh, stop loss.
Repurchase.
Round but
So it
ready to
does go
sell.
show they feel
Army stop loss.
confident
At my stop
in the
loss.
situation for the company from an earnings standpoint to
You're
still go ahead
long.
and potentially do those things. All that being said,
You can go long
market's
here and
also been down the last
you have a
couple
stop
days,
for
so
like,
that's probably weighing
I don't know,
on some Cisco
173 or
shares too. Looked at a
below
bullish strategy,
171,
maybe leaning
like
into that
170.
overall weakness in the
You want that
market,
big of
you're
a
expecting
stop?
bounce, or maybe you're just optimistic that once Splunk, if acquired,
But I mean, you
is
have a head and
integrated
shoulders
as
there. It's basically at the
beneficial,
neckline.
could be starting to get priced in here
Oh.
in the near term. Went out to October, buying a
Have a pretty
52
tight stop.
strike, selling a 55, creating a call debit spread.
I think
$1.50 debit on a $3
doesn't look like it's
wide
going to do it
spread,
today.
one half the width of the
We
strike.
might fill this
Break
gap
even in
before
that
we
case.
test this low.
53.50, pretty close to the
After we
current
test
share
this low,
price
then
of
I think you could see a bounce on
53.16,
everything
$150
for a
in risk,
handle, potentially.
$150 in reward. Risk is below
inverse handle.
the long strike, that's 52. It's above the long
Oof.
or the short strike rather for the reward. That's 150 above 55. This hits the loose guidelines that we have, Jenny. Equal risk to reward.
11% on
1-1.
Cosmo. Kramer.
Even relatively close to the current share price. It is slightly below, but it's not always perfect. Again,
Kramer.
This is just loose guidelines.
And again, I have to imagine this name has seen such a heightened volume today and such heightened interest that a way to look at perhaps some upside movement in Cisco now with this deal already laid out for us. But that does it for this segment. Now, coming up next, we will look at some selling we are seeing in all things NEO. We'll discuss some of the weakness we've
NEO on
seen
their
over the
phones,
past
huh?
month in a lot of these Chinese
Sure, Ms.
names
Bress, I don't know if I
and
gave you
names,
much
but NEO
insight
with
there.
its own unusual story today. We'll discuss that more
But,
coming up
you
next.
know, head and shoulders on Neo. Bad neighbor get in the car? What? Okay, I saw another call there. I have over half of it out. Just kind of right near this resistance line. Okay, whoops. And Kramer takes dog bills? What the heck are you talking about? Oh, Kramer. I'm like, what are we talking about? Cosmo Kramer, yeah. Bad neighbor, get in the car. That's right, when he takes like, he's got that itch. Is it dog pills he takes? I haven't seen that episode very much. We watched an episode the other day that I haven't seen very much either. Forgot what it was. That's maybe what happened the first time. I have seen a lot, I just always forget. Oh, it was where, yeah, it was where the end where George goes to Cuba. Just like in the credits, the very end. I can't remember what the show was about, I just remember that part. Mucker's cough pills. This Kramer got away from me today. $151 order never fell. The double top didn't happen. Now we'll see if it makes the top up here. GME back up to view up. Down 3.5. Down 3.5. I forgot about this. Whoops.
Specifically with NIO vehicles, triggering functions like parking and locking the vehicle and picking up the user. Now, the NIO phone has more than 30 car-specific functions and will be initially sold in China starting on September 28th. So
a phone with car-specific functions. That's crazy.
In 3 different models, and it's expensive actually.
I guess that makes sense. All the tech that's in cars, it's probably some of it translates to a phone. Just have to make it smaller.
Obviously in U.S. dollars. But the CEO, founder, and chairman of NIO did say they believe many of their competitors will learn from their smartphone innovations, and he welcomes them to do so. The news does come also, which I think is equally as important to some of the pressure we're seeing today, after NIO did propose a $1 billion offering of its convertible senior notes that are due 2029 and 2030 earlier this week. NIO did say it plans to use some of the proceeds to repurchase existing debt securities. The remainder will be mainly used to further strengthen the company's balance sheet as well as for general corporate purposes. But I would say that right now the report does overall focus on the fact that NIO is spending a lot of time focusing on various ways to shore up its balance sheet, and it needs to be focusing more on strengthening its actual EV offerings to then be able to compete in this
straight flush out there.
growingly
Anybody?
competitive space. I mean, I would look at names like you said, Alex,
Wah,
from
wah.
a point of like, what can you do for me? This name is down 13% this year. Xpeng, well, it has pulled back, is still up 60%. Li Auto's up 87%. So to me, if you're looking at the Chinese EVs, it's like, what's going on with NIO? Why are you not able to at least hold on to your gains for the year like your two closest peers?
So here's what I don't get about this story. You read about it and it sort of seems like the selling point for this new potential smartphone is that it'll act as the key fob, it'll let you see your battery charge, control the radio, things like that. An app would have been easier. Just get an app. Like you can do this. Like, why do I need to buy the phone? And if the selling point of the phone is that it syncs up with the car, well, then I have to also want a NIO car. And so I just don't see I think there's just, I don't want to tell them how to run their company, but an app would have been easier in my mind.
Yeah, right. And I would say then, what's the functionality of the rest of the phone? I mean, because you have an EV maker who's a tech player, I guess you could say, but are they able to compete with the technology of companies that are purely into smartphones? I mean, that's what's confusing to me, because right now we are living in a time where our smartphones are the most intelligent and the most advanced they've ever been. So then how does a newcomer come in and just convince someone to trade out, say, their Android device in favor of a NIO phone? It's very, very strange.
Well, it would still be Android based, so the OS would be Android, so it's going to have some of that functionality, but maybe why would you choose it over Huawei or a Google phone or Samsung? You know, I don't know the Android world quite as well, but even over an iPhone. To me, the big thing here is
AMC down 3.5,
struggling.
and A is well down.
They might be trying to do cool things, and maybe that's where it started, is we have a cool car, and then we'll go from there. It was largely the ambition of a company like Tesla, but there was always a plan. Tesla's plan was start with the expensive car, make a slightly less expensive car, and then get your way down to where you have a scalable, lower priced model that can reach the masses. You didn't see smartphone in that trajectory for Tesla.
I mean, you did not, and even like
Tesla's not doing it doesn't mean it's not a good idea.
The idea of a smart vehicle, which
NIO's
has been like way
Chinese.
down the pipeline. We
It might be a huge market in China.
Apple also got worth $3 trillion.
I was just going to say, but Apple, very, very difficult to compare a name.
Totally different market that they're selling to.
NIO, because Apple has entered markets well and slowly, and that's why it's a $3 trillion company and the most profitable in the world. So this is confusing to me, and I think this is why, I mean, we're seeing selling today. That selling pressure has been significant
coming up
over
more
the course
here.
Of this year.
Glad I left.
Trading NIO is difficult because
On
it
the
tends
table.
to move with some pretty high conviction. It
Okay,
is
so we
down
get that
56% from its
whole
highs.
cup.
It's down just 18.5% this week alone. So given that selling we've seen over the last 4 trading sessions, walk us through how you're sort of thinking about this here, Alex, because as much as this name can move to the downside,
Got spades, got a lot of higher parity folds.
I mean, it just is so volatile in nature.
This stock that's carrying a single-digit price tag, and so oftentimes we've talked about that. Yeah, you can still go lower. You can go to
130.
0 in theory, but you got $8.70 or where is it trading at right now? $8.57. So you got $8.57 in potential downside. That's if the company went completely bust and went to 0. Or you can just look at recent price action. You don't even have to go to like the all-time highs, which are upwards of in the 60s. Just recently, this stock was worth $15.80. So just from like a math standpoint, you can look at it, and there's clearly, from a pot odds standpoint, a lot more upside possible. Doesn't mean it's ever going to happen. Might not even be the most likely of scenarios. But it can certainly go a lot higher than it can go lower, because it can only go $8.57 lower from here. So I looked at a strategy, and maybe it'll work, maybe it wouldn't. It's going to need some movement. It's going to need
Close another one of these
NIO,
calls.
and it's going to need in a hurry. But just buying a call, which is basically the most bullish thing you can do, looking for something to happen, but it's uncapped. With the stock beaten down this much, with this much volatility,
like these big wicks up
it can
here.
move a lot in a hurry. And so looking for a
Just
way
want to realize some
to
more
capitalize
gains.
on that if that movement happens to go to the upside. So going out to November, giving us a little bit of duration, about 2 months away. 7.5 call strike for $1.50 debit. The break even in that case would be $9. So this is also an important lesson, I think, too, when considering these strategies. You think bullish, you think buying call, you think speculative, probably, and rightly so. But this is not an out of the money call. There is some intrinsic value. If this stock were to just go sideways, yeah, it's below the break even, but it's not in its max loss territory. And I think that's critical because you need this stock to fall below 7.5.
What's up, Jay?
A good dollar below the current share price on an $8.50 stock.
Look at that.
To be
Look at that chip stack,
loss,
Jay.
which it's capped, and then it's unlimited upside. So if anything spurs some
I was with
optimism,
that 2.5 million buy-in.
this one could stand to return greatly if that move happens. That's always the critical piece, and that's the stress point, is if. You need movement.
And we didn't even really discuss the broader macro story that has been China. So perhaps if you're saying that situation will improve, perhaps more than what the street is pricing in, because regulatory concerns, weaker economic data, I mean, the list just goes on and on. The recovery being slower than anticipated. If you perhaps see a recovery in the
Good to see
Chinese
SPY
market
continue to hold VWAP, but look at those
that could
wicks
also
up
be
there.
definitely a tailwind for NEO shares. But that'll do it for our FOMO segment. Now, coming up next, we will talk the latest on the WGA strike as it may be nearing an end. Kevin Green will have more on that story for us coming up next.
Kind of an aggressive raise, but I want some people to fold too. Oh wow, here's a straight. Flush beats a straight though. Ooh. Slow play it now. I've definitely got the nuts. Unless if there possibly could be a straight flush out there. No, not yet. This guy's aggressive. Alright, I'll just call. Gotta put this guy all in. Hope he has a straight. Probably doesn't. Bluff, come on. Ah, he didn't even have the straight. Didn't have the straight, that's great. Didn't have enough chips to bluff. That was an awesome flop. And of course that turn was amazing. Cosmo 13%. Beautiful. Mullins up 5. Mimi's back to VWAP, still down 3.5. Jay, have you checked your barbecue holdings today? AMC is down 3.5. Look at those wicks on SPY. Oh, that's true. I had the 7. Good call. Good call. You want more barbecue or more GME? I'm selling one more. I'll leave the last one. Gotta leave one runner. Who raised there? Take a couple clubs. Oh, one more club, do it. All in. Checked it over. Interesting. He probably still has that ace. Or he's bluffing. Yeah, he's an ace. Spy back above VWAP. Yeah, GME, I mean, at a pretty good price. Looking at the last couple years. If it does get lower, it might not get much lower. Might only get to 15 bucks if it does. So yeah, not a bad average down or average up or whatever you're averaging. It's holding out to place, you stayed away. That's good. You needed ace to tell you that? No, there was an 8K on it, and so the stock price is reflecting it. Even though it's not necessarily bad, it's just basically what the judges said in court. Shares will be canceled on the 30th, which is a Saturday. That's part of the hype, though, I guess, because that's more likely for a merger acquisition. I don't know. Maybe. I above VWAP. Happy with my last runner. Minutes to 2. Yeah, if it becomes back available to buy, I'll pick up some barbecue. I've invested much too much time in the PP show not to own some at this point. Just for the memory of what happened. Okay. Interesting. Okay, I got it, buddy. Love ace. Hello, everybody.
They got that deal done. That's the power of the NFL. Kevin Green, appreciate it. Senior markets correspondent for the Schwab Network. Coming up next, under 30. It's VinFast. George Till's going to join us. We're going to talk about the EV maker.
I didn't really look at that. That was a bad call.
In both directions. We'll get the latest right after this.
Oh, nailed it. Hanging around above VWAP now. See if we complete that cup. Nothing wrong with GME. Nope. Nope. It is a pretty aggressive sell-off. But the market's pretty ugly too, so. The stock rejects resistance. Expected to sell off. Same way with respect to support, expect it to rally or bounce. I don't think there's anything necessarily more than that going on. Back down, Cosmo. Stupid date, they may really dip. Looking at the market, you might not have to wait till next earnings. I mean, GME's already in the 16s. So 1550's next. If that breaks 10, maybe double digits or single digits. That's if SPY is breaking below that 431. Filling this 419 gap. Ready. Good. Good. Started Discord? Congratulations. Is that why we haven't seen you around? Paid for new bot version of guys? What? New low there on AMC, down 3.8. Buy. Looks like it wants to flush below VWAP. But I don't know. Coming up on 2 o'clock. I gotta hold this last call. I have to. border declared emergency, so what, you couldn't get to and from work? You'd have to sneak across the border every day to go to work, and then sneak back across to get home.
For this Thursday. Coming up next, we have the Watch List today, hosted by Renita Young.
Nailed it. You know who else showed up today? Not just Ace. We had Donero. Donero showing up in chat in the morning. That's crazy. Trucks being rerouted? Dang. Why this closed border policy? This guy have? I don't want him to see anymore. See if I can bluff him off of it. Fake bluff. Is he? Oh man, he might have like pocket queens or something. Oh. You have 4 of a kind now? I don't know. Maybe he just has a jack like me. I'm gonna fold this, watch. I'm never even gonna get to know. He does have a jack. Oh dang, he had a higher full house. He had the queen in that. Interesting. Oh, sorry, Jay. I was like, what are you talking about? I didn't understand your question. Dang. At least he was the one that he wasn't the chip, you know, the bigger chipset stack. I can time it better this time. You're not ace recently? How true that is. I meant to bet the pot. Whoops. Oh, good thing I didn't. Like the diamonds. Ace is the place. 10? Oh, I'll take a 2 pair. Do it. Pocket kings. I didn't have you for that. Pretty aggressive. Ace out there. No, not right now, Ace. Just learning, practicing. I plan to at some point. Cosmo, 14 and a quarter. Dang, Cosmo. Aces plays. Nice. Why did you make a Discord? Or what's it, I guess, what's it for? What's it about? They ask you why. But I'm curious. Am I coming down here below VWAP now? Still holding this last call. Sure if I should be. There we go.
If we take a look at the dollar index, US dollar index is still higher. It's holding right now. And gold futures are down, though, more than 1%. Crude oil, however, up today, almost 0.5%. And then Bitcoin, we see falling 1%
Exodus.
so far for today.
It's like Exodus? What's Exodus?
The biggest stories in the markets. We'll welcome in Kevin Hinks of the Schwab Network. He is our senior equities contributor.
That's why you made your own?
Kevin, thanks for joining
I still
us.
don't get it.
Cisco Systems announced a big deal this morning, acquiring Splunk. Tell us the
Just wanted to,
latest on it.
You wanted to capitalize on everyone leaving his Discord?
Yeah, good morning, Renita, or hello, Renita. You know, this is a pretty big deal. Cisco is a kind of they acquire a lot of companies, but this is a $28 billion all-cash deal, about $157 a share, applauded, frankly, by both management teams on Splunk and on Cisco. So this looks like a deal. The stock is trading right around.
Not sure if we're gonna get that full cup.
A couple pennies below here, up $25 on the day. This is a story of, you know, Cisco, a mature
coming
tech
down.
company trying to enlarge their footprint, enlarge their overall product offering, acquiring Splunk. It's a deal that, like I said, both companies' management seems to be really in favor of. Everyone that's reporting on this seems to be very happy. So $28 billion, $157 a share, should close by the third quarter of 2024, and it won't hurt Cisco's dividend or their stock buyback program.
I see that it'll be cash flow positive. And this is the fourth acquisition that Cisco has made this year. They're trying to boost up their strength in the cybersecurity sector. But talk to us about Broadcom. Those shares have moved all over the place today after reports that Google's considering dropping Broadcom as its AI chip supplier. What do we know about it right now?
Yeah, this is a story that
Probably could have thrown him in our Discord.
Google has
could have had a channel just for him. Not quite sure how it works, but
denied some of this story, but it looks like
what do you have here?
Google is in discussions to
Jacks,
drop AV or
pushed it on the Ace River.
And their AI
a bluff,
chips
I guess.
for some in-house chips. Now, we've seen this from Apple. We've seen this from other companies. They want to make their own, you know, this is a big expense when you talk about some of these companies for Google Alphabet. So they're trying to make some of these chips in-house. Now,
it's really funny for him to fly there.
Percentage than it is now. It's only down about.
I just was kind of putting that together. I'm like, you had to get money together to fly?
But this is certainly not good news for Broadcom if it happens. But again, it's not been officially reported. It's just being more or less discussed in the news. But the stock, as you know, reacts to news as well.
Absolutely. The stock all over the place
that's
today.
true.
We know that it is on reports.
I've noticed.
Kevin Hinks, thank
I
you
listened to it some last night. He's got some
filling us in on what's
of
happening.
Pulte's maybe more wealthy crowd that have hung out in his chat now.
Now, Andrew, thank you so much for joining
13.5.
us. We saw
Kramer.
last week that headline inflation is accelerating, and then the Fed chose to pause rates yesterday. What was your biggest takeaway from Jerome Powell's comments after the decision?
Yes, thank you for having me. Well, I think there was no real surprise. I mean, the whole market knew they were holding rates. The question at hand is what will happen the rest of the year and when will they start to pull back? I think there's about a 50% chance priced into the market that there's one more left, 1.25% raise left. So that's a coin flip. That'll be very data dependent. The other question, which we're most attuned to or most curious about, is when will they start to pull back? Because there's such a reverberating effect with these interest rate hikes through the whole economy and debt world especially, that's where we're keeping our eye. It sounds like June 24 is really the time people are eyeing to start to see rates cut back. So that's really what we're taking away, is not much more on the upside. You're seeing a lot of data points that are suggesting inflation is slowing, although some contradictory data out there. But I think it's going to keep coming down. I think by mid next year, this time next year, we'll see some reprieve.
Andrew, you're right, because there is quite a few contradicting reports out there talking about this. We did see at one point the Fed Watch tool said it was a 60% probability that the rates would stay the same based on markets they're pricing that in. So tell us now, like, what is the thought behind the rates staying the same for the folks who are in that camp?
Yeah, so I mean, I think the thought at its core is pretty simple, which is take a breath, let these rates, which were some of the fastest in the history. I mean, we had 11 rate increases since last March. That's a lot of rate increases. So let's let them play through the market. Let's see how the market reacts. These things have a major lagging effect. I mean, I just got a new car this week, and my interest rate is not fun. It's cutting into my discretionable spending, and I have less money in my pocket because of it. That stuff will happen. That stuff will play itself through the market, we believe. Albeit retailers, the retail is
maybe Pulte's reaching
strong.
out to Ace because he sees how stupid investment barbecue is.
I personally think we're
He's
done,
trying to
and we're going to let this thing
protect him
just
before
simmer here for the next
he
bunch of
loses
months,
a lot of money
let things catch
and
up,
has a
and
lot
then
of
start to
people
get
wanting
back
his
to
head.
more of our terminal rate.
Okay, and when we look at this situation where many people are predicting a pause, an acceleration later on, how are investors positioning around this?
That's a great question. So defensively, I think there's a lot of defensive consumer staples. There's a lot of niche industries like semiconductors, things of that nature. We're big on the communication sector right now. We really like exposure there. At the end of the day, diversification. Right. I mean, that's the panacea, I think, when it comes to investing in all environments. There's overweights and underweights, of course, but if you don't have a nice, well-defined investment strategy with a well-diversified portfolio, you're liable to get pulled into any of this. And so we and me at our firm prefer to maintain a very nice, balanced, diversified approach so that you never get too crushed and you never get, I guess, too excited to some degree, but it's more of a predictable way to look at things.
Spy just rejecting VWAP again there.
Insulate yourself the best in this situation, get some stronger names, some bigger quality companies that can absorb what's ahead.
I get some more spades to fold. Might be tough. Or one spade.
2024, and that seems to be the consensus. If we
See who has two out there now.
And again, not a major hard landing. I think that soft
Nope,
landing
none of them do.
that the Fed's been talking about is very achievable.
You mentioned one sector, but how are you feeling
Up,
about
psych
the
you up.
utility sector right now as being
Come on.
like,
Come on.
not necessarily
Kumorn.
a hedge, but the traditionally, an area where people can
Just
maybe it is
Kumorn.
seen as a hedge by some. How are you feeling about that sector right now? Because it's had a few ups and downs lately as well.
Yeah, I think you could put, it's a great question. I think you could put some of that in the defensive category, right? Utilities will,
Yeah, I kind of want to close this last call.
They're your more conservative holdings in general.
I don't know. I kind of want to hold it though too. Yeah, I'll hold it. Whatever. Got plenty of time.
Looking into next year, I don't think it's bad
Let it
having
burn.
a little exposure there
Burn the theta.
whatsoever. I think it can provide you a little
Whoa.
reprieve if interest rates stay a little hot longer. The predictable big names that pay their dividends and people need them, right? I can assure you, you'll stop shopping before you stop turning on your lights.
That makes perfect sense. I mean, obviously, that's why people put utilities in their portfolios, But when we bring out this conversation again on another broad level, so early 2024, are you thinking that some sort of Fed action might happen as well? You did talk about around June in 2024, but what's the probability of early 2024 anything happening at all?
If anything, I could see maybe that 0.25% raise that we're talking about. I don't see a circumstance in the next 3 months, 4 months that we are lowering interest rates. I don't think Mr. Powell is going to move that quickly. I think he really wants to see this thing play itself out. I mean, he raised rates, again, so incredibly aggressively that he's got to see this thing through. He wants to make sure that he's broken through any inflation concerns. Because it'll be a big
13%
black
on
mark
Kramer.
in his record if he
AMC's down 4 now, 7.8.
has to reverse course again. So I think he's going to be very cautious in this thing.
Called.
He'd rather wait a couple extra months than move too soon. So I wouldn't anticipate much.
Okay. And we talked about how investors can position during this Fed action that's happening maybe in the next year, but how can investors position their portfolios for a potential recession in early 2024, which many are forecasting?
Yeah, so look, I'm not a big fan of timing the markets. I think you can take certain hedges and add them into your portfolio. I know we've used the hedged equity strategy, buy some downside,
This language?
on our clients' equity side.
Greenland?
Just to give a little extra downside protection. We're not ready to remove that
Pretty
from our
cool.
strategy, so we like
I want to make it bigger. I don't want
playing a little more defensive.
to block
defensive
everything else out.
sectors, like we were just talking about. You can, of course, increase your bond allocation.
I wish I could
Now it's
pop it
certainly
out,
not
but
a
I
bad
can't. 'Cause this
time
is
to be
like
buying new issue
kind of like
bonds.
an
So
emulator.
that's one way.
This is an
you can
app, I
certainly
think.
address protecting your portfolio. But I
I
wouldn't
don't.
rush
I can't like pop it out
change your allocation
unless you know
from
how.
if you're an 80-20 investor to
Like on
50-50 because
other like videos, I can right click
prospect
and
of a
do
recession.
picture in picture
Look at this
like
year.
this over here.
S&P's up double digits.
Which is a nice thing
Everyone
about
called a
Edge.
recession this year. If you sat on the sideline, you would have been a spectator to some good returns this year.
Absolutely true. Andrew Rosen of Diversified LLC, thank you so much for joining us.
Thanks for having me.
Of course. Now, the Fed wasn't the only central bank to pause hiking rates this week.
Did I have a straight last hand?
Find out how the Bank of England is choosing to pause and how that will impact the market here in the U.S. Stay with us on Schwab Network.
Eyes coming down here. Not sure what I'm holding this call for exactly. It's just time. Jeez, Kramer. Let's see. We had a couple. And ACB was a nice little swing trade on the shares. VFS would have been, but I didn't realize earnings was coming up. The heavy raise. So that should have been a nice gainer, but earnings hit my stop stop on that. Cosmo would have been a good one, but I couldn't get filled this morning. I didn't chase it. It was down like 2% this morning. I was trying to get filled. And it's up 14. All right, guy. Farm's doing all right. There's taking a couple hits. Some surprises out of left field. So had to roll some stuff, but the beauty of the farm, it's slowly usually gaining value. So every now and then you'll get a guy just trying to block me. Every now and then you'll get a big move because it's basically like selling insurance. So the insurance company slowly builds up their cash balance by selling premiums, and then every now and then there's a fire and they have to pay out. So yeah, couple weird things happened, but it's rebuilding. Still up significantly in the last couple months, and not doing much trading. I've been just day trading SPY, like pretty much exclusively. I folded a straight. Maybe I wasn't here, I wasn't paying attention. I don't know. Whoops. Excuse me. Alright, guy, what do you got? You probably have a bit better kicker with your ace. Yeah, king.
Up nearly 2% after Truist upgraded the company to buy from hold and raised its price target to
Maybe could have bluffed him out of that on the river. That flush that came out. I don't know.
Are about to improve once
That would have been a heavy bluff.
concludes. Shares of
These
Block are down
big
more
pre-flop.
than 3% today, hitting a 52-week low during the session as the stock continues to fall after Alyssa Henry, the CEO of the company's Square brand, announced she was leaving the company in October. Jack Dorsey, who is currently the Block head and chairperson, is expected to head up Square once Henry departs. And here's the latest move with Bitcoin. We can see Bitcoin futures still down around 1% of the day, not really deviating from that area as much. They were there right at the top.
Oh my gosh.
Find out where they are later.
Being expensive.
Right now we can take a look at the bigger picture, both here and abroad. And for that, let's
I gotta
welcome
call
in
it.
Jeffrey Kleintop, Chief Global
That's a
Investment
5.
Strategist at Charles Schwab. Jeff, thanks for joining us today. We saw the Bank of England and Swiss National Bank
Hello.
pause notes today. How does that impact the global market picture?
Yeah, it was a bit of a surprise.
That just
Both central
cut
banks
my
were expected
chipset in
to
half those last
continue
couple
to
hands.
hike rates, given that inflation is still very elevated, and there are lingering concerns about that. But with oil prices up and so many other factors here sustaining inflation at an above comfortable level for these central banks. But we've had such a weak
Joan is up
third
6.8.
quarter for economic growth. I guess you'd have to say outside the U.S. U.S. economic growth in the third quarter is okay, although seems to be on a much slower path for the fourth quarter.
Browser's
But if you
lagging.
look outside the U.S., the Q3 is nothing to get excited about. You've got major economies at best
I
flat
format this thing
economic
again?
growth in Q3. I'm talking about the U.K., Germany, Japan, and China's not doing that well either. That's 4 of the top 5 economies in the world. So while central banks now appear to be on pause, there's nothing to get excited about in terms of a revival of economic activity. In fact, quantitative tightening, meaning banks selling those bonds that they purchased under their QE programs in recent years, is continuing. So markets are beginning to realize that it's not just about the ultimate, we're finally at a pause in rate hikes. Tightening still continues by central banks in the form of selling off those bonds. And I put together a chart of just showing what the market has done versus the market really based on central bank balance sheets. And they're acting as a drag in the overall stock market, while AI stocks have pulled the market higher. And so if central banks stay hawkish, it's going to be harder and harder for U.S. stocks to post gains, particularly if the momentum in those AI stocks begins to fade.
Now, it's interesting you mentioned that. That was certainly my next question. Another one I have, though, is when we look at the Magnificent Seven stocks, how much are they skewing the S&P 500's performance right now?
Yeah, it's amazing. So the trend in monetary policy would suggest that markets would be lower right now, would have been trending lower this year, particularly given the weak global economic backdrop. But what we're seeing here is this incredible interest and momentum in those
I looked at this one the other day, actually.
To decouple for the first time in a decade from the trend
I
in
folded.
central bank activity and their balance sheets.
So been a nice one.
It's really interesting to see 7 stocks. It's not just true for the S&P 500. I could put the MSCI World Index on this chart. In fact, I just did on my Twitter just a few minutes ago, just to show you that the entire world stock market
everyone left, took all my chips and bailed.
7 stocks versus what we're seeing globally here with the trend to the downside. So I am a little concerned about this sort of bottom-up weakness that we're seeing beginning to
GME,
and affect
they
some
want
of
to break
those
above VWAP. SPY still coming down.
What longer-term effects could that happen? And by longer-term, I mean like by the end of this year. What could happen if we could continue to be led by these 7 stocks through the end of the year?
Yeah, who's to say where 7 individual stocks could go? What I'm finding, if I'm looking at asset classes broadly speaking, let's look at what the average stock is doing in the U.S. versus international, growth versus value. Surprisingly, the average international stock is outperforming the average U.S. stock. The average value stock is outperforming the average growth stock. Now, you wouldn't know that looking at the cap-weighted indices where, U.S. growth stocks are doing the best.
Up, Sam.
If you look at the average
this is
stock
from
in the
Powell
markets,
yesterday.
we are
Interest
seeing
rates.
outperformance by
Basically, higher rates for longer.
by a very wide margin this year, and huge
Well, he did
margins
pause
since October
this
of last year where the bear market
this
ended.
time.
And again, value outperforming growth. So this is something that I think we're increasingly seeing might become more
He made indication that higher rates are going to last longer.
see this slowing momentum in those AI stocks that have been really the driver of the U.S. and large cap growth indexes.
Good point there. Let's broaden this back out again. When we look at current GDP forecasts, what can we get from those current forecasts when we are trying to predict the Fed's
AMC down 4.6.
So every quarter, the OECD, that's the Organization for Economic Cooperation and Development, a big global think tank, they update their economic forecast for the world. It's pretty closely watched, not because it's necessarily accurate per se. They do as good a job as any, I guess. But in terms of their scope of looking at the entire world and whether they're upward revisions or downward revisions, it's just interesting to take a look. What I took away from the latest update was that GDP for most countries is expected to grow next year, even accelerate next year. That's the I put together a chart. The dark green on the chart shows the number of countries growing and accelerating out of the 45 that they track there. So if you look all the way at the end of the chart there, we're missing Slovenia, one other country.
I'm going to put them all in.
I can't remember off the top of my mind, so we're not quite at 45 yet in the total. But you're looking at mostly dark green. Again, that's growth and acceleration in 2024. The key here is the Fed and other central banks have never cut rates when this was the case in the past. When most global economies were growing and accelerating, they just don't seem to cut rates. There was one exception, 2007. But you can see all the green there. That was when the housing crisis began. So, I think even as the market's gone from pricing in 100 basis points of rate cuts to 65 basis points of cuts for 2024 by the Fed, that may still be too optimistic, Renita. It may take a lot more than that, a lot more global weakness to see the Fed and other central banks really begin to aggressively cut rates next year.
Okay. Another area I want to get your thoughts on is within OPEC. What's happening with the oil picture? Now, OPEC, obviously, it's not a central bank, but you're right that OPEC is acting like one. So what's your forecast for oil looking ahead to the winter months?
Can't even win.
Another higher for longer here, right? Just like central banks' interest rates.
Split it.
OPEC is restricting
Friday
oil
down another
output,
10.
and so prices are likely to remain higher for longer. I'd point out that this cutbacks in supply from OPEC started late last year. The average cutting cycle from OPEC has been 23 months in duration. So we may only be halfway through the period that
Liquor's
that
down
may
10.
be implementing these
Hey,
cuts.
look at
And
that.
that's really the issue here that's been supporting oil prices.
This actually might be a nice pickup still.
I think
Like that engulfing candle yesterday with that volume.
$100 on
Today's just
oil because that's
consolidation.
bring forth a lot more supply, a lot more alternatives that could work against OPEC's and Saudi Arabia's long-term goals. But in the near term, I don't see any reason why energy prices may come down very sharply, even though I just talked about the weak global growth environment, since now supply has been brought back in line with that. So one of the things I'm worried about is increasing weakness as we look to the third quarter earnings numbers. Maybe even this pre-announcement season, Renita, we hear more from companies that are very oil dependent. I'd note that American Airlines last week talked about missing their numbers or coming in a little light because of higher jet fuel prices. Spirit and Frontier said similar things. So we might be beginning to hear about this drag from higher oil prices beginning to affect not just the economy, but prospects for profits as well.
Absolutely, dragging right down the runways and into the pockets of consumers quickly as we end. What else should investors keep their eyes on as we move through the fall? Meteorological fall starts like tomorrow or the 23rd? So what should investors look for?
Yeah, well, there's a number of things. One would be an El Nino effect. I mean, I think that the El Nino really starts to kick in the fall through the winter this year, and that could have some supply chain disruptions. Already we're seeing the Panama Canal restricting the number of ships going through because of the drought that's in place there, and that could continue and even worsen. 40% of U.S.
I made it all the way back to the lows. Look at that, it's getting fleshy now.
Supply chain issues in addition to higher oil prices.
Holy smokes.
Inflation. But another thing that's higher for longer might be business bankruptcies. We're seeing more business failures.
New low of the day there on SPY. Wow.
Japan and France, just among others. They've been
Can't believe I was able to profit on this
climb,
this
on
crappy chop day.
Higher rates and weaker demand, and that could mean job growth softens here in the fourth quarter. Usually that's a lagging effect of higher bankruptcies. So that's something I'm looking for, not looking forward to, but looking for perhaps in the fourth quarter.
All right, we'll keep our eyes out for it too. Thank you so much, Jeffrey Kleintop of Charles Schwab. Now, coming up next, the CEO of American Oncology Network joins us before ringing the closing bell at the NASDAQ. And we'll ask about his company's recent
crazy day on SPY
and more when we come back.
I'm glad I took the profits I did, I guess. And it was from a pretty big hole, too. I should have just sold that last contract, though. This is crazy. Okay. 8-7? Let's do it. And he's out. AMC took a flush with that, down 5 1/4. I just right back in that shop. Just had a big range today. Big channel. Yeah, I don't need to hold this last call. Whatever. Got rid of it. It didn't have much value anymore. Oh well. Green of the day. Happy with that. From being quite red. We'll review the trades at like 3:30. New low there. Wow. I was saying we couldn't hit this gap today. I thought we were gonna have more recovery day, but we're right back in contention to fill this gap now. Not fill the gap, but retest that 431 support. Flashy. What? I got Cosm shares? That actually filled? No way. It filled. How did it fill? This whole time I've been complaining about not getting it. Ah. Word. I think I'm gonna sell some. Oh, yeah, I gotta sell some. Got 1,000, but I sell half. I can't believe I got the fill. That's awesome. Ah, it's still flushing there. Wow. Alright, then I'm gonna put a stop on the rest. I got my 151 fill. How did that even happen? I thought it just went up. 5. That's very bearish. Have a turnaround like that? Wow. I gotta look for an entry for puts. Out of trades. Maybe a lucky day, I guess so. When I put the order in, I don't. Let me look at when it filled. Filled at 10:04. What? I guess like shortly after I did it, it just gave me a fill. Doesn't even show any trades at 10:04. It goes from 10:03 to 10:06. Somewhere in there I got a fill. Alright, I sold half. I'll put a stop for the rest. Break even. That's awesome. No, I wasn't idle. Right here.
We're going to continue to do that. We see, as you mentioned, a very fragmented market with significant upside and significant opportunity. You know, in 5 years, we've accomplished a ton, but frankly, the next 5 years,
This is
we're
like
more excited about it. So as we look forward, whether it's
Buys looking like capitulation type day.
grow our network, whether it's the
I might just grab some puts
adding
anyways.
new services that are going to be complementary to what we do
There's some
today,
lottos.
the expansion of various services such as clinical research, data informatics are all going to be critical factors that are going to help Aon grow. And frankly, again, we're just at the tip of the iceberg today.
I don't know.
We're
I mean,
super excited about what the future holds for American oncology.
That's very weak.
Is that Aon's main focus over the next couple of years?
Yeah, our focus isn't, again, not going to deviate from where we've got today.
Glad I checked that account.
Continue to expand and continue to grow our footprint.
I was just going to look at my SPY puts.
Value-added services to our practices. That's priority one, and for our organization.
All right, Todd Schoenhertz, thank you so much for joining us, and congratulations again to you and the American Oncology Network team.
Thank you so much for having me.
Of course. Still ahead on the show, we have the second half, and we'll dive into the packaged food sector with the TD Cowen's analyst who just started covering this sector. He'll explain why food stocks are in the early stages of a cyclical downturn and give us a few companies he's betting on to outperform.
Wait for some pullback. Luck is opportunity met with preparation. Oh, it didn't close out of my VFS. Can't be lucky all the time. Be smart every day, though. Yeah, because it gapped down, I think. Gap past my stop. I should have known earnings. I'm closing the VFS. I should have looked into that. What? Not found in my account? I'm at the low of the day on this thing. Yeah, that's what luck is. Preparation met with opportunity. Saying it doesn't. What? I'm very confused. I can't sell. Oh wait, hold on. That's why. Gosh, Fidelity's so dumb. Not found? There's a little bouncy bounce on SPY. There, now I can sell it. Okay, I closed out of VFS. Cosmo 14, so I might add to Cosmo on a pullback potentially, but if it's too big of a pullback, I'm going to be getting stopped out, so probably just hold these shares and see if we can get a gap fill on it. Buy rallying there. I'm definitely out of that table now. Oh, yeah, that's right, already got the boot.
And it's been unrelenting for the most part here today. Again, still holding above 5%. Looking at the longer dated 30-year on the left side of the screen and the 10-year on the right, you can see it's not just the shorter end of the curve, which is normally more closely associated with the Fed. You've also got the 10-year.
Oh, look at that. Liquor's down
12.5%. Higher to new highs for the year, and really just continuing this trajectory we've been watching over the last couple of years. This goes back to the fall of 2020 here. We were down below 1% in the 10-year, and I just want to show you where we are now, and you can understand why investors are a little bit uneasy, a little bit unsettled by this recent move back to about 4.5%.
down 5 now.
And Renita, back to levels we haven't seen since October of 2007. So a significant move off these lows that we saw, again, off the pandemic.
All right, not capitulation today.
It looks like the end of a cycle.
SPY just showing us it's still in the range.
At what point do we run into or slow down at this trajectory that we've seen to the upside? But at this point, yeah, definitely weighing on the indices.
All right, we'll be looking at if we slow down. Ben Lichtenstein, thank you so much for joining us.
Lichtenstein.
Now let's move on to the packaged food sector. TD Cowen just initiated coverage in that space. And for more, we welcome in Rob Moscow. He's food and agribusiness analyst over at TD Cowen. Rob, thank you so much for joining us. Now, you say big food stocks are looking pretty cheap right now, but there's more to the story. Can you elaborate on that?
Sure. I guess I would describe this sector as cheap for a reason. You would think that these would provide a safe haven at a time like this when investors are concerned about interest rates and slowing growth. But the problem with the big food companies is they've raised prices too high on too many structurally challenged brands. And these stocks just don't work until they're able to get their sales to stop decelerating. What we're seeing right now is zero sales growth for these companies, and an unwillingness to provide price concessions to help the volumes improve. They're trying to get their margins to go higher. The retailers want volume, and this is setting up for a lot of conflict, I would argue.
When you look at zero sales growth, what do you think is contributing to that? I mean, is it the whole trade down effect? What's happening?
You know, we had a virtual conference with 6 different food companies, and I think we heard 6 different explanations for why the volume has been so weak. I won't bother going through all of them, but I think the biggest one is just elasticity of demand from consumers has ended up correcting sharper than people expected. It was really, really strong last year. It's really, really weak this year. I think what the food companies are hoping for is that when people get back to normal mobility patterns in the fall, kids go back to school, holidays start, that the volume patterns will come back to normal. But I think that's a lot to hope for, and instead, my tracking data shows that things will be worse in September than they were in August. So it's not the safe haven you would think.
Wow. We can't just roll over that. Now, why will things be worse in September than they were in August?
Well, I think it's because consumers are still tightening their belts.
Okay.
If you look at SNAP funding this year, it's down significantly from last year. If you take out all the funding and assume it all went to food, that would be a 3% headwind to volume. And there's also just a sentiment among consumers that they don't want to buy the incremental item of food and put it in the grocery basket.
Mm-hmm.
They don't want to shop brands that are off season, like you're not going to buy soup in the winter, you're not going to buy chocolate in the winter. So much more selective behavior compared to last year. I think that's what's driving it. And there's no pricing tailwind anymore.
Okay.
So once that goes away, you don't have much left for top line.
Makes sense. Speaking of chocolate, you like Mondelez. Why do you like Mondelez specifically of the 6 companies that you're covering in this space now?
Yeah, Mondelez helps you dodge a lot of these issues. 40% of Mondelez's sales are in developing markets, which have proven extraordinarily resilient to the slowdown that we're seeing here. And secondarily, this is a company that's invested very heavily in distribution growth in those markets. They're growing distribution 100 to 200 million points per year in China and India alone, and it's because they've given their sales force more technological capabilities. They've given customers more e-commerce capabilities to keep product on the shelves and go deeper into the interior of these countries.
Well, let's look at one more before we go. J.M. Smucker, it hit a 52-week low this week. In light of that Hostess acquisition, why do you have an outperform rating on that stock?
Yeah, this was definitely the most controversial of our calls, and I certainly thought that the bad news was baked in after the initial deal, so that's why I want to outperform. That's number one.
Okay.
But two other reasons. The company has improved its commercial model pre-acquisition to a degree that people don't appreciate. They are a much better vendor to Walmart than ever before. They've invested in data analytics and Salesforce coverage. Walmart is now 34% of their sales, and it's their biggest media partner, bigger than NBC, bigger than Google. That has enabled them to capitalize on Walmart's growth more so than any of their peers. And the second thing is, this is kind of a bet against GLPs, my outperform, because there's a lot of negative sentiment on what that will do to snack volumes like Hostess or Mondelez or Hershey. I'm going to take the other side of this. I think the penetration rate of GLPs for appetite control is going to be much lower than what people think. We've had a lot of help from the TD Cowen Pharma team to help us come up with very pragmatic numbers.
Okay. Now, one more place I want to ask about with the time we have left, Fresh Pet. I feel like the market for pet food has exploded in the past few years. Tell us why you guys haven't outperformed on that stock.
It's another out of consensus call. You're absolutely right that pet food demand has exploded. There's more pet ownership, and there's also more humanization of pets, meaning consumers are willing to pay up for premium offerings. Those premiumization trends have gotten softer this year because consumers are trading down within the dry category to more mainstream offerings. But what I like about Fresh Pet is it's a completely unique model. It's refrigerated, it's fresh, no other does it. We haven't seen any trading down evidence at all. Sales are up 28% over a year ago and have remained in that territory. So we think it's very resilient to trading down.
Very interesting. Thank you so much, Rob Moscow from TD Cowen. We appreciate your time.
Thank you.
Of course. Still ahead, we bring in our panel to discuss the latest housing data. Now, what does the continued high rate environment mean for home builders? We saw a couple report earnings between this week and last week. But we'll find out when we come back. Well, first, here's a look at today's leaders and laggards on the S&P 500.
All right. Nice bear flag on GME. AMC down 5 1/4. Kramer new high 16.5. Feels better now that I have exposure. See if it double tops up here though. Redfin down from the housing news? Why's Redfin down 11.3?
some time following this. We don't have any indication that they're going to fall significantly in any way. And so we're going to have to get comfortable with this high rate environment. 7% rates are not necessarily something that are behind us at this point.
All right. Well, that is interesting. And that is probably what a lot of people did not want to hear who are in the market for homes, but that's where we are right now. I mean, it's the reality. It's also the reality that they're not higher at the moment. But quick follow-up, what's your key takeaway from the most recent housing data prints that we've gotten? We saw overall housing starts down 11%, but permits up 6.9%. We know that there is a lag time between when these things actually hit the market, but what's your main takeaway from those pieces of data?
Yeah, so like you said, starts are down again, continuing this slump for new housing starts. But the permits increasing month over month, slightly, but still an increase, shows that maybe home builders are expecting in the future for things to turn around enough for them to be able to continue building at the levels we were, say, 2021, early 2022. What we are seeing right now is the backlog of the big boom in starts and permits that were pulled the past couple of years is making its way to the market now. So we've seen an increase in completions, those homes getting into the hands of buyers who are hungry for inventory at this point. And many home builders are in positions where they either need to or are able to offer incentives to buyers.
Jenny doesn't.
Things like lowering the closing costs that are necessary or buying down interest rates, things that really help to shift affordability in the favor of buyers who are looking for any opportunity to get into this market. So we're going to see a lot more focus from buyers, at least, looking towards new construction throughout the rest of this year and into next year.
I'm glad you brought that up because, Aaron, I have a question for you about that. I noticed that this week in KB Homes earnings and then last week with Lennar that the companies had heightened incentives for their home buyers. They also saw the average price of their home actually dropped. Is this actually a measure of them wanting to sell more, of demand being there, or is it a measure more so of the fact that the end of the year comes for home buyers or home builders in 2020 or at the end of November, and we want to end strong? Like, what's more of the picture for demand?
Well, it's both, and we're definitely seeing these large home builders pull demand away from the resale market. It's almost impossible for an individual selling their house on MLS to compete with the incentives that the large home buyers are offering. And I'll give an example. I also serve as an agent here in Florida, and I brought a client to a Lennar site just last week. She was shopping for a $700,000 house. Lennar builds ahead of time and sells pretty much completed homes. So it was readily available to move into within the next 30 to 60 days. They offered her $100,000 in incentives on a $700,000 house. So, I mean, it's incredible. It allowed her to buy down her rate from 7.37% national average to just about 6%. And that's why we continue to see strength in these home builders. And then, of course, they're just upping these incentives over the next 2 months to lock in a strong end to their fiscal year. And then we'll see how things shake out come January.
That's a good question. I wonder if it's just back to regular business then. But before we go, I want to ask you this question. How will a higher for longer environment with the interest rates affect the housing market in 2024? Are we looking for rates to fluctuate? I did ask a little bit of the same question, but I wanted to get your take.
Sure. So in the last 2 weeks,
Coming up
I
on Power
have
Hour.
seen interest in contracts really pick up. And I think this is due to a shift in mindset. Before, 6 months ago, people put the brakes on their home search. They got scared by 6% rates. Now, retrospect is 2020, and here we are in the mid-7s with the potential of going up into the 8s. So people are saying, oh, geez, I got to get something now. I've got to lock something in. Otherwise, I'm going to be even worse off. And of course, maybe a little bit regretful that they didn't make the move a few months ago, but housing is a necessity, and you want to get the best possible opportunity that you have today. So we're seeing some traction. I think that it's going to be a challenging market going forward, but there's still some interest.
All right. Definitely a challenging market indeed. We've definitely seen the data on that. Aaron Sykes of Net Seekers International and Nicole Bashout of Zillow. Ladies, thank you so much for joining me. That'll do it for the watch list. I'm Renita Young. Thanks for watching. Market on Close is next on Schwab Network.
What's your question there? Like you up? Possible that RC might. Jay, why don't you sell cash secured puts on GME? Hey, Dink. Ooh, Elsie has fallen off. Laser really been selling off also. Buying low of the day there. Down 1 1/4. Sending out an alert to the Theta Farm members. Average in today. Forgot to send it out earlier. They might get, what if they exercise? Well, that's what you want because you're buying shares. It's like buying shares for GME for cheaper. Instead of buying it at 16.86, you can buy it at like 15.5. Right now, though. Of course, if it gets 15.5, you're like, oh, I should have waited. We don't know. It's basically like a limit order. Think of it as that. I have to buy it again? No. I don't buy anything again. No, when you open up this trade, it takes the capital, it takes the money out of your account as if you bought the shares. You want 100 shares of $16. $1,600, right? So, take 1,600, or takes 1,600 out of your account, it holds it. And then you have this contract. But to do that trade, open up that contract, to sell that contract, you're receiving $60. You receive that $60. If by the time this expires it's over that price, you get your money back, your collateral, and the premium you receive, that $60, is the profit you made. However, if it goes down and expires below $16, you didn't buy the shares even for $16. You bought them for $15.40. All right. By 100, let me see. Yeah, $15.40. If you're calculating in the premium you received, you received 60 to do it. So you can just subtract 60 from this purchase price. That's how you can get shares for cheaper than the price they are right now. This is the way. Once you start doing it, you'll see the light. You'll never go back. And you still own the shares. It's not like you won't go back to owning shares. Own the shares, but that's the best way to enter a long position. That's how Warren Buffett does it. That's how all the greats do it. The more bullish you are, the closer to the strike, or at the money you'd sell. 16.5 or 17 strike even. If you think it's going to keep coming down, you could sell a little lower. 15 strike. Yeah, it brings your cost average way down. Cover calls the same way. I'll cover calls in your shares, but you don't need to do that. Definitely the cash secured puts. It's a bullish trade. So you're bullish on it because you're buying at this price, so might as well try and get it for even cheaper. And if you don't, you're at least gonna make money on it either way. Use GME as a platform to buy other shorted bankrupt companies like Blockbuster. Do I think it's possible? Sure. Yeah. I mean, that's been one of that idea has been around for years, actually. Once we learned about the seller boxing and all the zombie stocks, that's when they shut off that's what literally put barbecue right now into this expert market, was because we learned about all that and started buying up these zombie stocks that were sitting on OTC just being pumped for liquidity. These huge short positions weren't closing. So yeah, once we learned about all that idea started floating around. Actually, probably before that, and that kind of turned into that. RC tweeted Sears years ago. But yeah, sure, I think it's possible. I don't think he's like, his mission is to go after shorts though, necessarily. I don't know why people put that on him either. Like, he doesn't like short selling, but he's never like outwardly made it his mission to go after them. New low there on, no, not new low. SPY's coming down though. Cosm's coming back down to VWAP. No, yeah, I mean it is an interesting idea. Yeah, a lot of stuff you've heard about barbecue also is all regurgitated DD about GME from the last 3 years. It's literally the same thing. That was part of the red flags for me listening to it. It's like a new crop of young lambs that don't know they're gonna get slaughtered. A new corral. All the same stuff. Yeah, the notion was NFT platform, having a different stock exchange on the blockchain and having all these other companies, and GME was going to be the company for that. That's what G-America was. It was like a new stock exchange where there's a ledger and there's no, you know, that's where NFTs, even the whole thing, like there's no corruption potentially. How barbecue is involved with that, that was never the thought. Barbecue just latched onto that with GME and RC. It was one of the ones that was heavily shorted and part of the basket, so yeah, it was, but you know, Sears could just as much be, or Blockbuster, like you said, or Haas, or Sears has been closing orders only for years, since they entered the expert market, since they made the expert market, since we started buying it. Right? That hasn't changed. It was with me. I mean, it was just a dream and an idea, and it's not necessarily debunked. I mean, I don't know, maybe he's working on something. NFTs turned out to just be nothing really for now. They have a marketplace, but it wasn't a new stock market. It was just a marketplace to buy and sell pictures, which it has expanded some. They do music and games on there now, so yeah, it's not like it's necessarily debunked, but after time goes on, reality sets in a little more. Power hour, we did it.
Version of the S&P that has buoyed this market for a while. So with higher rates, if they're taking some of the risk premium out of those names, all things considered, this is not a catastrophic sell-off.
GME above VWAP.
Loss of momentum on the upside, and a realization, like you just mentioned, that when a 10-year goes up like this, when it gets to these levels, there's alternatives to being long stocks and the yields that stocks carry. And right now, that attractive alternative is
Look
the
at these
10-year
two
note.
red days on SPY. That's crazy.
You may be seeing some rotation out of stocks and into notes right now, especially the 10-year, the 30-year bond.
Does look like we're getting our bounce this week.
You're not seeing
I think we're gonna hit the bottom of this cup.
in the 2-year.
Maybe look for next week.
So this isn't a catastrophic move down. I mean, it's all 11 sectors of the S&P 500. Make no mistake, it's broad in that way, but not big percentages. It's real estate that's down, and it's a little bit of energy that's down, even though crude oil is relatively unchanged. So it's pretty balanced across the board. The other one I saw that was selling off big was it was real estate and it was consumer discretionary are having the weakest day in the S&P 500. Besides that, it's just a good old-fashioned sell-off. It can happen any single day, especially when you got a pretty, remember, the market is down, yields are higher, because what did Jerome Powell tell us yesterday? He said that the forecasts for unemployment are much lower than he thought, and the forecasts for GDP are higher than he thought. So all things considered, the reason stocks are down is because the U.S. economy is stronger than we thought it was.
Couple things that are also dragging. You mentioned the discretionary group, home builders after KBH, kind of taking it on the chin a little bit. So that certainly is disrupting one of the big bullish trades out there. And then Oracle, the market's not crazy about it, outlaying tens of billions of dollars for Splunk. I mean, it seems like it might make sense. Cisco down 4%. Seems like it might make sense for this company to do that. I feel like there's a lot of cloud merger potential in general, but it also might be a little reminder here
Flag it and flushy.
that if you have to buy your competition, and if that might happen a lot in the sector, arguably a bear case.
Well, I'll tell you what it is. For a mature company like Cisco, this is the only way they're going to grow is by acquiring
Look at this
small,
sell-off.
or in this case, $28 billion startups like Splunk. So, you see this, and I would expect. I think you're right, Oliver. I think I would expect more of this. If you target or watch startup AI firms, those are the ripe candidates. That's the low-hanging fruit for some of these firms that
have some more dreams. Figure something else out.
To spend to
Or just open up
re-accelerate
super
some
stock and
growth in their company.
look back like 2 years.
I'd be watching startup AI companies or
All the
smaller
theories.
companies
It's
that
literally
have
everything.
an AI focus. Those are the
You're
ones
hearing
that are
about
ripe to get
barbecue.
bought, Oliver.
All right. How about the home builders
But
thing?
they just
Give me a quick thought
put
on
barbecue
housing,
on
Kev,
instead of
'cause it's been
GME,
a really reliable part
which is what
of the
AMC
whole
did.
economy. Not enough new
All
homes
AMC
to
did
go
was just,
around.
oh yeah, look at
People
GME.
buying
It's the
up
same
home
thing.
builders hand over fist, one of the best sectors, and then KBA shows a
that
little
was the best.
slowdown, top line contraction. Prices for the houses too, as we know, came down, but it really feels like today is the first day in a
You're
long
low there
time
on SPY.
that investors have kind of lost faith in this key
Man,
group.
flipping calls to puts right here would have been
Reiterate my
amazing
theory on the
move.
home
It
builders.
was a much bigger
think
move than I got
since the
here.
2008-9 financial crisis, we are dreadfully behind in terms of housing inventory. Now, when you see interest rates spike like this, and in a short-term trade, that's going to affect the housing stocks, and it's going to affect all things real estate. That's why you see the real estate sector of the S&P down. But here's my theory, Oliver. When you see rates go up like this, people don't leave housing. They don't go away. They just form a queue, waiting for things to calm down and rates to either stabilize or decrease, and then they come rushing back in. Because the long-term fundamentals in housing is we are woefully short in terms of housing inventory.
Okay, yeah. Right now, seems like maybe it's run its course as a thesis for the stocks, but we'll find out. We'll test it over time. Because to your point, there have been a few moments where it looks like, okay, the home builder story's done, housing trade is over, and then it comes right back. So, don't write it off until it really has turned around technically. Appreciate it, Kevin.
Cosmo
Thanks very
bouncing
much.
back up.
We were going to talk a little FedEx too, which is the big winner on the day, but stocks are at the lows and they're sinking still and volatility is rising. So let's keep it going with that discussion. Russell Rhodes joins us from Kelley School of Business at IU, the Associate Clinical Professor. Hey, Russell, great to have you here. So Fed kind of mixed things up yesterday, or were investors just way out of line hoping for cuts?
Well, I think first off, I think investors were way out of line with their expectations as to what we were going to see yesterday, and I totally admit I was one of them. I paid a lot of attention to how the option market is forecasting what the one-day move expectation is on FOMC day. We basically in the S&P 500, the last two meetings, not the one yesterday, but the two previous, we were practically unchanged. So I think a lot of complacency had kind of set in. The press, we all like to talk about FOMC an awful lot, but I think most traders who are actually putting money to work weren't really expecting a large move. And we saw that as the one-day straddle priced 0.66% move in the S&P 500 and 0.91% in the NASDAQ 100. That's lower than the average daily move in 2023.
Yeah.
And it really comes on the heels of really muted, couple of muted FOMC meetings. And I guess we expected par for the course, but now we're seeing the whole market adjust as everyone thinks, there was this thinking that by summer we were going to start to see rate cuts. That seems to be being
of it by looking at the straddle, basically, because it gives us some kind of just mathematical logic here to follow, right? Because that's basically a function of cheap volatility low vol.
No, you guys aren't wrong. I mean, it's a good idea. It's not a quick thing, so maybe it's still being worked on. I don't know.
VIX moves up.
You can imagine how much time and effort and money and resources that'd take to actually
and I think the VIX,
play out.
VIX is always anticipatory as well as being reactionary. And I do believe some of the move that we're seeing in VIX today is more anticipatory. And the reason I say that is the whole curve is moving up in a parallel fashion, which means
I like that you share that dream with your wife. That's pretty cool.
We see the S&P 500 sell off and VIX will move up, but we won't get a corresponding move out of the futures, and we'll even go into backwardation. But what's going on right now is the whole curve is practically shifting in a parallel fashion, which means not only do we expect higher volatility in the near term, but out into early next year now, the volatility expectations are going up as well. So sometimes we get a sell-off and everybody will believe that's a knee-jerk reaction. Sometimes we get a sell-off and it's the beginning of maybe an adjustment in the overall equity markets, and it feels like the second one to me today. I'm not long or short, so I'm not talking my book, but
turning of the market, exactly.
The way and how it seems to be across all sectors. You guys were talking about discretionary and
this isn't a knee-jerk reaction. 2-day continuation.
The NASDAQ 100 down just about 40, not even 40 basis points more than the S&P 500 right now. If it were the NASDAQ 100 down 1% or more than the S&P 500, I would be saying that the weakness that we're seeing is a fear of a recession next year. The way we're getting this parallel move down, I think it's more of a fear of just a sluggish economy over the next few months.
And I like that perspective again. So to iterate the point about the vol curve beyond just the spot, you're not talking your book. I'll talk my newsletter for a sec, because 2 weeks ago I wrote that the odds of the hike by year end were about 40%. And basically my point was I expect that to go up closer to 50, and that vol probably rises with it. I mean, is it unreasonable to think that that VIX curve should just kind of shift in relation with odds of hikes?
Oh, absolutely. In fact, we're doing a research project at IU right now about what really does work when FOMC expectations change. And one of the things I got somebody working on is does the anticipatory part of VIX, and it's a reactionary anticipatory that drives VIX, but is the anticipatory part taking over a bit when there are FOMC expectations of some sort of change, or not a change when there was an expectation of a change. And they were, I think the market was pricing in, I think June of 2024, and now it looks like it's 50-50, even going all the way out to January of 2025.
Yeah, I like that. Good eyes. It keeps posted on the research too. We should definitely work that in when you guys find cool stuff in the markets.
I like that.
Hey, Russell, one other point here is you were talking about the differences between kind of index performance and the general breadth of it we're getting. We did get some pretty interesting small cap divergences over the last few months. They were kind of linked in with the bank story earlier this year, but I know you like to look at that spread versus the rest of the market. What are you seeing right now?
Well, I did some historical work on the spread between the S&P 500 and the Russell 2000, really because I just have no huge conviction whether to be long or short stocks, but I want equity exposure. And year to date, I think we're about 11.5%, 12% S&P outperforming the Russell 2000. When you've reached this time of year and the S&P is outperforming by 10% or more, in the fourth quarter, that gap has narrowed just about every observation going back to 2000, except for once. And the one time that it didn't narrow, it just widened out another 1% or 1.5%. So I'm real confident being short the S&P 500 and long the Russell 2000 going into the end of the year.
Love it. All right. So that's a pretty decent little sample. You got like 20 years and only one of them didn't work.
Yeah.
Not bad.
Yeah.
Right.
So and past performance and all that stuff, just to hedge.
Long the small caps.
All right, love it.
There you go, GME Mike's rally.
As well as the vol dissection. Really great stuff, Russell. Pleasure to have you.
Fantastic. Thanks for having me, Oliver.
Trying to score points.
Kelly School of Business. All right, nice conversation there.
All right, Jay. Thanks. Cheers. Bye, man.
On to the sell-off. Let's talk some stock shorts when we come back. Ben Axler gives us an update.
Thanks for your thumbs up, guys. About 40 minutes to close. Got 20 likes on the board.
Great year, and he's going against
Having a chat here with Psych about his Awesome marriage. Thumbs up for 39 minutes. Bubba, how your puts doing? Paper puts. Much easier to trade them when they're paper, huh? You don't have a hard time holding them, I guess. Setting up AMC Strangle 1 days.
Still at 97%, even after pulling back. And you say that the accounting for their things deserves some scrutiny.
Well, that's right. As you know, we're very forensic focused, and I think there's a lot of big issues with this company, and specifically, you know, we think there's a misunderstanding about what it is. They try to position themselves as a high-growth SaaS company, but they really have a hardware business attached to that. So these are devices that truckers or fleets would put in their vehicles, and these are vehicle telematics, and they might have a camera and track distance and, you know, log data about drivers, and they give away this device for free, okay? And they make the assumption that the useful life of this device and the customer contracts last for 5 years. But we actually got a hold of a bunch of their contracts, and 80% of them were for 3 years. And what that allows them to do basically is defer some of these expenses over 5 years when they should be over 3 years. And that, we believe, embellishes the EBITDA margins by well over 10%. So we have a real problem with how this company is positioning their margins.
How much do those deferred expenses, or what is it, like amortized expenses, I guess, so they come out to a smaller amount the more years they've got under the contract? That makes a major difference to their actual earnings at this point?
Absolutely, and it's a real expense that the company bears up front. Okay, and that, in addition to the amortization of the device expense, there's also the sales commissions, which they're stretching over 5 years. So when you add the two of these together, and if you were to factor in stock compensation, let's not forget every high-tech tech company has to have enormous stock comp. I mean, we think the EBITDA margins for this business are negative 50%. It's just an atrocious business at trading at 16 times revenues, the highest one that we can find. So we're absolutely short this company. And then, you know, there's also a tail risk here. You have to be very careful about what's in the devices, okay? The FCC chairman recently got up and said that Quectel, which is a Chinese wireless module maker, has a systemic national risk to security. And Samsara's clients are, you know, city governments, corporate customers. If there were a blacklisting of this Quectel wireless module, this would create an enormous headwind for their business. I mean, they might have to do recalls. This would certainly delay the sales cycle. So this is a tail risk that we don't think the market fully appreciates at the moment.
So this tech is in each of their devices. I mean, if you go to the website, you kind of see pretty clearly what you're talking about, the devices they sell into the vehicles and trucks, and that collects all the data and the video and stuff. They're using a component there that you think might actually get like a security blacklist from the government because it's Chinese made?
Absolutely. I mean, the FCC chair was just on record and called out Quectel in front of Congress. And you can go to the FCC's website and see the product teardown. There's absolutely Quectel modules in Samsara's devices. So this is an enormous tail risk that we don't think is incorporated into the valuation, which is a commanding
Nice,
16
Bubba.
times
Yeah, new
revenues.
low there.
And we also
I should have flipped up puts when I closed my calls.
From a different perspective, right? There's a plethora of vehicle telematics.
That would have been a nicer trade.
You know, mostly a number of years ago when this was.
Wow, almost 1.5 on SPY.
These businesses get acquired at 7 times revenues, not 16 times, and so there's tremendous
Ooh.
amount of.
We're getting close to that level.
Maybe expectation of a takeover
Getting
here.
close to the cup.
We just don't think is
That's
gonna
crazy.
materialize. And we would point out today, for example, you saw that Cisco acquired Splunk.
All right, I might.
Well, turns out the founders and
Not quite
managers
there.
of Samsara, their previous company was acquired from Cisco. So we think a near-term acquisition for this company is well off the table. I mean, Cisco's going to have to digest a $28 billion deal for Splunk. There's no way that they're going to also undertake a multi-billion-dollar acquisition of Samsara. So if there is an embedded
I can't believe I profited today with going along.
Interesting. And you think they would be looking for Cisco?
I mean, it would have
to
been
take out
awesome,
Target
much more
given,
awesome trade if we
company
made
leaders'
a cup.
previous relationships. I mean, does it have to be a Cisco or some?
I held that last call way too long.
No, we don't see a
Should have just cut it when he broke VWAP.
buyer,
That would have been
for this business, frankly. Certainly at
genius.
the valuation, and you know, look, they don't make money. This business
Blushing,
was
SPY,
founded,
down 1.5.
8 years ago. There's been no path to profitability. The recent cash
I might,
flow,
yeah, I
we
might
think,
close
is
some of my January
they've made, you know,
SPY
over $10
puts.
million of interest income,
Like probably just one
operational.
contract.
And then they issue an enormous amount of stock comp, right? And so
Very small
this
amount.
This company is highly dependent on perpetuating the perception that its stock has value to motivate those employees to juice the sales force, okay? And the cash flow, if they had to pay a portion of
Oddly,
that
some of them are
cash
not even really up.
this company would be
These 435s aren't even up. That's insane.
This is an early stage Andreessen Horowitz investment before the IPO, right? I don't know what they hold now.
How's that even
but,
possible?
They IPO'd
Only like 1
late
month of theta decay.
2021. We're pretty much back to that starting price. We reached out to the company, haven't heard anything from them. As far as the profitability goes, they did just show adjusted profit, so I know that doesn't really count in your mind. You're looking at the kind of core accounting, traditional profit metrics. Where did the growth come from on a year over year? Because they did just grow by like over 50% by my math. They added like 60 million onto, sorry, over 40%. They grew by like 43% year over year. Is that not coming from something sustainable?
Well, Oliver, you hit the nail on the head, okay? Because our biggest issue with this company is the
Nice order
transparency
guts.
is abysmal. Okay, they will not even disclose to you
Thoughts on tomorrow?
how many subscribers they have, how many connected
Well, if we complete this
devices they
cup,
have,
probably
what's the customer churn.
consolidation,
You're
bounce.
investing essentially in a black box. Now, their biggest private competitor, Geotab,
I don't know if the bounce is going to happen that soon, though. Probably just consolidation. Today's another continuation day, which is crazy.
companies in this sector that
We're due for a chop.
disclose net subscribers, they'll disclose churn.
I thought that was happening today, and it was, and then
Give basic
interesting to have this whole move happen basically in the afternoon.
itself can better understand the business. Otherwise, again, we feel like you're investing in a black box here at an industry-leading inflated multiple, and so we see nothing but downside here, at least 45%.
All right, well, you just got about another buck while we were talking there. Ben, let's get an update real fast before we let you go. The last conversation we had on water infrastructure, Xylem. What should we be looking for here? Something on the calendar to get an update on the business?
Yeah, so Xylem, I mean, we're still short it. It's an S&P 500 company. It's a very easy relative short. You can be short Xylem, you can be long the industrials as a hedge, or long the water sector. But fundamentally, I mean,
I'm not closing these Gen puts.
right? I mean, since we put out a report about a month ago, what happened? The CEO of Xylem left, which may or may not have been expected. But guess what? The
We're in
CFO
for
left
some
too. So now you
big
have
moves, though.
two large water companies that
This
came
really woke
together,
up the
that
market.
being Evoqua and Xylem, and now both sets of CEOs.
Probably some big
CFOs are
bounces
gone.
still,
So
too.
You're basically investing in a company with unproven management.
That gap's probably going to get
trying
filled on the
turn around
handle.
a behemoth of a company, okay? And who did they bring in to work on their supply chain operations? It was none other than an executive who came from Generac. And our followers might remember our call from Generac last year, and you'll see
Dude, this is
how
crazy.
that played out. We were the
Maybe even
only
getting
firm on the
calls
street
today
saying Generac was a
on
short.
this,
And that played
on
out
this
very
level.
well. They cut their guidance. The COO left, and now guess what? He's at Xylem. And we're not optimistic he's going to turn around Xylem's problems. I mean, Xylem is an old school industrial company spun out of ITT, which was a complex conglomerate, and we think they've done nothing but put through more and more restructuring charges. The cash flow's the weakest it's been. Inventory balances are high. And we're just expecting a major letdown here as we run into 2024. And I'll also leave you with one other carrot here. There's going to be a pretty seminal spin-off of Danaher's water business, Veralto, in the coming weeks or months. We think that's going to be a huge catalyst, and that a lot of the water and ESG funds are going to need to rebalance. And since Xylem's a big holding, we think that that's going to put pressure on Xylem as funds rebalance and buy Danaher's spinoff. So we're still short Xylem. We think it goes at least to the 70s, possibly to the high 50s.
All right. Well, it's already down about 10% since you put it on our radar last month. Appreciate the update. Thanks, Ben Axler.
Thank you for having me.
You got it. IoT as well. The latest target from the Spruce Point head there. And selling off today pretty bad. Down much more than the rest of the market after a big run. When we come back, let's balance it out with some bullish options trades. Tom's got activity to the upside in 3 different businesses: wrestling, Microsoft, and gambling.
Thanks for the invite, Guts. I'll be there. This is kind of interesting how far below the lower Bollinger Band we broke through today on the daily. I haven't really done that. Like, we'll probably wick by end of day, but still. Especially since it's been so flat and wasn't like... I was kind of expecting something like this today. This was yesterday, and then get some consolidation. If it does come down, it's going to be more like this. Waiting for it to everything to catch up, and then it can accelerate. But it just totally broke out of there. I mean, we haven't seen that on Bollinger on the daily. Like, that's crazy, actually. This day? Not even, though. Yeah, should be some good SPY volatility coming. Nice opportunities for some day trading. Big moves both ways. Big move today. Your friend's mom's book club. This is the way. So we get a little bounce there on SPY. I'm waiting on these puts. just surprised actually. One of them's not even quite green. It flipped green for a second. Let's see. I bought both of them on 8/21. Look at that. I bought them this day. One month ago exactly today. The SPY is 1.5% lower at least. Or sorry, like 1% lower, and they're just break even. So not too bad. Makes sense, I guess. This is why the average unit's good. Bought them this day. Had this big day, I'm all hyped. And then we had that rip. Okay, and that's what hedge is for. It's a good hedge. All my long plays are getting wrecked. And that is actually more than a hedge because it's making the account more green. Alright, time to review these trades. Alright. Viewing the SPY day trades. So I didn't have buys come into today as much as possible. But I did have some bullish bias, thinking that gap was there and we'd completed this cup. So maybe slightly bullish, but really didn't let it mess with me. Look at the 1 minute. Excuse me. All right. First trade was at 9:46. Bought 2 calls. 946 right here, bought 2 calls. Interesting choice there. Okay. 946? Yeah, 946. Do like arrows? Maybe I should do that. Directional B. Okay. I don't know. Well, I don't know what to do. Here we go. 10 o'clock. Bought another call. A couple stupid early trades. Okay. Actually, I bought 2 here, 1 here. Was averaging in. Sold the first one. It was just early. It was early. I was expecting a little cup. Yeah, this is actually, should have exited more. I was banking too much on the cup and it came up short. Should have closed out more there. Sold the first one at 1040. Yeah, what in the world? Is that real? Yes. Totally missed the top there. And being stubborn. So I had to wait for it to come back up, fortunately. But missed this proper top. I was actually green on those positions at this point. I remember it was slightly green. I'm like, man, I want more. I want the full cup. Yeah, I was scared. Scared of this one because I was like, well, what's going to happen? Oh, it's 38. There's 39, 40. Whoops. Alright, so actually I got a great exit on that. This would have been better, but should have sold some here. Didn't sell any. Sold 1 here. Another one here. Not bad. 44, yeah. Wait, is that down here? Yeah, I did. Another one down here. So I was slightly down at that point. Still had 1 left. Still had 1 call left. I sold 2, had 1 left. Bought another call. 1054 right here. So I had 1 left, averaged into it here. This might be, you can see I was still thinking we're bullish. I just like the risk reward to the upside, I think, today. Even though we sold off. Okay. So I was back to having 2 instead of 3. I just had 2. And then sold the 2 and bought puts at 1109. Right there. But yeah, I think I was I was fine with it being bearish, but I was trying to average down to basically get out of the trade. I was waiting for a rally to flip, which actually played out perfectly. So I flipped bought call, sold calls, bought another call, sold all of them and got puts. Flip to a bearish play. GME is above VWAP. What's SPY doing? Validating down there. Whoa. Should have locked it. Where's that one at? 1054? Yeah. Wait, that's 1054? Oh, that's where I bought the call. Where I had it. Not a great entry on that buy. 1054. Yeah, then it flipped to all of them here. Went to puts. I'll change that to red. These were calls. Change calls into puts. UPS puts, Apple calls, nice. So got 2 puts there. That was scary. Because it was also at the low. It wasn't like I was flipping at a high. I was like, eh, this seems pretty low. But at any rate, so then we're in puts. Just had 2 at that point. Got another put at 1121. Is right here. Whoa. 21. The put. No. 22. It's on this candle. Another put, so that wasn't bad. At least it was on a big green candle on a bounce. And then 1144. Closed them. Closed one. I think at this point I was realizing we're in a chop. I was profitable on it though. So I was just taking some profits. Because that was... No, that wasn't actually. Wait. No, that was taking a loss. Actually, I'm not sure because the other ones I flipped in one trade. It was a small loss from this entry. Wait a minute. These are buys, these are sells, so I should probably keep it like this. I should probably flip it. This long puts. This is closing the put. Right? Is that how I did it? I think so. Close. 1144. I know there's software to do this. E-Trade or Thinkorswim, I don't think it transfers over. I can try it. It'd be so much faster. It's kind of good for me to go through it though, just mentally, and to put it on the chart myself. I think maybe kind of helps. I don't know. Maybe. Yeah, because these are bought, these were sold. This bought? Oh, that, because this one was, I flipped. I bought and sold. That's why. Yeah, okay, I'll leave that up there. Bigger because I flipped the puts. Bought put, sold put. Okay, wait. What? 1121. Yeah, bought put. That's why it was a loss. That makes more sense now. 1144. I sold the rest. So yeah, I took a loss on that one. Yeah, that's where I was down pretty big. I think. No, this actually wasn't. using small contracts and pretty tight moves. So pop puts on that green candle, sold them up here. Yes, not good, not good. It was choppy though this morning, very choppy. 1158 bought puts. 358. Nailed it. So below, because I bought puts there. Right here. That was a nice entry. Bought 3. Bought a little more there. Later in the day too, so we're getting cheaper. I can start adding some scale because I have more conviction on the direction of what's going on. Sold one at 1205. That was that was for a small gain, 75 cents and 91 cents. Sold one at 1209. Imagine if I held these all day. Can't though, all that huge rally, I would have missed all my calls. That's crazy. That was for 92 cents, slightly better. Then sold the last one. Oh, sold the last two at 1209. So sold them both right here. Okay. Not bad. This was at the low. I see why I sold. That makes sense. This is breaking down there. This. See why I bought there. She got shaken out here in the chop. This was not a good exit. Oh well. 10 minutes Fugazi. Here we are. Where are we on here? 1209. 1211. Bought calls. This is that midday chop that I try and avoid. But shoe fits. Tie the laces. Back to calls. 1211. Bought 2. 1223. Yeah, this is when I start scaling to calls. Isn't that crazy? 1223. Bought 1. I was pretty committed at this point. $12.38. That red candle. Noise. Bought another 1. $12.41. Bought 1. $12.49. Bought another one. Yeah, at this point I was holding this level. I was kind of holding this level. And then the top range was coming down. So that's a kind of a bullish wedge. So I was early on it. Ideally you'd wait for the break, like right here. This break. But I was just trying to catch the bottom on it. So I was scaling in here as we continue to build the same level floor with the descending ceiling basically. 1249, 1258, bought another one. This is why this trade worked, because I kept buying them, kept averaging, so I had a pretty big position to make up for all the losses, which wasn't crazy before, but the losses I had prior. I put up yesterday for 6, sold today for 130, now 318. Yep. Yes, sir. This is, I mean, you're getting big moves on SPY. You can't always expect this. Like today could have literally just chopped in this range all day. Just eating you. So you just have to be prepared to that. That's where the risk management, just have the right risk management. If it's a chop day, you don't want to get caught. 1258. That was the last call I bought right there at 1258. Then I sold 2 at 115. Right there. Nice. Right near VWAP. So I had 7 at that point. So sold 2. Sold another at 124. Sold another at 129. At this point I was still thinking we're going to get the full cup, the full move up to the high of the day. Not this huge sell-off into close. I would have been more prepared with buying power. Let's see. Wait, 129 I mean. Yeah. 129. 138. Can I copy these? Oh. Make a template. Blue arrow. Can I paste it now? Template? Blue arrow. Alright, we're 28. No, 129 and then 138. Nope, didn't do anything. So it was a pretty small move, but I averaged in enough at a large enough position, and then 144 sold one. I wanted to have ones that could continue the move. It's tough when you sell out so much and then you just see the move continue on so much higher, as you were mentioning in chat. Guts. Sold one here, and then I was like, all right, I have to just keep one. And so I just sold my final one down here, 229, which was stupid. I should have, once it broke through up, I should have sold it. I waited till like broke low of the day. Yeah, down here. The last one right there. I didn't see a whole lot of entries into puts. It would have just been really. I mean, this would have been the entry right here. Broke low of day, confirmed a break, low of day, and then a bounce and a little head and shoulders. Retesting that break. That would have been the entry for puts. I didn't have. I don't know. I wasn't focused at that point. Yeah, so I missed this move. Downside. Oh well. Green on the day. Bought call. Sold calls. Bought calls. Averaged in. Sold them. And flipped to puts. So I actually bought puts here. Bought more puts here. Sold them here for a loss. Bought puts here. Sold them there for a loss. I think so. Yeah, a couple little losses on those. And then just started buying calls. Because when SPY won't let you make money on puts, you just buy a bunch of calls and it'll work. The SPY goes up always. And here we are. SPY is down 1.6. And there's the bell. GME down 2.9 on the day. AMC down 5.5. Not great, but maybe just consolidation on it. Cosmo, what'd you do? 15%. Nice. Wow, held up well. Hopefully I see some gap fill coming up. Pretty big gap down on SPY. That's your drop on SPY. Be there tomorrow. We're gonna make famous cauliflower crust. Interesting. Canadian bacon pie. Pizza pie with a ice cold red hook. Bollard bitter IPA. Cauliflower crust? I don't know about that. Wait for the break, you only get half the gains. That's true, but you get confirmation. I don't know what this is in reference to, Kitty Daddy, but I can chew gum. Nice, psych you up. Yeah, that's what we got. So amongst the adversity of the chop, I was green, which is really all I can ask for. So for that I am grateful. SPY made a pretty big move down today. Not sure if that's quite enough to call out a complete cup or inverse cup. Oh wow, SPY actually sold off in the close. It? Yeah, it did. Look at that. What? I thought I had a bounce. Oh, it didn't. Oh, so it maybe completed it right here. Yeah, it did. Okay. Wow, I should have sold some puts there. Wait, do I have 10 minutes? Can I still put SPY after, or is it just SPX? Let me see here. I can close SPY puts 15 minutes after close. I thought I could, but I feel like I've tried before and I wasn't able to. So I think I'm gonna close my, let's see. So we've completed that full inverse cup. I don't have to make a handle now, but I kind of expect to. So I'm gonna close these ones. I'm gonna close all these that are just slightly up. Mostly because I got such a bad entry. Which I didn't think was, no, it was a fine entry, it's just they've decayed. The ones that are up more, which are deeper in the money, I'll keep those. I'll ride those, and then I'll add more on a bounce, maybe for gap fill or whatever. Considering closing more. I'm selling off after hours, that's great. Theoretically, you want to sell the ones in the money first. And I'll sell these also. Okay. I wasn't planning on selling these this soon, but the long-term chart is, I mean, it's pretty obvious. We're hitting a support here, and we have a gap up there. I was planning on holding these till, I don't know. I guess it's almost October. That's crazy. Yeah, I guess this is just in case we do just chop in this range, given it's an election year. Taking some profits. I could just close all of them and just rebuy all of them. Profit's profit. Wasn't trying to do. I'm trying to trade these really though. I'll leave those on there. Let's see. Okay. Just closing out a couple of these Jan SPY puts, which I'll be back in. Usually I don't put my closing when I'm closing on Discord, but I just put that in there because I don't know, it's kind of a longer term, bigger hedge. I've got 2 minutes. Yeah, this account I definitely need to because it's heavy. I'm gonna close that one. Close this one. I'll leave the 440. Profit's profit. I know it's like, I'm thinking I want to the longer term trade, but yeah, it's like, kind of have to take the profit. But then I'm relying on myself to time the market good or better to get back in at a better price, which probably will in the next couple weeks. I'm assuming we'll have somewhat of a bounce. And this is kind of just in case we don't, I guess, keep selling off, but yeah, we could get stuck up in this range. There's still a gap up there too, which makes me want to sell all of them. And my Roth loaded with these two. Yeah, I'll sell these two. Oh, is it too late? Oh, I have until 4:15. Okay, cool. All right, my Roth's cleared out. Okay. Well, cup is completed. Look for some consolidating, some bouncing, some. Look at that volume. The last couple days just picking up too. I mean, it doesn't. We don't have to make a handle. We could literally just keep flushing. So that's why I'm keeping some. And then I'll wait for that flushing to end and a bounce to pick up some more, which would be a worse price than I'm selling for now. But yeah, that's just what I'm having to do. Just the way it is. So we'll see. I mean, this is two big days. I mean, this is crazy. 2 big days. That was 818 to, I mean, almost a month of gains erased in 2 days. So it can happen fast. Thanks, Christopher. Thanks, Psych You Up. Trying to cut out cards I never can. Yeah, no, I I assume that with the cauliflower breast. I have a wife and she's healthy. She's had me on keto without me even realizing. So yeah, we have cauliflower pastas and it can be all right. Thanks, Kitty. Thanks, Tasty. Thanks, guys. Appreciate it. Thanks for the dono, Bubba. Hopefully we can figure out how to get you a consistently profitable. Paper trading is definitely a good way to gain consistency. Are these all done? Oh, that's really nice. You have after hours on SPY options. Now we could get the bounce play here and go for some calls, but we could just chop around also. Yeah. Yep. Cool. All right. Thanks so much, guys. Appreciate the support. We brothers. Yeah, man. Our wives keeping us alive. I don't know why, but they're doing it. Even though we're screaming, crying tooth and nail. I don't like this healthy food. God bless them. Maybe married to sisters. Maybe. Thanks, guys. Have a good afternoon. We'll see you on Discord. See you on Twitter. Okay, peace out.